May 10th, 2023. We are going to be streaming stocks, options, futures, trading, live trading all day, looking at technical analysis. Watching, just had CPI come out, so SPY's ripping. I'm gonna get set up here and get you caught up. Get a little Yaz for our setup. I was gonna start this morning before so we could stream through CPI, but I didn't. But I did go along on the futures right about here. I wanted to confirm, it kind of gapped and then it kind of chilled, and I'm like, sometimes that initial first reaction is wrong. So, but yeah, I went for it. And yeah. You see SPY pre-market here is kind of right at right one of the resistance lines. Hasn't broken that yet. Yeah, jazz on a little bit. I think this could be a catalyst for us to see 420, 425 again, but just have to wait and see where it starts rejecting. We're getting up there. Next level up really is like major levels 416.20. That we'll see that today as we're already up 0.8%. We're at 415, but we'll see. Let's wait and see. Rip or rest in peace? Thanks. I could go either way on that. I'm right no matter what. Join. Thank you guys for your support on Twitter as well. Much appreciated. I know I'm not always tweeting. A lot of tweeting for my videos and streams, but we do Twitter Spaces at times, and I'll tweet on there at times also. kind of have to decide if I want to trade these futures today or just hold them. Problem if I hold them overnight is then it sweeps money from my individual account back to the futures account, which was the problem I was having before. Then I'm not able to use a margin on my individual account. And if barbecue say I want to buy in, I don't have any way for it, so considering maybe closing this. I think we could break and keep going. I'll close for now though. Holding through open, it usually isn't a good idea if you're already up quite a bit on futures. It usually goes the other direction, at least initially. So I closed those futures alongside. Not bad. It was 5 micros, so it's $500. It does look bullish here, but coming into market open. So barbecue, I don't know. I'm still learning how it's trading on OTC, and so I'm reducing risk more than maybe I would have. Yeah, it's still too low. Also because it's a company that's in Chapter 11 and essentially just completely liquidating, as well as the shareholders. But yeah, yesterday. Our first real drop. I guess we kind of saw that other day too, but it was much slower. Yesterday's was a real rejection on that resistance. Profit taking, but it bounced and recovered very well. So yeah, I mean we're in this uptrend. You see kind of a head and shoulders up here and this little bear flag. But after hours, let's see, it's up. We're up after hours. It's up 10%. So basically, back up here, I think where we opened, somewhere around here. So maybe just consolidating and not gonna get a better deal on it. Good morning, Tyler. Good morning, Dennis. Change the world. Changing your mind. Morning, Kitty. Jimmy 35, let's go. Yeah, Jimmy's ripping up with the SPY also. He's up like 1.5, I think. Oh, not quite anymore. Bull flag on SPY is awful tempting. I don't have to. I could open. I think with my margin, I could just open after 5, or 6 rather, after the futures market opens back up, and then it'll be fine on my margin, I believe. So CPI numbers, they came in slightly better than expectations. What was it? 4.9, I think. CPI comes in at 4.9 year over year with 5.0 expected. Month over month was 0.4. Expectations were 0.4. And then including food and energy, it came in right at consensus. Yeah, so close to expectations, slightly better. The fact that the market now just knows, has the data, and it doesn't have to be scared, would also help fuel some rally. 25 consecutive increases, year-over-year shelter CPI moved down from 8.2% in March, highest since 1982, 8.1% April. If the shelter inflation rate has finally peaked, this will have a big impact on overall CPI, as shelter represents more than 1/3 of the index. Calls for short sale ban have been growing. Yes, that happened in 2008 too, and I think that was part of the reason maybe Volkswagen's able to short squeeze, because I think they banned short selling in September, and literally Volkswagen squeezed in October. I believe somewhere around there. Also, I found out yesterday. Maybe you guys can, but let me know. I'm not able to short OTC stocks. So that could definitely have some effect on the stock. I'm sure funds and large entities, institutions still can, but retail can't. There's just one less short position that can be opened. So that would help with positive price pressure. They shut out some retail with longs, but I think they shut out probably more with shorts. So my brokerages I can go long on, I can't go short on. Ubo's gapping up. Ooh. Ripping into open. 7%. Had quite a move. It's up 100% from days ago. Our next target up here, 235. Ubo. Microvast is up 29%. Earnings, I think. Yeah, maybe. Upstart's up 38%. We had long positions on Upstart and Ubo. Just in the cash secured put realm. Crazy. Start Microvast. High on my pre-market rip list. Yeah, a lot of stuff's getting a pump this morning. US CPI has moved down from a peak of 9.1% last June to 4.9% in April. What's driving that decline? Lower rates of inflation in fuel, oil, gasoline, used cars, gas, utilities, medical care, apparel, new cars, food at home, electricity. Rates of inflation in transportation, food. There you go. Gas, utilities, used cars, gasoline, and fuel oil have pulled down the CPI a lot. Like transportation is higher. Food away from home, restaurants is higher. Belter is higher. Everything else is lower. Ooh, little breakout there. Let's see, we'll see what SPY does with it. Got like 15 minutes. 15 minutes to open. They bull flag, but again, I don't like necessarily holding it to open. U.S. government 1-year credit default swaps rise to 172 basis points from 163 on Tuesday. Volatility index hits over 1 week low, last down 1.2 point, 16.53. There's a new high on the SPY. Should have held. Fed swaps downgrade odds of a 1/4 point June rate hike. I think that was the push here, right here, because this was our CPI push, like 412, and then at like 8:45, had that crazy move with some velocity. I think that was the Fed swaps downgrading. Fed swaps downgrade odds of a 1/4 point June rate hike. That tweet came out at 8:40. Around there, looked it up. The dollar is down. Two-year, 10-year Treasury yield curve inversion narrows to minus 50 basis points. Barbecue sauce is at up 10%, so back up to where it basically opened yesterday. Hey Lord, say kitty. Max out my credit cards. This is the way. Here's pre-market on barbecue, guys. Yeah, still 10% up. Ever short is a future liar. Morning, Archer. I don't know where you're seeing 25% of passing cloud. Don't lick the stream tree. 20 mo. Lick it, just like it. Got 11 likes. Thanks, guys. Appreciate it. The early morning pre-market warriors. Trading view delayed, says 25. I don't even know if it hit 25% at all. So what that's showing you, that's yesterday's prices or something. I mean, this should be the German market should be active and accurate. There's a huge spread. That's probably what you're seeing. 1760 and 1940. Morning, IAB. Here's a little SPY flush. See what you're looking at. I'm seeing up 9% on Market Watch. Pre-market. We've got about 10 minutes to open. GME is holding up pretty nice there. I'm going to sell my calls at open. Jason got you done, Sarah. Ah, yes. No, I think we could have a rally continue. Now that CPI is done with, and it's post expectations, slight beat. So might hold GME for a bit. Hopefully get some pump with it. Yeah, Tree, I saw your DM. Oh, it's actually showing pre-market now. Nice. Didn't see it before. But yeah, that good earnings beat. I mean, it's really your call. What your plan was when you entered. The chart looked bullish, and now you have bullish earnings. I think this thing could keep going quite a bit. I would probably be patient on exiting myself. It was up at $2.14, kind of this resistance. Then I'd maybe think about it. But I mean, you could trim along the way, or it depends on your risk management. Depends on what your plan when you got into it. If you wanted 20%, then take 20%. I liked the chart when you mentioned it to me. I didn't want to play earnings though, so otherwise I would have gone long. But now that there's been earnings, I could go long, but I might wait for a pullback. Or I might not pay it at all. Good morning, SHF. Yeah, Upstart beat earnings pretty solidly. Almost 40%. U.S. wage growth has failed to keep pace with rising consumer prices for a record of 25 consecutive months. Climbing, it's getting back there. Here's where U.S. stacks on the global inflation rates. .9%. Venezuela 471%. Argentina 104. Turkey 14 or 43.7. Those are very high. Poland, Sweden, UK, Italy, Ireland, Italy, Finland, Ireland. China's at 0.7. Liars! Whoa, look at that dump on GME. Taiwan's 2.4, Switzerland's 2.6. I just flush a little bit. GME. Morning aware. Time for some yes. Yep, I gave her a little break. Morning rally. Buenos dias. You went all in? Well, that's never a good idea. So, I mean, one play is you can just, yeah, scaling out, take 25% off at open and then sell another 25% next week and just slowly scale out. Or depending on how much you're up, and just make it free, which is probably like 75%. You take out 75% and just let the rest ride for a while. But it looks good. I mean, you had a bullish looking chart into beat earnings expectations at near all-time lows. So I would be pretty slow on scaling out, basically. At the top, another wait for SPY 4 days in. We'll be looking for reaches 402, 404. Okay. You don't think we're going higher than this, huh? When do we expect the CPI numbers to be corrected? You mean corrected like back to what they used to be? Oh, you mean like that? We're all invited to a girls' pool party? All right, pre-market. We've got 3 minutes to go. Like we'll have a gap up of 10% on barbecue. Break this level, I'll probably go back long. Trying to be patient though, otherwise. Looks like a head and shoulders. Yeah, let's see. Yeah, a bit. Head, shoulder, shoulder. Be up here, so second shoulder. We'll see. Yeah, it's kind of a big level to break there, that 414. Might be a good short. Okay, we shouldn't be getting a bell. I don't think we should. Barbecue for life. All right, 2 minutes. 2 minutes. Santos is in custody in federal courthouse in Long Island. Spokesman for U.S. Attorney's Office for Eastern District of New York. Santos is a Republican representative charged with fraud, money laundering, theft of public lands, and false statement. Think bought some T-bills, eh? All right, 30 seconds. Barbecue's up 6.3, 1999. So basically where we open or closed at, minus that little flush at the end. SPY is opening up 0.73%. I didn't realize with IRA accounts, the settlement time is a long time, isn't it? Saw one of you guys say in chat, it's like 5 days. I don't know why it's longer than standard 2 days. I guess there's not a way I can like get margin on their have faster settlement. You guys have any idea? Yeah, open doors up 14. This thing is still going. Wow. What a move on these small caps. Upstart 34%, Microvast 28. Good earnings, barbecue. Up 7%. It's DC, haven't seen this one in a while. Up 9%, 10%. Barbecue at 20 cents. This is one of those gap days. Might not get a whole lot of action. All the moves have happened in extended hours. Buy moving back up here. 8.6. Go dump pre-market. I'll come into open. Barbecue 4.26% up, 1960. Staying below the levels from yesterday so far. See if head and shoulders or bear flag plays out. Or if it just consolidates and holds some levels. 1790, I guess. Be next support. That's the next pretty major support, actually. Even had it back here. So if that one breaks, though, gotta be looking for that gap fill. Upstart's kind of coming down. 1850, it's up 30%. Barbecue, 3%, 1936. Still green. That's 1790 support from. It actually kind of hit there yesterday. Got close. 18 cents or so. Our Guru's up 16%. They have earnings also. Yep. We'll pre-market. You're not getting nearly as much volume, so the spreads are way wider. So it just takes a couple transactions, and you're gonna have a huge price swing. So once the market opens, is really what you can see. Four or 5 days. Interesting. I've definitely traded on my IRA, but I don't remember it taking so long. Maybe it's with options. Options maybe have less settlement on there also. Are you in Europe, TJ? Or where are you? I don't know anywhere where you shouldn't be able to buy it. Barbecue, 19 cents, up 1%. Closed my Upstart cash grid puts. They're up like 89% or something. No reason to hold. Had until next Friday. Oh, options are the same, 2+1. Knox L 2+3. Thanks, Tom. Palantir. They had earnings too, right? They did. Theirs were yesterday. Break 10? I don't know. Definitely a big level. Big level for Palantir. Barbecue coming down a bit. Down 1.65 now at 1849. IBKR, I thought you could buy on there. Barbecue down 3%. It could be a gift from your broker, absolutely. SPY's coming down. Might be a good short up here. It is at pretty big resistance. Another shoulder from back over there if we're looking at head and shoulders. Little head and shoulders in the 5-minute there too. I guess I'm glad I got out of the longs. Whew. Barbecue 1850. Let's see if it holds this level here, 1790. DNA. You're in the US? E-Trade, TD Ameritrade, Fidelity. Any of those you can buy. Any major brokerage you should be able to buy it on. Buy OTC stocks. Yeah, that's a nice looking chart. Do you have earnings yet? After hours? Barbecue 1850 on 1.6%. Planter was definitely a runner back in the day. Palantir. Buy moving down. Tip in for sauce. Morning bourbon. Icon's earnings in 20 minutes? We could. Let's see. There you go. You guys decide. Should have grabbed a short. I almost did, but just kept going. Look at this. Breaking through that level too. Wow. Where's the SPY gonna settle? Yesterday's high? Really just sold off since open. Oh, and GME's trying to go up. If I was the top of its wave, I definitely want to sell my GME calls. Just giving back all of the CPI gains. Wow. Yeah, I think it's today. It said on people here. The DNA earnings. Yeah, so I'm assuming it's after hours. I don't see that it's reported yet. Ah, flushy. Whew. What's the next level I thought it might hold? It might, let's see. I take profits. I grabbed a short, started flushing. Just want a little taste of that barbecue sauce. You buy hype over? Barbecue? No. No way. Consolidated, it's chilling out. It's, you know, it hasn't had a catalyst. So it's made an incredible run. Just based on it trading on OTC, it looks like. But I mean, I'm not sure if it's over or not. Momentum is slowing down. Gotta find a level where it gets enough buying support that it starts going back up again after the profit taking has been exhausted. So that's I'm hoping how the market works there on OTC. Yeah, it's right at that level. It's not gonna go to 403 right now. Or is it? See a bounce coming back up to up. Yeah, I'm gonna close that short. Oh wait, I kind of chased it anyways. Wasn't a great entry. What's your guys' consensus on that? Got 78% saying yes. With the old icon. Yeah. And the way this flushed out of open, this is looking pretty fleshy. Barbecue settling down 1864. Down 0.85%. 1790 hold would be nice. Rolls Royce creeping up. Let's see. Do you guys have a link to the earnings call? I got it. Alright, well, listen, IP. This music's probably copyrighted. Why hanging out down here? Might be jumping back in. Yeah, look at that. Bear flagging. Take the bait. That was a flash flush? Dude, no one said flash flush. Can't make someone say something 5 times fast if they never said it in the first place. You're just making stuff up. Upstart, 31% holding. After you got my GME calls. Ugh. The chart still looks pretty good. Yeah, I mean, it still looks good. Guess I'll hold them. I don't like the market's gonna come down that much, so. Nvidia, sinkable. Nvidia brown. MU is up 1.4. Can't believe. Barbecue. Now it's a little bit green. 0.5% up. 1888. 1888 barbecue. That's all you gotta call. Yeah, I saw Ribbon had a little gap up, huh? Nice, yeah, 12%. I like the chart going into it, but that doesn't mean anything for earnings. IDX is this the other? So IDX didn't get any sympathy to that. Birds is up 6%. They have earnings or had it? Not yet. Oh, earnings call. What time is it at? 10? Yeah, 10. Why do they do it in the middle of the trading day? Like during hours, it seems weird. Sticking with stop limits. Trying not to be a fool. This one will probably close at 410.77. Thought we'd start to bounce here, but ended up just bear flagging. So more downs. Barbecue bounced a little bit there on that 9 moving average. Up 2%, 1920. 1920. After depth breaking 10. Showing some strength. Relative strength. Yeah, that's pretty good. SPY's coming down, so maybe mega caps are looking weak. But type ones are doing well. Upstart is Fubo. Fubo's down a little bit. Below $2. Yeah, $2 is a big one on it. Smile Direct. They had earnings. Holding 12%. Carvana, dude, this thing has just sustained rally. It's the other one. Open Door. Yeah, look at this. It's a big move on Open Door. Very weak. Very, very weak. Maybe GME will move up with the small caps and the hype ones, maybe? Oh. I got way too much on calls on GME. Every good day so good. Yeah. Put an order to close those. SPY still selling off. Up 0.2% now. Pretty big round trip. Barbecue 1925, positive 2.4%. Really just continuing from yesterday. I mean, that's basically what it looks like. Still in yesterday's trading range. How's our coin play doing? Coin's still up 2%. Nice call, Archer. Nice call. I think SoFi will hold over $5 by June OPEX. OXD. There's an OTC stock for you. 100% up from 0.0001 to 0.0002. Barbecue Souls, 1911. This line I have here. What's that from? What's back here? Looking like little head and shoulders here on GME. I don't like these daily candles either. All bodies, lack of conviction. Inverted hammer. Little doji. There's a green candle on Les Spy. And 300 just to experience RTC. Just to get a taste. And I'm about stopped out. My second short entry here. Yeah, I got stopped out. Or move back to VWAP and maybe grab some more. There you go, NVIDIA. That's the way to bull flag. I mean bear flag. Julian, do you not have a brokerage that you can paper trade? Yeah, I'm out of Fubo now also. That is neat. I bounce in there a bit. Ara's gonna have earnings. CTIC, what is this? Biotech. Well, has high IV. VX. NVX. Silicon Battery Company. Interesting. Okay, let's put on a little icon. Got 1.5 minutes. Dump on earnings and just been rebounding. Why is this on highest implied volatility? Scanner, it's not that high. I don't think the bar chart scanner works very well. It just pick at random. Oh, they're picking it. Yeah, it's just with the spreads. Barbecue, green candle, 266%, 1930. Still just hanging out in that range. See how punctual these guys are. Nice little guitar. All right, I'm listening for it. I just turned off your guys' audio. In the background, there. Come on.
Good morning and welcome to the ICANN Enterprises LP Q1 2023 earnings call with Jesse Lynn, General Counsel, David Willett, President and CEO, and Ted Papapostolou, Chief Financial Officer. I would now like to hand the call over to Jesse Lynn, who will read the opening statement.
Thank you, Operator. The Private Securities Litigation Reform Act of 1995 provides a safe harbor for forward-looking statements we make in this presentation, including statements regarding our future performance and plans for our businesses and potential acquisitions. Forward-looking statements may be identified by words such as expects, anticipates, intends, plans, believes, seeks, estimates, will, or words of similar meaning, and include but are not limited to statements about the expected future business and financial performance of ICON Enterprises LP and its subsidiaries. Actual events, results, and outcomes may differ materially from our expectations due to a variety of known and unknown risks, uncertainties, and other factors that are discussed in our filings with the Securities and Exchange Commission, including economic, competitive, legal, and other factors, including the severity, magnitude, and duration of the COVID-19 pandemic. Accordingly, there is no assurance that our expectations will be realized. We assume no obligation to update or revise any forward-looking statements should circumstances change, except as otherwise required by law. This presentation also includes certain non-GAAP financial measures. A reconciliation of such non-GAAP financial measures to the most directly comparable GAAP financial measures can be found in the back of this presentation. I'll now turn it over to David Willett, our Chief Executive Officer.
Thank you, Jesse. Good morning, and welcome to the first quarter 2023 ICON Enterprises earnings conference call. Joining me on today's call is Ted Papapostolou, our Chief Financial Officer. Together, we'll provide an overview of Q1 results and then be available for questions. Before we get into the results of the quarter, I need to address the short seller report released last week. After this call, we'll issue a response which addresses the mischaracterizations and concerns raised in this report. There are a few high-level points I'd like to address now, however. IEP has $1.9 billion of cash on hand and $4 billion of additional liquidity in the investment funds, and we're well positioned for future success. We have full confidence in the integrity of our presented financials and our reporting. 90% of our NAV valuations are comprised primarily of either mark-to-market securities or audited GAAP book values or external valuations. The remaining 10% are valued on a market comparable basis using historical EBITDA. Our dividend policy is based on our assessment of IEP's ability to return capital to unit holders over a long-term basis. We generate liquidity through operations, selling investments, and selling companies. Since 2017, the firm has generated over $5 billion of cash from successful sales of controlled companies. Our operating companies have been the subject of intense improvement efforts over the last year. Although not complete, we're pleased with the trajectory of the companies. We've upgraded and augmented many of our company's management teams, and we're starting to see tangible improvements in the results and overall performance of the companies. We have great confidence in their potential. On to first quarter results. Our results for Q1 2023 were down versus prior year, but they include a large one-time non-cash charge for the Auto Plus bankruptcy of $226 million. For quarter one, we had a loss of $270 million and adjusted EBITDA of $116 million, compared to net income of $323 million and adjusted EBITDA of $616 million for the 3 months ended March 31st, 2022. For quarter one 2023, our investment funds had a negative return of 4.1%, reflecting the volatility we're seeing in certain markets. CVI ended the quarter with continued strong performance, largely due to an $11.96 increase in quarter one crack spreads 2023 versus 2022, with flat volumes. CVI declared a dividend of 50 cents per share for quarter one 2023. CVR Partners, also called UAM, performed relatively flat in quarter one 2023 compared to prior year, largely due to decreased pricing for ammonia and UAM. For automotive services, revenue growth remained strong at over 5% for the first quarter compared to prior year. The team is aggressively working with our vendors to simplify our supply chain, reduce materials costs, and greatly reduce working capital. Contracts are in the process of being finalized, and we forecast continued improvements in the back half of 2023. Our indicative net asset value as of quarter end remained relatively flat at $5.6 billion as compared to December 31st, 2022. Indicative net asset value includes, among other things, changes in the fair value of certain subsidiaries which are not included in our GAAP earnings reported above. The IEP board declared a $2 quarterly distribution payable in cash or additional units. With that, let me turn it over to Ted for a detailed discussion of all of our segments.
Thank you, David. I will begin by reviewing our consolidated results and then highlight the performance of our operating segments and comment on the strength of our balance sheet. For Q1 23, we had net loss of $270 million and adjusted EBIT of $116 million compared to net income of $323 million and adjusted EBIT of $616 million for Q1 22. I will provide more detail regarding the performance of our individual segments. The investment funds had a negative return of 4.1% for the quarter, which was driven primarily by our short positions, offset in part by positive performance from 3 healthcare sector investments. For the quarter, long positions and other had positive performance attribution of 1.3 and 0.8%, respectively, while short positions had a negative performance attribution of 6.2%. The investment funds had a net short notional exposure of 38% at the end of Q1, compared to a net short notional exposure of 47% at year end. Our investment in the funds was approximately $4 billion as of quarter end. And now to our energy segment. In Q1 23, our energy segment reported net sales of $2.3 billion compared to $2.4 billion in the prior year quarter. Adjusted EBITDA was $229 million for Q1 23 compared to $142 million for Q1 22. Q1 23 refining margin per throughput barrel was $23.24 compared to $16.75 in the prior year quarter. This increase was primarily due to widening crack spreads. The cost of RINs continue to have a negative impact on our refining business with $39 million of related expense in the quarter. Q1 23 average realized gate prices for UAN decreased by 8% to $457 per ton, and ammonia decreased by 16% to $888 per ton when compared to the prior year quarter. And now to our automotive segment. Q1 23 adjusted EBITDA was $21 million, a $23 million improvement as compared to Q1 22. The service business contributed $6 million of the improvement, while the deconsolidation of Auto Plus contributed $17 million. Q1 23 net sales and other revenues for the auto segment were $457 million, a decrease of $106 million from prior year quarter. The decrease in revenues primarily due to the deconsolidation of Auto Plus. Automotive service revenues were up $16 million, and automotive part revenues were down $129 million. During the quarter, Auto Plus's carrying value was removed due to the bankruptcy. This resulted in a non-cash charge of $226 million, which was recorded within the holding company segment. Now to our real estate segment. Q1 23 net sales and other revenues decreased by $5 million compared to the prior year quarter. Adjusted EBITDA was $3 million for Q1 23 compared to $6 million for Q1 22. The decrease was primarily attributable to the sale of finished lots within the development business during 22, which was offset in part by an increase in leasing revenues during 23. The resort business was flat year over year. Subsequent to quarter end, we terminated a lease with a tenant for non-payment at a commercial high-rise property. we consider the termination, along with other facts and circumstances, a triggering event for potential impairment, and we will assess the impact during the second quarter. The property had a net book value of $218 million, of which 85 of that was land value. Any potential impairment cannot be estimated at this time. Now turning to our other segments. Q1 23 net sales and other revenues for all other operating segments were relatively flat as compared to the prior year quarter. This case's adjusted EBITDA improved by $4 million or 31% for Q1 23 as compared to the prior year quarter. The company improved manufacturing efficiencies compared to prior periods, and the team has done a great job managing costs. Home Fashion's adjusted EBITDA decreased by $1 million as compared to the prior year quarter. They continue to be negatively impacted by the retail business and particularly in e-commerce. The Pharma segment's adjusted EBITDA for Q1 23 improved by $1 million as compared to the prior year quarter. The management team is focused on the expansion of Qsymia in various territories. Now to our liquidity. We maintain ample liquidity at the holding company and at each of our operating subsidiaries to take advantage of attractive opportunities. We ended the quarter with cash equivalents, our investment in the funds, and revolver availability totaling approximately $6.9 billion. Our subsidiaries have approximately $740 million of cash and $305 million of undrawn credit facilities to enable them to take advantage of attractive opportunities. In summary, we continue to focus on building asset value and maintaining liquidity to enable us to capitalize on opportunities within and outside our existing operating segments. Thank you. Operator, can you please open up the call for questions?
Thank you. And to ask a question, simply press star 11 on your telephone to get in the queue. To remove your question, please press star 11 again. One moment while we compile the Q&A roster. Again, that is star 11 to get in the queue. One moment, please. Ladies and gentlemen, that is star 11 if you have a question.
Okay, apparently there are no questions. We thank you for your time. Do encourage you all to look for the report we're issuing in response to the short seller report. It should be issued approximately around 11 o'clock today. We look forward to talking to you on the next quarterly call. Take care.
And thank you for your participation, and you may now disconnect.
they didn't like my my name, maybe Lucille McGillicuddy. Yeah, it's hyped. Look, it's actually selling off after that earnings call. Barbecue is moving with supply and demand. Look at that. Earnings call hype and the drop. No, I'm just kidding. That's a tiny drop. SPY made quite the rebound there. Thanks for your gifted membership, Fire Marshal Bill. Appreciate it, man. Christine, you have been summoned. Christine, make your way to the front. You are needed. The chat. Come drop your like. Come give Fire Marshal Bill a high five. Don't hurt him though. We need those wrists strong for all the fires.
The ego on you.
Lurker no more. You have been released from your lurkerhood. Yeah, look at this bounce on SPY was dope. Got a little push on GME there. GME is above that level now, which is nice, but it's not the same I was thinking of when I opened these calls. The giver. There you go. Well done. Done. Busted. Let's move on SPY. It's like a little bull flag there on the 5-minute up above this support. Or if we'll get a retest. The average price for a house in the Hamptons just hit a record $3 million. That's pretty crazy for an average. UAE's Royal Group shorts US stocks on global recession fears. The entire stock market becomes somewhat untouchable if investors feel that the FDIC, Fed, or White House needs to intervene in the banking system. Coming down here, it's just above VWAP still. Putin signs annual decree about calling up military reservists for reservist training in 2023. Call up the reservists about reservist training. GME holding up there, 2.6. Barbecue still green, 1906, up 1.5%. Like more consolidation. Curious what comes of Thursday, Friday though. If it have a sell-off or a rip, or that gap's gonna get filled. Thinking it probably does. Still. But just one support at a time. Still have to see what happens at 1790, because it has held strong. But on the hourly, our MACD flip bearish. Have this red candle now under the 9 moving average. But I'm not even able to short it, even if I wanted. So, yeah. Have fun watching. Redfin's ripping up. Little earnings continuation here too. 70 is a pretty big resistance there. Direct Club. IGF is up 11%. Vitol 8.25. How's GNS doing? Down 4.3. Workhorse is a nice little bull flag. Just gotta wait for earnings though. Got cost base and left the profit work. Well done, Tree. It's a great strategy. Great strategy. Risk off. What other plays you guys looking at? You know, in chat. 5 flushing there. Silvergate's up 5%. A little inverted head and shoulders there on Silvergate. Looks interesting. Kind of like that one. How likely is Silvergate gonna stay afloat? Options are pretty liquid still. Bubla. Penbella. You looked at this one the other day. First split. This is one that's biotech, yeah, so you're kind of like I was telling someone else. It's more or less just catalyst on these stocks. Until they're like making money in a profitable business, you're not gonna doesn't have much value. Basically just running on fumes until they have something that gets approved. So unless if you're trying to play a upcoming catalyst date, sketchy. PayPal's still selling off. Wow. Not earnings. 440. 2017 levels on PayPal. Must have been pretty bad earnings. You're being up 11%. You guys better cheer up. You're gonna get the fire marshal on you. Some ECB officials start to think September rate hike may be needed. What? After CPI? Beat expectations? About 67% of millennials who want to own a home at some point in their lives have no money saved for down payment, and 18% less, or 18% have less than 10,000. I flushed back down to this level. Now it's bouncing again. 411.98. Pretty volatile morning. Stuck in a range. Don't know which way it's going to go. Archer Daniels is in with the deal with Bill. How is Bill doing? Is it still going? Yeah, that looks solid. Well done. With a nice bounce there. GME to 35. But wait. It seems like it's going to wake up at some point, but I don't know. Let's see, coin. Coin is still going. Nice call there. Al, you started to lose credibility with me for a little bit when you had all those crappy SPY calls. This is looking nice. Fly up 3%, hopping out a little bit. Mara, 9.5, 9.10. Wait, 9.3, I mean. Smile Direct 15, still going up on Smile Direct. Waiting on Wayfair's earnings. Never mind, they already had it. I was waiting on Upstart. That one was good. Barbecue 1920. It's up 2.13%. Right at VWAP. I bouncing a bit there. Off of that 50 moving average, or bounced earlier. Barbecue 1940, 3.5%. Open door still climbing up 22%. What happens at $3 on that? Next bid day is May 16th. That's at the court hearing Tuesday. I think so. Got some lines drawn in here. I can't remember what they're for though. I have the 18th for something. 1962, 4.3%. Could retest that 20 cents. 2039. Over here. Even from I'll move that down. Yeah, that got moved. There we go. Barbecue is just kind of still consolidating. 1930, it's up 2.6%. I don't know. Thinking the momentum to the upside has definitely slowed. And we'll see if it sells off some before it makes another move, or if we just consolidate and then rally up. I'd say a break of 1790 would confirm downside. Probably gap fill. And maybe a break of this 20 cents. Really that 23.36. Somewhere around there would that's a big level to break to the upside. Thing is, the difference between where we are here and a break up there is pretty significant. That's 20%. So as far as for trading, I don't know. Could say this 2015 break would be, that's not much of a level really. Just have a large range, 1790 I think to 23 cents. GME is still moving up, 3.2%, even without the SPY. So that's good. Contemplating not dumping my calls. Some stocks work backwards. What's this? Canada? Another biotech. Yeah, same deal. You got to look at their financials and see if, I mean, you can usually just look at the chart and see if it's a company people just want to own because they're making money. This looks like a catalyst, another just catalyst stock. So using TA on it's not a great, doesn't really work very well. You can get like PDUFA date run-ups if you don't want to hold through the catalyst. Sometimes you have continuations after they get something passed. Yeah. SLGG, missed opportunity. Those ever been said together? Don't see the missed opportunity here. We've traded SLGG. We have earnings coming up also, 5 days. Sir, this is a casino. This West, this is it. This is what's been anticipated. Exciting, right? Morning, Mohammed. Well, he's just chopping around here. Reached to 21, congrats all. I mean, it has been a big move, no matter what anyone says. Fortunately, it's not big to most people's cost basis, but yeah, like I was saying in yesterday's video, I'm wondering if the same sort of pattern is repeating, even though we're on OTC now. I don't think it is, but yeah, I'm at least hopeful that it's not this like 3-day run up and then drop. So far we haven't actually dropped. We haven't had like that spike and then big drop and just sell off. It's really just slowed down, which is more natural, I would say. Natural movement, natural behavior, going down. And then if it's bullish, it should just start picking back up again, not necessarily sell off. People want to buy it, don't want to sell. NRGB up 12%. Not a bad looking chart. I'm Batman. Yeah, coin is looking pretty good. I talked about SLGG. Coin's up 5. We could see if we get a gap fill on it. Came in good, yeah, close to expectations, slightly beat. Light beat. So the fact that we're not ripping, maybe bearish. It had everything it needed to. It didn't beat like by a lot, but it did beat, and we've basically just been met with sell pressure since the market's opened. So yeah, might be on a trend down, like Don was saying. Might be the top of the range. Keeps bouncing off this 50. Little head and shoulders maybe building there. Shoulder, shoulder, head. Got a bearish MACD, got a bear flag. I might grab a short here, especially if we get a bounce back to VWAP. I'll just grab him here. Whatever. Fed passes out high fives. Unique fabrication. Rest. Low selling price compliance notice? Catalyst on this thing. Line's coming down a little bit here. Barbecue still 1940 plus 3%. Me holding up pretty well here. Southwest is the worst airline in the US. How in the world did they beat out Spirit?
Come on down, put that.
Closures and grab me on Wendy's. I know, I don't. Maybe they're not including Spirit in that calculation. And I don't even fly much anymore, and there might even be one worse than Spirit. I don't know. Microvast still going 45%. In Lambo, you can go to the lot. Do it. 910, 45%, and still climbing. Start coming down a little bit. With Car Gurus, Direct up there, Carvana. I think this one's had a nice little move too. Yeah, that's a nice little move, like almost doubled. Melting down a bit. BBBYQ 1944, 3.4%. I don't think that's changed. Keep seeing it move, but nothing happens. Oil's down 1.5%. I'm melting down. Still have a gap down here, 411, 26. And low of the day on SPY, flush into the gap fill. 410.77 is next spot there. Gap has been filled. Financial cracks have fed concerns over commercial real estate's outlook. We're cautious on the sector, yet we go granular in our portfolio views. We see better value in real estate sectors that may see long-term demand, like industrial, said BlackRock. SPY is only up 0.1%. This might go from very green to red. Oh, you're welcome, Gerard. That is a country I've yet to visit, but next time to Europe, going there for sure. Went to the Alps in Austria, didn't make it to Switzerland. Went to Italy, went all around Switzerland. I'm melting down some more here, about to turn red. 0.02. Oh yeah, there's red. Green to red on SPY. Flushy, flushy. 410.83. Get some lower levels in here. Look at that, 410.76. I forgot if I want to try and take profits or holding. IP's getting hammered. Now that the earnings call's over. Yeah, geez, 20% down today. Nice, yeah, 30% move, well done. Is the dividend structure is a bit sketchy. I didn't realize that he's like he owns a majority by a long shot and just reinvests. I mean, that's pretty much a Ponzi scheme. SPY down 0.10%, 410. The news has come out, the catalyst has been triggered. I'll dump. Whew. Flushing through these levels. 410.31. Got 409.82 next. 410's a pretty big level though. We'll see if it bounces there at all. Yeah, getting a bit of a bounce there. Little bounce there. I didn't take profits. Four ten's a big level though, maybe I should. 8. I'll hold it, whatever. Missed the bottom pretty big, so I just hold. Look at GME though. Didn't really come down with the drop and ripping on the ups. What kind of relative strength you want for stop? SPY's back green. That's with that 410 level. Okadi tribe? Where's that? Oh, is that from Ace? Is that from Ace Ventura? UTII under $1? Maybe. Got quite the sell-off there too. Got that channel. I traded from here. I closed out, I don't know, somewhere around here. Started getting weak. But you can see it definitely broke out of that channel. Has a gap fill at 86 cents. So, possible. RSI is really low on the daily though. You can ride these futures. Ride them. Barbecue 1952. Positive 3.82. Close under 410 today would be pretty bearish. I think we might see under 410, but I don't know. Maybe we won't bounce out of it or bounce back up to it. How's GME holding up with this? Not great. And how in the world did you guys know?
It's not cheap, so it's definitely a worthy business because
You guys
everyone in some way
just
I
summoned
suppose,
her.
does need a mattress.
Yeah, all right. Okay, hey, a little M&A activity, always fun. Thanks for the update, Jenny Horn. All right, let's get our team in here and talk a little bit about the market so far this morning as we got a little bit of a fade underway. We ripped following inflation this morning of 4.9%. Seemed to inject a lot of optimism with rates diving and the dollar slipping. Stocks soared with the NASDAQ up higher than 1%, but now we've shaved it down to about 0.5%. I got Scott Durfee joining me from Salt Lake to kick things off here.
Oh, yeah, Horseman.
Well, you know, we've got a couple of things happening, right? We've had some Fed speak yesterday. We had John Williams on yesterday talking about some important stuff from the Fed. But, you know, Oliver, I think that, you know, when we get data like we got today from CPI, and we see this CPI data coming in, you know, maybe the best we've seen in quite some time, we're just not quite sure how to process that yet.
I should close on that wick,
the
maybe.
Markets, by and large, are just taking a look
Definitely holding
at,
support
maybe
there.
a brief pause as to how we're going to react to the things that are happening there, you know, with the numbers coming in better than, you know, we've seen in a long time. I think that there may be some expectation as to how the Fed's going to start moving forward with this now, with this information, that is. We also have, you know, and John Williams kind of made mention of this yesterday when he was speaking. He said that we could potentially, not could, he says he's anticipating a credit crunch from the bank sector. And so, you know, all of these things, even though we're getting good news, I mean, we
Hello,
have
everybody.
some uncertainty that's looming,
Hey,
and that uncertainty can sometimes drag on the markets more than the good news can drag it up. And I think that might be, you know, I don't think
we're going to a cocktail party on
Hilton
today.
We could,
Chicago.
but I think that what we're really seeing here is just more of a pause based on, you know, hey, let's wait and see. Let's make sure that we have our ducks in a row before we start making any definitive moves here.
Okay, yeah, I think that's a pretty fair point. We got George Tillis, I think, here to join us. Scott, hey, there he is, GT. So, I mean,
There's no way you can hit
number to be celebrated this morning?
Yeah, right.
I don't think so. I mean, if you look at the core number, it's still around 5.5%.
Are we in a bull market, Granite?
Follow the core factors. Headline inflation should go down because we're in that point in the seasonal aspects of energy prices, which are generally low, but they're going to probably
summon Jenny back
into the holiday at the end of this month and of course the summer. So that's something you have to keep in mind.
SPY consolidating down here at the low.
Look at other commodities.
Helps looking at the 1 minute.
Prices. In fact, in the last week, OJ, they're actually hitting some highs. That's going to manifest with some inflation, at least in consumer staples and foods and such. But I don't think this really changes the narrative around the Fed. I think the core inflation is sticky. That's where durable inflation is certainly going to be
always
passed
in a bull market. All right,
on a continuous basis looking forward. at around 5.5%, and 0.1%. I mean, it's meaningful, I guess, for a headline standpoint, but it's not necessarily meaningful to change the direction of the Fed.
Did you do
I think
it?
interest rates right now are not moving.
Oh,
and they
you're
shouldn't
really
necessarily move based upon the
shooting out the
CPI
shotgun.
numbers, which again,
Thank you,
could
Fire
move
Marshal
the
Bill.
needle
Appreciate your
too
memberships,
much,
man.
lower than expected.
We'll see who you get.
But at the same time,
Bullions, here's your chance. If
exactly
you
what,
haven't
Scott
clicked
brought
on it,
up, I think the
click on a
credit
membership.
aspects of what's going on
Be a
in the banking
member.
sector,
You
I think
maybe
the
haven't
caution,
allowed
around credit right now is
membership
what we have to be
gifting on this
concerned
channel.
with,
That
but
has to
at
be
the same
allowed.
time, you have to think about the Fed. This is
The
maybe what they
eagle is
want.
not
They
on
want
you.
credit to be tight. They want less lending going on. They want
Control
the
your
economy to
boat.
slow. And of course, they
Such
want
a lurker
inflation
name.
down.
Maybe even a
Unfortunately,
bot.
it's just not going to move down as fast.
You've been
probably,
summoned
as
to
it moved
chat.
up.
Okay.
Come
So,
thank Papa Ace.
If we're slowing down the rate of change to the upside, it's I saw some people.
You guys aren't members yet.
Food is flat.
Fire Marshal Bill
that's
has
great. That's not
gifted
going up,
memberships.
But it already did a lot. So
Click on the
flat at this
box.
point still means prices are very
Click allow
elevated.
gifting
Feels like that's
on this
where
channel.
Our line between
And then
strength
jump on
and
Discord
weakness in
and
the economy is
send me a
kind of
DM. I'll
graying
give you the
and
happy
thin,
crew
Scott,
roll.
because even if
All Reddit,
slowdown
give it a
is not
thumbs up.
extreme,
I appreciate you guys'
with
likes.
prices where they are, any slowdown in
We're at
consumer
30 on the day.
strength is
Watching the market
kind of has leverage
away.
built on it because of inflation.
Yeah, there's no question, and you bring up a great point.
Or free memberships for whoever wants it.
The inflation that you're seeing on food.
Hey, Aware.
Here's the problem with that.
Hey, Trader.
I go to restaurants in the same restaurant for lunch that I would spend, maybe $8 or $9 for a lunch. I'm spending
Lords isn't a
$16
member.
for a lunch roughly now, roughly. And
Aware,
the
you're not a
problem that
member.
you have is when we see things maybe start to claw back.
Cameron, congratulations.
Are we going to see that in food? I don't know.
You have to click on it and then click accept
especially when you're talking
or allow.
Restaurants, not the in-home food and stuff like that, but the restaurants, your
your
big chain or your small chain,
YouTube account's not linked to a Google account, it might not work.
Those prices, that's the
I have to
concern
do that, I'm not sure.
I have, and I think that many other consumers have as well while we're looking at that. So, this is a problem that, we're facing now. We're going to, again, have to wait and see how we can wade through this. But the Fed's going to have, have their hands full in making sure, and I agree with George. I think that this is what they're looking for in terms of credit crunch.
The ego
when
on
we see
you.
this kind of inflation in areas like this, I hope, but I'm not super confident that will eventually claw back.
Giving algorithm is racist.
Okay, will be fascinating to see if we can hold on to the optimism here going into the second half.
Then you have to type after doing allow. Oh, it's for people that are typing in chat.
Appreciate your thoughts,
Cameron,
guys.
you're so
Good context,
wise.
George and Scott.
Report or block. No,
Okay,
don't do
thank
it.
you for joining MTL. I'll see you this afternoon. Market on close. Trading 360 with Nicole Petalides is up.
Bullions, you got him.
Underway here.
Your shotgun spray / sniper nailed the bullions. Bullseye, I'd say. Thanks, Ace. Appreciate it, man. Got bullions, new member. Well done. I like granite. Should be at the top of the chat. You might have to X out of the chat and then hit join. Under there it might say allow. Fine, I can give bullions a happy crew roll in Discord. You can come jump on our come jump in voice if you want, bullions. Watching the SPY here, seeing if we break to the upside here. 411 or 410. Looking a little squeezy.
The ego on you.
Oh, I should take profits next time we test down here. If I have that chance. A werewolf, you got the gifted membership. Well done. Look if we're gonna retrace here. Really amazing. Absolutely. GME popping on that? Oh, GME sold off heavy. What the heck with all that volume? I think I'm still stuck on my calls too. Calls wicks in the 5-minute. Okay, I'm hopping out of the shorts, taking profits on it.
The eagle on you.
Reload somewhere. The eagle on you. All those green things. Yeah, all these wicks down here. I think that's a bullish sign. At a support especially. But sometimes I've seen that where it's a continuation. Oh well. Made a little bit on it. Whatever. Weiler. You've been summoned to chat. People that are getting them now, they're not even lurkers. Come thank Papa Ace for your new membership. Do it. Yeah, that was a weird volume flush on GME there. Your chart, one big green candle.
For a look at some of the top moving stocks today, I'm joined by Jenny Horn, markets correspondent here on the TD Ameritrade Network. Airbnb having a little bit of trouble here today. Tell us about the earnings and what stood out to you.
Right, Nicole, it seemed like all the street really cared about was all things guidance, as guidance did come in softer than expected. But in terms of their first quarter, they did see a pretty nice beat on both top and bottom line. So I think this goes to show the theme we have seen with earnings season, and that's that you have to give strong outlook now for the remainder of 2023. They did see first quarter earnings that beat analysts' forecasts with a profit of $117 million. However, the company did warn that its average daily rates are seen falling slightly now in the second quarter compared to the year prior, and nights booked would be rising more slowly than their revenue growth. Revenue was up 20% year over year. Gross booking values was up 19% year over year. The nights and experiences booked also climbed almost 19% year over year, while the company's current backlog of nights is approximately 25% higher than it was a year ago.
Barbecue's on intermission right now. 1940 at
$10.6 billion
plus
in
3.19%.
and now expects their second quarter revenue to fall between about 2.35 and 2.45 billion versus estimates of 2.42 billion. So not even that disappointing, but all in all, the fact that they weren't able to give a strong conviction now into these really pivotal spring and summer months, I think is a bit of a concern. They did also authorize a new share repurchase authorization of up to 2.5 billion. So first looking at these numbers, it was really difficult to find what the street didn't like, but I just think the fact that in this travel environment, it seems like the street is punishing names that aren't able to really have strong conviction in their outlook. And that seems to be the theme of Airbnb today, with shares selling off on the session.
All right, thank you for that. And then we'll turn the arrow around and look at a name like Roblox, which is gaining 5% today.
Roblox, which initially off the report was slightly lower pre-market, now we are seeing this rally hold on the session. So it appears there were more things to look forward to in Roblox's report, although objectively there were still holes here. So they did report their first quarter adjusted earnings, or losses actually, that were steeper than expected, fell 63% year over year. Revenue did increase to $655 million, rising from year ago levels, while bookings rose to about $774 million, higher than they had been expecting, at least the street analysts. Now, we saw average bookings per daily active user come in around 1170, which was flat compared to year-ago levels, and users spent about 14.5 billion hours engaged on Roblox's platform, which was up 23% from the year prior. The CFO said they are now generating these high rates of year-over-year bookings growth, so they can now moderate the rate of investment in their headcount and infrastructure, therefore generating some operating leverage. They also expect some of these bookings that are processed now through credit cards and prepaid
OTC
cards,
pharmaceutical,
which have a positive impact on their margins. So I think the fact that Roblox is showing signs of a more mature company able to generate cash in a more efficient manner. Is there a way to pin this to the top?
Well, I looked it up, but it looked like it was just third-party software that would allow you to do that in Windows. I figured Windows had a way to do that, or even actually maybe the Chrome extensions. I didn't look at that.
And up 74% from their 52-week low. So even though
Chrome itself doesn't.
Near our all-time highs, not even close, we are seeing a nice recovery, at least on a year-to-date basis here in Roblox.
Yeah, without a doubt. I mean, the teenagers love it. So there must be something behind the madness there. All right, Jenny Horn, thank you, markets correspondent. Appreciate it. Let's get some insights in the news shaping the markets. For that, we welcome in Hugh Roberts.
Not reading Molly Pool, playing Roblox.
IQ at Quant Insights. Thank you for being here, Hugh. So at this point,
by 11:30,
we got in
by
our
EU
CPI
close.
Print while it was new cars, used cars. One went up, one went down, right? Used cars went higher. Shelter still higher, but at a slower pace.
Prosecutors
so
seek financial information.
What was your takeaway?
Well, prosecutors.
Yeah, I think that's a very fair summary. Like a lot of these things, it can sometimes be all things to all men. You know, there's something in there that's for the doves and something that's in there for the hawks. I kind of feel actually looking at the market's reaction, and in fact, even before we got the number, if you look at the implied vol on the equity market around today's data print,
I can't see that stock.
The FX market, the CPI number had arguably become more important than payrolls for the last 6 months plus. But going into today's event risk, the volatility market was telling you that the moves wouldn't be as big. So I think if you align that with the bigger picture, which is basically that, yes, we get another CPI report. So that's more data for the Fed to consider before they meet again. And the fact that really, I think, although the language was they've just left the door open for a pause in June, I think the market's taken that pretty much as a done deal, that we won't get any additional rate hike in June. So I think really the battle's moved on. It's not so much about the next meeting and will they or won't they on 25 bips or not. It's more about, are these rate cuts that the market's discounting for the back end of this year, are they justified, or will the Fed's higher for longer mantra win through? And we're waiting really for more data, more ammo on that to feed into the idea that the Fed is now data dependent rather than on a preset path.
Yeah, understood. And it's my understanding that, I mean, you did have Fed speakers out. While it's unclear whether or not they will pause in June, and some people are leaning towards that, they seem to still be very adamant on no cut at the end of the year. While the market seems to
led on from that short report?
In the meantime, and you could tell me your thoughts on that, but bond yields also reacting. The 1-month T-bill has been jumping, has been wowing everybody.
Why they're doing that?
Right? When you look at bond yields too.
Yep, barbecue, barbecoating again, 1940, 19%.
The kind of X date forward to early June, or Janet Yellen moved the date forward last week. Then the 1-month bill has become, the pressure point for that. So I think that reflects what's going on around the debt ceiling specifically. More generally, I think you're absolutely right. In fact, I'd say it's the million-dollar question in markets at the moment.
IEP is now up on my short put screener. Not a bad idea. Maybe some short puts on this thing.
Wants to price in a dovish pivot.
It's in a bear flag.
Fed very quickly turning to rate cuts, and a Fed that continues to read from the same script, which is higher for longer. It's not new news. We've been here before, as recently as earlier this year, and on that occasion the Fed won, and we saw that savage repricing at the front end of the bond market just weeks before the March banking crisis hit up and changed the dynamics yet again.
Open after the short report. Interesting. Wonder what led that.
Critical debate that will determine whether this kind of coiling, annoying, frustrating range in equity markets breaks out to the upside or the downside.
Keep popping up.
Will all hinge on
back
that.
up.
And thus far, you have to say that.
Good to see GME look like it's still getting shorted sometimes.
Senior loan officer survey, and you say, okay, well that speaks to credit crunch, speaks to a recession that's coming. It's just been delayed. The lag is longer in this particular cycle. But then you look at the labour market stats, and even if the labour market data is the slowest to turn, it's still in rude health, and there's nothing there that says that the Fed are going to start.
I'll do some cash trade puts on IEP
anytime soon. So annoyingly, I think we've yet to get the smoking gun.
That's pretty bad news, though, what they came out with.
That gives the ascendancy either
They're
to the
being
dovish pivot
investigated
camp
basically for
or
that.
to the Fed's higher for longer camp, and as a result,
Look at
we're
this.
left treading water.
Yeah. You know, you said lackluster reopening. Trade continues with China. You're watching the U.S. dollar at these weak levels. What would you tell investors? Do this.
Shows how the media
do
controls
that. What are your
everything.
pieces of advice here?
So I think on the China reopening trade, I think it's just changed, or at least the best trade expression has changed. You know, traditionally you would go to commodities, you go to miners, you go to resource stocks, because what China would typically do to stimulate the economy would be very
These
much
are really
towards
attacking
the
this one,
industrial
huh?
sector. So the kind of classic playbook for China reopening would have been long Aussie dollar or long miners and commodities. In the last month plus, actually, it's been turned on its head, and you should have been looking at the Chinese consumer and buying things like European luxury brands as they buy up Gucci handbags and the likes. So I think the best trade expression for China has changed, and we have to acknowledge that. The other one is state-owned enterprises. If you watch the kind of political rhetoric coming out of Beijing, they're not as anti-Jack Ma and all the kind of crackdown on the tech bosses as we've seen over the last 2 years, but they're still not giving them a green light either. And in the meantime, they seem to be focused on the bigger state-owned enterprises. So that's been a better way to capture China upside as well. In terms of the dollar, we don't have a broad signal, but there are pockets that suggest that there's more dollar upside on selected crosses. So our machine, our AI framework has spat out a bullish signal on dollar stocky, dollar versus the Swedish krona, on dollar zloty, dollar versus the Polish zloty.
Barber coding, barber coding 1932, 2.7%.
In the absence of a clear trend, while we wait for this coiling higher for longer versus dovish pivot debate to be reconciled, we're left with kind of short-term tactical trades. And it's going to be things like opportunistic dollar longs is what we're catching at the moment.
Hugh Roberts, Quant Insights, thank you so much. Thanks. Plenty more to come here on Trading 360. In our 360 Spotlight, we'll take a look at Blink Charging following its earnings report.
When's their ex-divvy date? Barber coding 19 still strong. Yeah. Yeah, I mean if we just consolidate and then move up, that's great. Not selling off. But nothing's really happening on it right now, so see what close close to close is what matters. Intraday is somewhat irrelevant. IBM CEO has said last week, we will pause hiring for roles that AI could do to replace 7,800 jobs. Gen Z is on track with older generation's homeownership rates. I might not make it back to VWAP. So finding resistance from that higher support today. Back here. 2 Japanese life insurers to cut U.S. Treasury holdings. Los Angeles is the U.S. city that has experienced the most retail theft. U.S. Senate Republican leader McConnell says White House unilateral action on debt ceiling without Congress is not an option. Ace is sniping in Discord. I missed it. That snipe had quite the spread on it. Like 5 people. It won't. Spy to 403. It'll make it to VWAP? 412? Get the area chart. Well, that was so many plants and tall grasses slowing you down. I like the cash grid puts on IEP. That's a nice play. Got a lot of IV right now. Typically it wouldn't. And worst case, you get exercised and hold through the divvy. Get a bigger mower.
Up to 72. You can see that we're basically consolidating. You guys know I look for these areas of consolidation separated by vertical development, and that helps us determine trend, right? We have value that continues to move at higher and higher levels, basically every 50 cents, and then we had a bump of about 70 cents, spiking up to 72. Limited follow through right now, balancing around 71.40, but trending higher on the 5-minute candles over the last few days. Now, taking a look here, and this kind of ties into what Don was talking about in terms of how we're knocking on the door. We've got the highs from earlier this year up around 73. You can also see the run up from the lows that we were in last fall down around 52. So the move into the end of the year, the rally up, and a wide range of consolidation here that's been forming. We're looking again at 4-hour candles. We're going back to the beginning of September, and we can see 3 areas of consolidation. Basically $7 in separation between each one of these. 56, 62, currently balancing right around 69. Let's take another step back away from the hourly time frame. I want to show you what's going on with the weekly, because
there is Batman
here, right?
Here.
Very bullish.
You
got a high conviction move up on the left side.
I think you even made him a member.
Sideways consolidation.
Yeah, you made him a member today.
69 somewhat pivotal. We're above that right now. That lends itself to an upper extreme test. Again, we're talking about the highs in this instance up around 85. We'll call it back in 2021. If we were to roll over, then I kind of see what Don's talking about. But as of this point, based on the trend on the more granular 5-minute, the 4-hour we looked at, even more so also the weekly holding above 69. I think that we're still in a very bullish type scenario. No indication that the trend we've been looking at the very least over the last few days has been invalidated, or in the longer term, more intermediate 4-hour time frame as well. And then the weekly, really, you could see that conviction, you could see this consolidation.
All right, thank you for that. So looking at it technically, we think about the fundamentals. Don, final thoughts here on the XHB.
Spending money to get punished.
Relatively shocked at how well things have actually held up in light of all the rate increases. I mean, that's the only thing you can look at with the home builders, is that even the rate increases, I mean, the demand must be phenomenal out there, because again, Fed Fund futures above 5%, and the XHB rallying is something no one would have called, if you will, a year ago.
All right, next up. We're at 173 and change today, Apple. I mean, everybody was waiting for this to hit $200. It's fluctuated, but we are seeing the demand for Apple. You know, it helped boost the market late in the week when it reported. What are your thoughts?
Yeah, I mean, look, tech is the market right now. I mean, if you look at something like Apple, which I believe is up close to 40% on a year-to-date basis, that's adding almost $700 billion of market cap. You realize $700 billion of market cap added is actually, I believe Nvidia's market cap is right around 700 billion. So we're just talking phenomenal numbers. Tech, between Apple and Microsoft, they basically are the market at this point. I mean, looking at other sectors, whether it's financials, whether it's energy, they're actually down on the year. Those are the other two, decent sized sectors. In Apple, though, and this one's really going to shock Ben. I got to be bullish. I got to be bullish on this one, because I believe it's going to go into a little bit of a squeeze situation as traders are going to reach for the all-time high. All-time high is right around that 182, 183 handle. I think we're actually going to pierce right through it with what we call kind of a gamma squeeze. That's traders anticipating it breaking its all-time high. They buy calls, actually forcing stock up. I'm going to look to a June 16, again, a June 16 expiration, buying the 180 calls, selling the 185 calls done for $1.10 debit. It's a nice out-of-the-money call spread. It's a cheap shot, looking for a rip higher in the very near term here on Apple, cresting through all-time highs.
And the short interest on the float has risen to 4.25% since the last report. And to your point, the short interest, these shares that have been sold short but have not yet been covered or closed out. So it's very interesting. And look, people, I think, are just looking to Apple. It doesn't hurt that Berkshire Hathaway and Buffett is out there touting it. But people are looking for some safer plays in the long term. Ben?
You know, Don, I'm not sure if you heard that thump, but that was my jaw hitting the floor. And, as I was drawing up the charts on this one, I envisioned Don kind of climbing up this apple tree, going way out on the limb and grabbing hold of one and just taking a bite out of it. But I definitely didn't expect it to be a bullish take on shares of AAPL, which have been very much trending higher here. I'm going back to the beginning of January. 124 we found supported a key level. We'll get into that in just a bit, but all the way up to 174, a significant move. And I have to agree with Don, a big part of what we've seen in terms of the broader market rally, the NASDAQ taking out the Feb highs and all. Look at this along the way up. I mean, a well-defined textbook example of trend environment. Last time we looked at Apple on the show, Nicole, I'm not sure if you remember, but I had 175 written here with some question marks. I thought maybe we'd start to balance around this area after a big breakout to the upside. I think we can straighten those question marks out. It's actually 173 that we're forming value around right now. As long as we're above 165 on the hourly candles, we are trending higher and in a very well-defined trend environment that's been playing out to the upside, rewarding the bulls. Taking a look here at the daily, this goes way back. We're talking to summer of 2018. You can see a very similar pattern playing out here. But, we were just talking a minute ago in terms of the key significance of that pivot area, as far as 155 being the pivot area that we're holding above here right now. So I would agree with Don in terms of the bullishness, potentially opening up a door of retest of this 190, 185, 190 area, the highs that we saw back in the end of 2021, fall of 2021. But taking a look here at the bigger picture here, look at this weekly time frame. I just want to show you guys how a very similar pattern playing out here, right? You got these areas of consolidation that continue to form at higher and higher levels, currently balancing up around 155. This is a very well-defined trend environment to the upside, and I think Don's right here. As long as we hold above 155, we open up a door for 182, an inline continuation more likely than change. Trends your friend, they all kind of mean the same. Bulls are looking for a breakout above 183 and a new area of value to form at a higher level. But at this point, no rejection of the trend on the, again, more intermediate, more granular, and on this instance, the longer-term, bigger picture time frame.
Yeah, I mean, and you know, those folks who grabbed it at 125 or 130 are probably jumping for joy. I mean, we got a new car about a year ago, and
I actually have the Google Pixel 3.
And I will say the kids wanted
Are you
one
just
thing.
copying my
They
link?
didn't say what kind of car, what we should get. Apple
That's my
CarPlay.
phone.
That's what they wanted, Don.
Very good condition.
So
You totally copied it.
Apple's still very much a
Nice.
player for the teenagers. We know that the Apple iPhone and the Apple Watch were big in the latest survey for teenagers too.
Yeah, no, my kids are all about the screen in the back of the Tesla right now. So I definitely hear you on that particular front.
Yeah, understood. Okay, so at this point, last but not least, we'll take a look at Intel here. Your thoughts on Intel today, which is trading around 29 and change?
Yeah, Intel had a nice pop after the most recent
Barcoding,
that looks to be rolling over
1955,
a little bit. What I'm actually
4%.
trying to go after for is we're in this period of incredible consolidation inside of the S&P.
Where is it gonna go?
We're actually taking shots, if you will, at some low-hanging fruit. So you know, the XHP may be rolling over.
There.
Apple just go for the
Some
all-time
volume.
highs, and Intel, I'm just actually going to play
Might
into
be
this
waking
Intel
up.
ultimately rolling over. Intel's been, descending for quite a period of time.
I'd like to
I think we're gonna
see break of some
unfortunately, more of
resistances.
that. Again, a June 16
We're
spread
getting
here.
into this
We'll
thing.
be buying the 31 puts, selling the 29 puts against it. Just a $2 wide.
But it is
Again,
Wednesday,
with a
so
in-out spread. One strike in the money.
I don't know if
one
we'll have a
strike out of
rally
the
into the
money.
weekend or
It's going
not.
for about an 85-cent debit. Looks like Intel's already slipped a little bit today, and we could adjust those strikes just minor if you.
I did a lot of
if
day
you
trading
needed to.
yesterday on it,
But,
so
again, Intel continuing the descent
gotta be
right
pretty
now,
certain on my
and looks most reasonable on the technicals.
Okay, and look, people were starting to turn back
trades.
to Intel. I know you have a bearish call here,
Or
but
20%, 1959.
I mean, we know AMD was taking market share. You have NVIDIA. It's a very tough competitive landscape, and really it's been sort of an underperformer. Ben?
Don, it sure does look like it might have flipped, and that's what I love about trend, right? If you're positioned with it and it continues, then the market spends most of the time in your favor. The pullbacks are limited. The pain that you feel and the duration of them ultimately is minimized. Again, being positioned with the trend. I want to start here first and foremost with the 15-minute time frame, because this is somewhat counter trend, and Don mentioned it looks like we're starting to roll over here a little bit. I've got high conviction here last week into, 2 weeks ago into last week's sideways consolidation. And here you can see this week we're kind of working our way through the middle of the range that we established here. Again, this is the more granular time frame, but you see the range 2960, 3260, and how
if I was day trading it, I probably would grab a position
on the
here.
left side of
I'd
the screen,
stop like you
kind of
said.
tapering out after earnings
Or
saw limited follow through.
stop
A
down
high
here.
last
Then
Thursday that was unable to take out that earnings
or
high was
move
kind
to
of that
20
first
cents at
indication.
least.
Then look at this
2015.
kind of channel that's been playing out lower here again to this 2960 level. Let's move on here, though, getting away from this more granular time
cost to
frame.
enter and
Look at this
exit
high conviction
pretty
trade
high on this
downside.
thing.
You can see that move we just looked at, somewhat counter
And
trend here,
the
just a blip on the
illiquidity
radar
and the
in
spreads
terms of the
kinda
longer
suck.
term. And as I look at this daily time frame, I can see, well, let's do it to it. Taking a look here. 5, 4 make that well-defined areas of consolidation off that high that we saw. We're going back to the beginning of 2021 up around 69. And here you can see 29 is currently where we're balancing. A bit of a double bottom here that the bears need to get through at this point, but no rejection this lower level. So this is very bearish at this point, kind of feeding into, again, the idea if we're rolling over here, this supports that longer term trend. Let's take a look real quick. I want to show you something on the weekly time frame. Nicole, you're going to like this, Don, as well. Look, so here's what we've got. We've got a double top which played out here, and I want to show you this comes into play. It was the, the top of the range that formed, and give me a second here, up around, we're talking October 2019 and October of 2021, and that was up around that $70 level. When we break down, and this shows
How about a liquid? Look at
horizontal
GME just
development,
gapping on the 5 minute.
the vertical separation, and
This thing's
the
basically
horizontal
OTC also.
development, again, that's been playing out. In fact, as we look at this, I want to just highlight that separation, that vertical development, because it's
push
really
on
key.
GME there.
And here you can see, in terms of this is important. This is the high conviction trade, the high energy period where we just break down lower lows and lower highs, and then again we go sideways. So this chart really says it all. The double top, the horizontal development, the vertical, the horizontal, and how, well, now we're just kind of in this range, but the bears are looking for another high conviction phase of the downside, a breakout, and in line with what Don's talking about in terms of very bearish, very weak narrative playing out here in terms of shares.
All right, thank you for that. That was a great explanation, Ben. Good stuff. Don Kaufman, any final thoughts?
It is up 100%.
Yeah, we got to break this range inside of the S&Ps. It's absolutely critical. I would say my best estimate is there are a tremendous number of shorts in this marketplace. We may actually have to squeeze those shorts, explode higher, and ultimately resolve in this marketplace lower. I think we have to squeeze some of the shorts out of the S&Ps before markets will actually find a home in the mid 3,000s for the S&Ps.
All right, that's right. I think people are getting pretty frustrated with the range, but they have to say, I'll take it, because it was 38 to 4,100. We've been hovering a little higher. I mean, you know, maybe they should take it and take a breath. I don't know. We'll see. Don Kaufman, for those who are long.
Getting close to VWAP here. Should have waited for the VWAP entry.
High, folks. Don Kaufman, thank you always for being on the show. We love having you on. Theo Trade and our own Ben Lichtenstein on the charts.
Lichtenstein.
Coming up next, we're going to spotlight Blink Charging. Now, the company reported its quarterly numbers. New head of the company. He's been there already, but I look forward to having a conversation with the new CEO. That and much more coming up in the world of EVs and how to charge them next.
It's made quite the range today. 414 for a top, all the way down to 410. That is a huge range. Not even noon. Going on a trip in her favorite rocket ship. Barbecue, 1955. Topping, Poppy. A little bit, 3% up. Their SPY's push to VWAP. There's a 50% decline. There's a 50% decline in software development job postings compared to a year ago. 73% of millennials are living paycheck to paycheck. March. SPY's breaking through VWAP. Persona vibes. Thanks, Grizzly. Wait, what? Oh shoot, I accidentally closed. I had an order out to close that? Why did it close that? It's odd how much I've gotten that, Rhaegar. Really odd. My futures contract just got closed out for some reason.
Some of the laggards there, American Express, Visa, Chevron.
Didn't have an order.
Well, that's been a winning week. It's a winner. Up 116 points at 13,318. And the Russell is up about 0.5% here.
It did?
All right, now for developing stories, I'd like to bring in Renita Young, senior markets correspondent, to talk about a name that rise after its
I stopped them and I had on there was literally right there.
Nicole, I'm looking at Upstart today. These shares are flying higher. They are peaking, but still not as good as that 2021 high, right? The stock has been beaten down a lot since that peak. But today it's up on a narrower than expected loss, and the company managed to increase its outlook as well as announce an infusion of cash to the tune of about $2 billion. Adjusted losses were at 47 cents, and although revenue tumbled year over year by around 67%, it was still above expectations at $103 million. Sales and marketing was substantially lower than the year prior. It came in at $31.4 million. However, the company chose to invest more money in engineering and product development. They spent $110 million. And then the general admin and other expenses were also higher than the year prior at almost $53 million. Operating margin, however, was at a negative 128%. Now, this company was able to boost its outlook. However, analysts are not convinced that the company will be able to hold on to the gains of the debt, right? So some analysts raised the price target, but all of them that I just recently saw raised them to a level that this company has already surpassed for the day. So it's not necessarily a bullish bet on the company's success or the stock's ability to continue to carry through with the gains that it's made today.
Yeah, it's a beaten down AI company. This outlook was a surprise, and the short sellers are getting squeezed and having to cover here. You know, it's a big story. I'm glad you're on it, up over 33% today. Renita Young, thank you for that. Appreciate it. All right, stick around, folks. We have much more to come. We'll be talking Rivian later in the show, looking at those EV makers. Trading 360. We'll be right back. back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So it's time for our disruptors. And every day, George Sillis is with us, Senior Markets Correspondent, TD Ameritrade Network, taking a look at today's company, and that is Twilio. So the earnings are out, stock moving lower. What stood out to you? What is it that the street didn't care for there in the numbers, George?
Well, I mean, if you look at the numbers overall for the quarter, Nicole, Twilio, which for people who don't know the company, it's actually one of the larger players in enterprise communications technology. It's essentially communications as a service, things like SMS text and voice, and of course, video, teleconferencing, and programmable features, which are, again, very value added to enterprise businesses, which we know during the pandemic was a huge demand. But if you look at the last 3 years, the stock is down about 80%. And if you look at this quarter, there's a lot underlying what's going on with the earnings that were reported. Now, they did report a beat, a pretty significant beat of around 47 cents versus the 20-cent estimate. And looking at that relative to last year, it was a slight decline. And sales also came in a little bit higher than estimates, up about 14%, about $1.1 billion versus $1 billion estimate. But I think there's two things going on. One, if you look at the elements behind the GAAP earnings versus the non-GAAP earnings. So the company reported its adjusted earnings, but if you actually look at the sales growth in the last year, sales were up about 14 or 15%. Guidance for the next quarter was actually moved lower to only about a 5% year-over-year growth rate at around $985 million at the midpoint. But at the same time, as the sales grew in the last year, the GAAP losses actually increased, and that's not a good thing. So if you look at the GAAP losses, the unadjusted losses, they were a loss of about $1.2 billion versus about $4 billion in revenue. So we effectively have a situation, and I think this is why the analysts have moved their targets down for Twilio. It wasn't necessarily based just on the weaker guidance for next quarter, in which sales growth is still positive, but it's not growing as fast, certainly, as it was, let's say, even last year, or even particularly for that matter, 3 years ago. The difference between the GAAP earnings and the non-GAAP earnings is widening, and that's typically not a good thing overall. And I think that's one of the reasons why the stock is down quite a bit, even though the adjustments that were made for sales for next quarter were only moved lower by about 2% in total.
You know, when we think about this cloud communications company and the revenue guidance that is weaker here, it really is pushing it down in a big way. I mean, double digits, it's down 17% right now. Does that provide a trading opportunity for folks? What would be an example trade?
Yeah, I mean, looking at the prevailing trend, in the last 3 years, we can expect it to be down because of multiple compression. But even this year, the stock has been trading down. We're starting to see quite a bit of divergence between the healthier technology companies, and we know the larger cap ones like Apple and AMD. But I think it has to do with the fact that we're seeing multiple compressions still evolve in a lot of these growth stocks that haven't been consistently profitable. So with that said, looking at the chart, there is a level of support around $42. And also because the stock is gapping lower, there's a potential we see a gap in continuation to that level of 42. So we can actually go out and look at perhaps July contracts with about 72 days to expiration and actually put on a bearish trade, an outright put, purchasing the $50 put option for about $6 a share. So it's in the money. You're paying about $600 a contract, or like I said, $6 a share. And ideally speaking, the stock looks like, the way it's trading, that it'll gap and continue to that $42 area at the very least. And so break even on this trade is $44. So it at least has to hit $44 between now and expiration of 72 days. But if it hits that 42, there's an additional $2 premium that will be generated here. So this is a bearish trade based upon, again, the missed guidance, but also the fact that if you look at, like I said, the net income or GAAP earnings disparity between that and non-GAAP earnings seems to be widening out, which again is
was it that sold out of IEP?
All right, thank you for that. George Sillis, great
Or was
to
it
see
Newell?
you look there at Twilio.
Was it
today.
Red Icon?
All right, coming up next, we got to talk EVs. In fact, in our 360 round, we're going to dive into those earnings from Rivian. Now, the stock is trading higher after narrowing its first quarter loss. This is a winner. It's up over 7%, 6-7% today. So what's next for this group? Coming up.
high of the day, huh? 2094. Yeah, certainly. Well done, GME. Yeah, it is. It's holding pretty good. You closed 15 minutes ago. See if we get a direction decider now. Okay, I'll cancel my order to sell. GME calls. Who did Brett sell out of IEP? Or wasn't there a big seller recently on it? Just thinking they probably knew something was coming. It was IEP. All the speculation now they're liquidating all their stuff so they can buy barbecue. If it was IEP, it's much more likely that they saw this on the horizon. GME to the moon. Haven't heard GME go to the moon in a while. 2095. 0.5%. It's weird for how it looks like squeezy a couple times in the last 10 days. Just like shuts off. Before that would have been the sign, like the beginning signs that it's going to start going. Rivals up 10.25. Was it Newell Brands? Maybe this was what Brett Icon sold out of. That could have also been from earnings, though. But they have a lockup period before earnings that they can't sell it. Maybe he's not a big enough holder. I think it was Newell Christine, yeah. But Newell had bad earnings and dropped down also. Barbecue, 1951, still barbecuing. SPY might want to be a little fleshy here. Could just chop around though. Careful. Mechanical cyborg sound.
Meaner. They've got to get meaner. They cannot afford to lose another $6.8 billion this year like they did last year. The good news is a lot of others like Lordstown, Lucid, Nikola, They may not be so lucky. Rivian's got a first-rate vehicle. They are ramping up. They've got real backers. I think they can pull through, but I wouldn't be sleeping too easy if I were the Rivian management team now.
Listen to this guy talking bullish on Rivian.
Okay, Kevin Horner, what are you watching? I think you're taking a look at this chart, which is not a pretty one. That low of 1168
That's a deep throat,
wasn't that
DD.
long ago, and a lot of folks just say, you know, all these other guys have a long way to go. I mean, Steve made the point of how they're shooting to make 50,000 vehicles. I mean, they can't even get out 10,000.
Yeah.
So they got a long way to go to catch up to the big guys. Tell me a little bit about the chart. What are you watching?
Well, you're right on the money. The downtrend is pretty evident. Had a horrible 2022 in terms of price action. 2023 thus far has not been a whole lot better, off more than 20%, even still with a pop like you've gotten today. And in truth, I'm sure there are many investors who were long the last 2-3 weeks who are more than happy to take a 20 to 25% gain out of this when it ran to 1575 this morning. That becomes a pretty important area here. I mean, this is an improvement, and a lot of short-term traders will tell you there might be a new level established with the lows of the day today, somewhere in the neighborhood of about 14 and a quarter perhaps. But if you're not playing the trend just yet, then a lot of you are going to want to be on your hands, sitting on your hands and over the next couple of days to ensure that the level that's been reset here with today's action holds if you're looking at targeting that $16 area. And then, of course, there's always potential here, Nicole, because of the extended move to the downside we've made here. Percentage-wise, there's opportunity perhaps, but it's going to be more of a stair-stepped move in all likelihood. And when you're counter-trend trading, you need to look for your chances to take profits. And I imagine that's why you've seen the drawdown off of the fantastic open thus far.
Yeah, I mean, it's amazing as we look at this big picture, and as you said, people probably
Lucid, a great
sold a
company.
little when they saw
I think
this
Lucid's
jump, 'cause there is
probably
a certain element of
a similar boat to
frustration.
Rivian.
Steve, what's the landscape like when you look at the other competitors? You mentioned Ford and Amazon,
not bankrupt yet?
you know, working with Rivian, but Ford getting out 90% of it is out.
No,
and
they're
Ford
still worth
has
13
been
billion.
Sort of said, other than Tesla, as a leader in EVs. What names do you like in EVs now, Steve?
Look, here's the big picture. If you're an investor in the auto space, you need to know these three things.
Leap
First,
puts on
Ford is
Rivian
going all
or
electric. Whoever
Lucid?
wins there is going to take the
I guess
industry.
Lucid just had their earnings,
Second,
so
Tesla is way ahead of the others, sold 422,000 units in Q1. Compare that with Rivian, it's 8,000. So you've got kind of a barbell thing going on here. The big picture is Tesla's in first place, but BYD and some of the other Chinese companies, you're going to hear a lot about Geely, a lot about SAIC. They got the memo on EVs 5-6 years ago. They are prepared. So it's Tesla versus the Chinese with Volkswagen coming on pretty strong. They did 144,000 units in Q1. That's pretty darn impressive. Those are the big three.
we hitting some resistance here. 2099 area.
Pulling for the Americans. But frankly, right
Breakthrough
now, they're
there.
battling out for honorable mention. I mean, GM deliveries, 20,000 units. Ford deliveries, 11,000 units. And General Motors, my heavens, they've been working on the EV thing for 11 years since they put out the first full. They ought to be well ahead of 20,000 units. Ford lost $2 billion last year in EVs. They've said they may lose $3 billion this year. So while the company's still profitable overall, they've got to up their EV game. So right now, it's Tesla versus the Chinese and Volkswagen. We'll see who else makes the cut. But there's a lot of other names out there. Canoo and Arrival, Rimac, Nikola, Fisker. A lot of those folks just won't make the cut. Doing EVs requires a lot of money. We'll see how it shakes out.
Oh, so, you know, they're struggling. I mean, you're basically saying they have an uphill battle, a lot of headwinds here. The Rivian truck, the pickup truck, is particularly popular as far as the landscape goes in popularity. While there aren't that many of them, Kevin, what else are you watching as far as you're keeping this eye on Rivian and the group?
It's interesting you noted that. I've seen a lot of Rivian trucks in my neighborhood, oddly. I know that's anecdotal in nature almost exclusively, but for a trend trader like myself, I'll just remind everybody that, you know, what we're looking at is a lengthy downtrend in place. The short-term uptrend is just that. It's very short-term. So clearing some areas over 16 becomes important again. Over 16, there's opportunity here, but, you know, I still agree. There's a long way to go for this to be felt as a longer run opportunity here. Short term, sure, there might be some chances, but you're going to need to position yourself properly, needless to say.
And what do these companies, Steve, need to do? I mean, as far as innovation, I mean, you know, I'm seeing something about enduro and batteries and things like that for Rivian. We know that Tesla's constantly reinventing itself and creating new products. You have, you know, self-driving and different kinds of vehicles at different price points. What are these companies doing? Is there anything that's super impressive to you?
Yes. There are three things every auto company, trucking and auto, needs to do. They need to take these three lessons from the Tesla playbook. First, take battery production in-house. That is the way you take costs down. That's why Tesla has a lead on the others in battery costs. Second, Tesla was a leader at what's called over-the-air software that drops additional money to the bottom line. Third, Tesla's the most modern
GME kind of rejecting it here.
manufacturing lines in the
There's no
world.
volume
Called large stampers.
these options
They
anymore.
can produce their vehicles.
That's the problem. I'm always just selling to the market
hours or
makers. So you have
less.
to just
Volkswagen and others still
give
take
them a
as much
ridiculous
as
deal.
30 hours. So follow the Tesla playbook. You've got to get leaner and meaner. Elon may not be an easy guy to work for, but he's pretty darn good at wringing every extra dollar out of the production cost in the BOM. Other automakers need to be watching that with a clear eye.
Yeah, he doesn't take no for an answer, from what I understand. Steve Leslie,
Coming down.
Kevin Horner, yeah, good to see you both. Steve Leslie of the Wesley Group and Kevin Horner of Charles Schwab. Thank you both very much. Good to see you both. And that's going to do it for us here on Trading 360. I'm Nicole.
A little bit.
I
gotta wait.
every single day,
Middle of the day chop.
7 a.m. and 2 p.m. Thanks
Right
for
till
being
end of
with
the
me.
day.
I'll see you at 2 o'clock
Maybe.
for the watch list. Keep it right here.
Or like 2. Thanks, guys, for your likes. Well done. Coming up 2 minutes to noon. That is subscribe hour, noon o'clock hour. Your subscribe button is red, turn it gray, and the notification bell on. Thank you for your likes. All 34 likes. Appreciate it. Thank you. The support, guys. Much obliged. At Lucid Leap puts. Okay. Bye, melting down here from VWAP. For these commentators get enough audience to keep talking. Still non-playable characters. They are there just to sell you the idea. Sell you the idea to trade more often. Give you ideas.
Report showed inflation moderated slightly in April as traders upped bets the Federal Reserve
Sell a product, and the product that they sell is commissions on trades.
Leading the gains, and the Nasdaq 100 hit a 2023 high.
I was late on my short, but I did get back into it. I liked it here, then I stepped away, and then back in here.
Indices, which are still mostly
and
in the
that stupid
green.
stop loss, even though I had it closed out up here.
0.2%.
I just
the
held it.
Dow
Would have been
lagging
much
today,
better.
down over 105 points, about 0.3%. Nasdaq 100 tech up
Dude,
about
I've been pretty good about making sure my order book's
and
empty.
the Russell 2000, the small caps,
this is weird.
up about 0.3% on the session.
Barber coding,
to help me break down this
1928,
market action, let's
2.5%
bring
up.
in my co-host, and that's Kevin Hinks. Kevin, we've got a bifurcated market at this point. When you look at the major indices, Dow is in the red right now. Apple, Microsoft are up in the Dow.
Maybe back green to red again.
Major components are down on the day after the CPI report.
Yeah, hi, Tom. Vaulting over a pretty low bar is what we did on this CPI report,
Right.
Tom. I mean, down a 10th on the year-over-year headline, down a 10th on the year-over-year core. That means we'll hit 2% about 2035, Tom, at this pace. I mean, this is just a bit longer than we thought. I mean, listen, you can claim a moral victory now saying that year-over-year headline CPI is lower than the Fed funds rate. You've got the Fed funds rate to a restrictive level above inflation. But, Tom, the goal is not 4.9% or 5.5% in the core. It's significantly lower.
Looked at the 1 minute for an entry.
So there's a lot of work to do. This shouldn't convince anyone that the Fed is either done raising rates or especially going to cut rates in the second half of the year, Tom.
Yeah, I think that's the concern, Kevin. Now, we actually heard from Fed's Williams came out overnight and basically said, hey, we don't anticipate cutting rates at all. Basically, no rate hike in June. They're pricing in at this point, and nearly 100% chance that they're going to cut rates by December.
Let's see.
I mean, we'll have to wait and see. I guess that's the
You
million-dollar question at this
What
point.
was your play?
Exactly.
Kept
They don't
wanting
say
to go
never,
a certain
right?
way.
We
and
don't say always.
wasn't.
Something could happen,
I don't
Tom,
like this
that
one.
could jar the market, that maybe the market is anticipating or looking towards. But there is nothing in the
2%.
recent data that claims there would be any type of a cut coming up later in the year, Tom.
Fair.
Yep, never
Target?
say never. Something
Buy
could
rating?
break, and I think something needs to break if they
don't know
think
what
they're
the
going to
catalyst
cut
is on
rates at any point this year, with inflation still pretty hot at this point, but coming down off those levels. So they did grass that green shoot in this report, under 5% for the headline number.
Yeah,
you said
doing a bull
some
flag
pressure
thing.
on stocks today, and
Hourly.
Airbnb comes to mind
If
here.
the daily
Kevin.
candle
Stocks down
closes
over
like this, that's not
10%
very good.
after their earnings. Let's bring in Jenny Horn, market
On the volume.
correspondent here on
I don't
the
know what the
network,
catalyst is.
to help us break down this story. Because Jenny, if you look at just the headline numbers, EPS and revenue, I was like, oh, it's a pretty good report out of Airbnb. People are still traveling.
Maybe a stop
and
for
then
like
they
down here
start
somewhere.
talking about guidance. What's going on here?
Yeah, it does seem like this was one of these reports, Tom and Kevin, where it did seem like you to do some digging to find why we're seeing shares down 10.5% in reaction, because their first quarter profit did exceed forecasts, coming in around 117 million,
today.
beating street expectations, also rising on a year-over-year basis. However, the company did warn that its average daily rates are falling slightly now in the second quarter, and they also said that nights booked would be rising more slowly than their revenue growth going forward. So even though we saw revenue up 20% year over year, they do expect that now to moderate going forward. So that is the concern. It seems like the theme of this earnings season thus far is all things guidance, especially for a lot of these travel names where we've seen really strong top and bottom line prints, but guidance is all of the focus of the street today. Gross booking value was up 19% year over year. We saw nights and experiences booked also climbed 19%. Their current backlog of nights is approximately 20% higher than it was a year ago. And they did end the quarter with about $10.6 billion in cash. Now, they do expect their second quarter revenue to fall between $2.35 and $2.45 billion versus estimates of around $2.4 billion. So ever so slightly lower, but second quarter nights and experiences growth is now expected to be slower than the street had been anticipating. Airbnb did also authorize a new share repurchase authorization of up to $2.5 billion. So another strong aspect of this report, another sign that this is a solid company. And they did highlight that they've seen this really strong rebound in travel. Not enough today, though. We saw a ton of analysts come in, update their price targets to the downside. JP Morgan lowered its price target to $110. Morgan Stanley, $95 a share, citing expectations for now slower growth, as well as some higher execution risk going forward. UBS cutting down to 108. RBC lowering to 105. Other analysts also that cut their price targets today include Piper Sandler, Credit Suisse, and Barclays, as well as Citigroup. So some pretty, I'd say, pessimistic analyst coverage today, although all things considered, this is a stock that traded, almost double from where we currently are. So I think relatively speaking, you look at the year-to-date chart and you see shares are up 34% year-to-date, which is great. But then you zoom out and you see where we once were and how really the entire travel industry is still grappling from the pandemic. I think that's more telling of the story here in Airbnb.
Yeah, Jenny, the first quarter, the numbers were good, but you mentioned the two kiss of death words in a company like Airbnb, and that is decelerating growth. They need to see at least numbers flat to going up. Now, we're in a tough macroeconomic environment, but if you were watching yesterday's fast market, Jenny, and I'm sure you were, hanging on every word, you know that Lightfolio's data showed a peaking, a topping off in travel, and what we may be seeing in airlines and in cruise ships, hotels, Airbnb, and booking companies. If this is starting to peak out here, all these stocks are vulnerable, Jenny.
Right, because I think that there was so much enthusiasm over these spring and summer months, right? All we heard was that demand is coming back. We're seeing corporate travel coming back. International travel is coming back. Leisure has been consistently strong, but I think perhaps expectations got ahead of themselves, and they almost saw a reset alongside some of the financial weakness with a lot of these travel stocks. But so far this earnings season, if you've been following the other broader themes, I think that indicated the negative move we're seeing today in Airbnb, because the hotels posted really strong results and almost all of them sold off the day after they reported earnings. So it does seem like there seems to be this expectation now where we need a reset here for what was supposed to be really, really strong demand. Now, I'm not saying we don't see strong demand for travel, but Airbnb has its own issues. We've talked about it. The fees for Airbnb are out of control. It's gotten very expensive. It used to be seen as more of the cost-effective way to travel, but now booking a hotel seems to be cheaper, and that's a huge problem when you're Airbnb.
Yeah, and Jenny, real quick question for you. Would you rather stay in an Airbnb or a hotel? I had this discussion yesterday on the show.
Oh, I'm hotels all the way. I want to have my housekeeping come. I want to have my bed made. I'm a hotel girl.
And the lobby bar. Don't forget about the lobby bar.
Of course.
Tom,
yeah.
Jenny Horn's talking her family book there. You have to understand that, right?
Yeah.
I'm from a hotel family, yes.
Yes. And
there you go.
My better half is from hotels, too, so that's maybe why I like it. All right. Thanks to Jenny Horn, markets correspondent here on the network, breaking down the Airbnb story. But now let's bring in Nick Theodorakis, Financial Risk Management Director at TD Ameritrade. Nick, I wanted to get your take here on CPI.
Fundamental analysis on gold.
Seems like
Just
initially
read the Bible.
the markets grasped a hold of this. We saw Treasury yields come down. We saw the dollar fall a little bit. But now stocks starting to come off of those session highs. What was your takeaway?
Just buy us down here if it's.
Guys, it really plays to the
Balance
Fed's
and
narrative.
support.
Sorry, I'm not there with you in person today. I had some stuff come up at home, but really interesting number this morning. Because the analysts continue to be spot on. Right, we're getting. We got the 0.4. We got 0.1% lower than expected forecast. So I think that kind of headline 4.9 versus 5 estimate. You saw all the futures shoot up. Now the Nasdaq's held on to the gains a bit better than the other kind of big tech leading the way, but I continue to take the positive out of this as, we're getting to a point where we can project and predict what these numbers are going to be. The analysts are pretty much right on. So you're seeing, vol remain low, and this, I think, is a positive spot for the market to build from. And that was the initial reaction. Then you see this sell-off back, S&P, basically unched on the day now. And ultimately, I think what you're seeing is the realization, and kind of said it.
Yeah, you should have kept reading. It came back to life.
This isn't going far enough, fast enough, right? And it has
All you had to do was wait 3 days.
In terms of the decreasing inflationary pressures, and it's concerning, I think, in a few ways. One, the labor market is definitely, starting to show some weakness. So you're going to start to wonder what the overall credit picture is going to look like when you layer in the bank stuff and the labor market. But the input costs are pretty significantly down.
The support here, see what happens.
And some of the inputs, like
I did close my short out of that little trade.
Things that went crazy, but they're significantly down. So to see
inflation
still persistently high, I think, is important. Tomorrow's
really get out? Is that a thing?
As much weight this time around the PPI, because ultimately, what are producers paying? And I think if we get the sense from these two numbers day over day that it's just going to corporate bottom lines, and prices are up, but inputs and costs are down. That's maybe a little bit better inflationary story than just the persistently high production costs. So I think these two numbers in conjunction are really important. But again, not too surprised to see those gains not held on to, just given the fact that we get another big number tomorrow.
Right.
And headline number good, but sort of digging into it, still persistently high inflation.
Yeah, Kev, when you dive into some of the components within here, record increases for owners equivalent rent year over year is 8.1% year over year in April versus 8% in the prior month. So that's going the wrong way. But on a month-to-month basis, we're seeing that decelerate. New car prices came off a little bit. Airline prices, thank goodness, started coming down just a little bit. But a lot of this stuff seems a bit sticky to me.
Well, there were a lot of mixed numbers, Tom, in this, like energy. Energy was up 0.6, but fuel oil down 4.5%, gasoline up 3%. Food at home down 0.2, but food away from home up 0.4. Used cars and trucks, you mentioned, up 4.4%, but new cars down 0.2. Shelter up 0.4, apparel up 0.3, electricity down 0.7, so that gave you the mixed numbers in energy. All things considered, I thought this number, there was a lot of little numbers in the, if you looked at the tables in this. A couple outliers like used cars and trucks, like utility piped gas, some big moves there. But all in all, this was a number that was kind of benign, guys.
Yeah.
It wasn't a big outlier. Like Nick mentioned, there wasn't a lot of volatility in the numbers.
7.4.
Pretty much within a tenth.
Yeah.
Of where they were. So all things considered, in line, guys.
Yeah, and those energy prices should come down because remember, first 2.5 weeks of April, this is backward-looking
country in
data
Oceania.
at this point. Crude oil prices
Polynesian
were above
country.
$80 a barrel for those first 2.5 weeks in April. So that should start to come down now
There's
that crude
Tonga.
oil is below $73 a barrel. But Nick, I wanted to hit on one more point here. There was some commentary out of Stan Druckenmiller from Duquesne National Park or Duquesne Family Office. He's highly watched on the street, and he said we're due for a hard landing. I haven't heard that for a while out of any market watchers at this point. Now, he's not going to be right all the time, but
we'll
he's
get some
got a
waves
pretty
into
big
Edie from
voice
it.
on Wall Street. What's your takeaway here from some of these commentaries that, whether it's the regional banks getting hit, credit tightening, layoffs that are going to be coming,
They're on
down
the
road.
ring of
He's
fire,
gonna
I think,
see
right?
Unemployment back above 4% relatively
it.
quickly. He's, predicting a recession here.
Guys, I took a little bit, of a longer look back at, some of the charts when I was reading his note, and the part of me that agrees with this is we never saw the vol, explosion. We didn't see the washout. We didn't see the lows we made last year down in the, the 3,600 range in S&P terms. We just didn't see any of this, explosion of vol, the panic selling. Everything got delevered to a point, right? But we've really consolidated, and we've been between 4,000 and 4,200 now for a long time. And if you look since the end of March, S&P terms, we have been between 41 and 4,200. Like, given all the news out there, it is pretty interesting that we've been in basically a 100-point range for 2 months. You know, so the part of me that believes this is like, we haven't seen that real vol washout. I think personally, like if you play out one scenario, it is, you know, the banks, the credit tightening, and, you know, the corporate real estate market, as, you know, companies start to look at what they're going to do with their real estate as these lease cycles come up post-COVID. That is not priced in here. And, you know, depending on how big those books are, very, very illiquid. They're very hard to price. And if we start to hear, you know, that one point he made really come to sort of top of headlines, and people get really worried about sort of cities and infrastructure and all that, and then you layer on potential layoffs with the impact there to the
earnings
consumer,
sell-off.
like that to me is the negative scenario. I just don't know if that's the base case or you know, worst case scenario. It's bad. Then you layer in this sort of concern about the U.S. debt default, right? So, you know, as the risk guy, I have to sort of think about these scenarios, and it's if the U.S. really defaults, what's that going to do to the obviously the Treasury market, but also the corporate bond market? And that's not a great time to have, you know, again, another reason to worsen the credit condition. So if all those things were to play out in an extremely negative way, you know, I think it's possible. A bit more likely, right? We probably get resolution, you know, after all the filibustering and noise out there. We probably get resolution on the debt, you know, the debt ceiling, at least temporarily, and kick it down the road. If we can't get a real raise, you know, these buildings, these corporate real estate type, you know, big office buildings, they're still building new buildings, right? So until I stop seeing the cranes around, you know, New York and Chicago and down in Texas when I'm traveling, like until I stop seeing, you know, these buildings going up, I'm not all that worried about this, right? There's still a place for them. And we've seen through kind of the shopping mall event, right? There's good use for these buildings. There's good use. And I think that we don't want to underestimate maybe what the sort of, you know, the corporate real estate, you know, landlords are willing to do and how they're willing to change their model to accommodate things. So I think it's more likely that the U.S. sort of figures it out. And we also see inflation coming down in Europe. So if that continues to slow, I don't think it sets up for worst case scenario, but I'm certainly not surprised people are talking about these big trigger events that could be out there and cause a hard landing, or at least a harder landing than the Fed is certainly trying to orchestrate.
Yeah, you're a little bit more optimistic on the commercial real estate market than I may be. I think if you drive around city Chicago, there's plenty for rent and lease. So we'll have to wait and see on that. That could be another shoe to drop. Guys, let's take a quick break here. When we come back, we're going to take a look at Microsoft, which is up nearly
Fubo finally cooling off
this year, just under 52-week highs in the stock.
Hold underneath that $2.
AI offering continues to expand.
Barba coding 266%, 1930. I just kind of trading back and forth in this range. He's still up 2.8. Double top there. Bit of a VWAP bounce. Yeah, 7.4 earthquake in Tonga. Hifo. Microsoft won't raise salaries for full-time employees this year. Is reducing bonus and stock award budget. Apple's new high-yield savings account brought in as much as $990 million in deposit over its first 4 days. Wow. Our bank. Italy's Prime Minister Meloni, no decision yet on leaving Belt and Road Initiative deal with China. Debate is open. Credit Suisse, Japan, bondholders seek arbitration over AT1 wipeout. Managers who use AI will replace those who don't, says an IBM exec. Federal prosecutors in Washington are looking into short seller activity around the recent volatility in U.S. bank shares. U.S. government credit default swaps hit an all-time high on debt ceiling pass. Yeah, I think I did hear about MO making. No, they were making. They're gonna make. Wait, smoke-free products? What do you mean? I'm always gonna make get into weed, I figured. Sure, that's smoke free. Chewing tobacco. I don't know if they make that already or not. Oh, interesting. So if you're trading on a T212, I guess no more forced closure on the 19th. You can continue to trade in ISA for all you internationals. Bed Bath & Beyond has moved to the OTC market. Upon review, we conclude that the instrument continues to maintain EEA support. Is subsequently deemed ISA eligible. Respectively, any outstanding positions will not be closed on Friday, the 19th. No further action necessary on your side. Should the ISA eligibility status of the company change in the future, you will be notified accordingly. Looks like SPY might be bouncing back up to VWAP. I'm a little low level here. Up and coming. Philip Morris. GME 2094 retesting the highs. Barber coating 1930 2.6%. Nirvana still up 12%. Upstart still up 34%. Round has earnings after hours? I think so.
Into expiration also, but a good look at Microsoft. This thing's been on a parabolic move, maybe some consolidation warranted. This type of strategy takes advantage of that as positive time decay and theta works in your favor. All right, thanks to Nick Theodorakis, Financial Risk Management Director at TD Ameritrade, for joining us to break down markets and Microsoft. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for a discussion on Disney. The big one reports earnings after the close today.
Getty Images has earnings tomorrow. Volatile. Setting up another little bull flag. Up 4.5%. $63. Get that gap fill, 76. Microvast has continued to climb. XF, no way. When I was in, I closed, didn't I? I did. He made a move. Closed it for the barbecue. engulfing candle today, though. That I got from YouTube chat bot. Okay, I think I made more money on barbecue.
To give guidance on subscriptions anymore after losing 2.4 million subscribers, and that was following a price hike. And one of the things that we look at is, you know, how's streaming doing overall? In general, streaming is down about 3% just across all streaming platforms. But when you focus in on Disney, people are talking about canceling Disney about a little bit more than they were last year, plus 5%, not a huge number. But the real concern here is that about the number of people talking about new subscriptions, they just signed up for Disney, that's been cut in half over the last year. And people talking about watching content is down 70% over the last year. And I think a lot of that has to do with the fact that they're just not putting out a lot of new content. You know, they are competing with the likes of Netflix and all the others who are churning out content nonstop. And Disney, you know, we've talked about this before in the past. When you sign up for Disney, you know, might go on there and watch a lot of your old favorites, and then you say, okay, what's next? And, you know, they had like The Mandalorian that has a few seasons in. But other than that, there's nothing like pulling you back week after week to get you to watch more. So I think they really need to step it up on the content side of things. This is, in my opinion, their weakest division, and it should be probably one of their strongest. So definitely struggling there. The second division that they looked at was ESPN. ESPN Plus down about 5% on a year-over-year basis when it comes to viewership. Nothing dramatic in that area. You know, like I talked about, streaming's down 3, ESPN Plus is down 5. So it's kind of holding the line, maybe just a little bit behind, nowhere near as far behind as Disney Plus and the other streamers. And then the third division is the parks, experience and products. And we look at the parks, one of the things we like to look at is how many people are going to the website to actually plan their vacations, to plan the Disney parks experience. And that's up about 2% year over year. So it's, you know, it's holding, it's doing fairly well, it's gaining a little bit. In the last report, they talked about that this division had revenue of plus 21% year over year. I think a lot of that has to do with increase in ticket prices and getting more, frankly, out of each customer. You know, now you've got the Genie Plus, which is $25 per person. You've got the Lightning Lanes, which is $16
I haven't seen
per
that.
person. They're just finding ways to get a little bit more
Saw a thumbnail for
out of each person. It kind of reminds
on
me
Disney.
of, if you go to the
My
airport,
wife got
you gotta have
excited.
your TSA
What? New
pre-check,
Peter
and then if you
Pan?
want to go to the next level, you got to have clear. So that's Disney's kind of taking that road. Is like, how long do you want to wait? So you're paying for your time or not having to wait in lines. So they're able to get more out of customers. I think that's really key. This is the biggest one for me. I mean, this is the steady Eddie here. This is the division that is just going to continue to crank out money. I really think there's just nothing like their parks and experiences, and it's just a destination. I don't think that's going away. This is what,
yeah, I
think
figured.
if you're investing in Disney, this is the safe part of the investment. You're really hoping that the subscription part, the streaming part, can take off, and that's sort of your
We just
growth
finished
engine. But this is the safe part
Mandalorian.
of your investment. I think so far investors have been disappointed
I like
with
that show.
how the streaming side of things have gone, and that's why we've seen the stock sell off so much.
You know, Landon, I think you're right. I think the theme parks are going to put
yeah,
up
the last season
impressive
was
numbers as they usually do.
not as good.
I think the direct-to-consumer streaming is going to struggle as it has in the past. I think the linear media is hurting, as you know. ESPN's probably part of that, although ESPN will probably be one of the brighter spots in that. But Landon, when you take this all, the good and the bad, and you add in, he's going to cut costs. The estimates are for $5.5 billion in cost cuts between now and 2024, and he's going to get Disney Plus positive earnings by 2024, probably by slashing expenses. That could take some of the bite out of some of the weakness in this name. That's the way I look at it, because Bob Iger, say what you want about him, but he is a dynamic, impressive CEO who, if he doesn't see the revenue on one side, he's going to attack the expenses on the other side and cut headcount as he's already done. He's going to cut costs. So I think there will be some bad news in there, but
I liked Mandalorian.
in this
What was
earnings
it?
season, cost cutting is
watching?
going to be a positive for Disney when they release their earnings. Your thoughts?
I agree. I think if you're investing in Disney here, right at $100, right over $100, you're betting on Bob Iger. You know, you've got this PE ratio. It's around 55, which is fairly
I can't remember what it was.
I think. But there's two ways to take that down, right? I mean, you can either increase the revenue or you can decrease the expenses, and your earnings are going to go up.
There's a little fleshy flush.
Can sustain that, so that's going to affect the PE ratio positively. So, yeah, I think that cost cutting has to be done.
If we get a bounce in this level again, or if we go through,
frankly, and I like having this parks and entertainment division that's just foundational to the company. You know it's going to stay there. You know it's going to continue to do extremely well. That's tried and true. It's battle tested. And then it's just a matter of getting upside, right? You got to get the upside from the streaming. I don't think that, you know, they're not going to be opening tons and tons of new parks. There's not a huge amount of growth in that, but it is going to continue to churn out more money as they get more people coming in and more money per customer, which they've shown a huge ability to do. I mean, this is a very elastic, or somewhat inelastic, demand. People are going to Disney World and they're spending whatever it costs. So I love that. But then again, you just got to get something going out of the entertainment side. And I think it's been somewhat of a failure so far. But if he's cutting costs, the only concern that I have there is, what are you doing about the content? Because you've got to have new content. If you're going to compete with all the big players that are putting out shows left and right, you've got to have new stuff, and that does not come cheap. So it's either going to be acquisition of content or create it yourself, and those are both fairly expensive.
Landon, that's kind of the point of my question here going into this is, you know, they're pulling back on content creation because that's a huge expense. You know, all these streamers are losing money, or most of them are, because of that. Disney has a cachet of, you know, basically content they already have, but they're dropping people. Is the street too focused on the streaming side of their business and not the parks and rec and maybe the partnerships that they have, the movie business that they have? And, you know, what kind of happiness levels are you seeing out of this? Because I know that's a key metric you guys follow.
Sure, yeah, happiness levels are strong. They're very strong with this company. The streaming took a dip on the price hike, but other than that, I mean, the parks are always extremely high. And I think that's one of the reasons that it's done so well. But again, you know, what kind of company are you investing in? I think if you split this company into two, and you had entertainment and streaming and even ESPN Plus on one side, and you had the parks on the other, the parks would not justify a PE ratio of 55. I don't think. I think they're going to be very steady. They're not wouldn't be a growth stock, in my opinion. It'd be, you know, just sort of like a dividend stock almost, right? It's just going to crank out money. But what would the other side be? I think that's the side where people are looking for growth. So I think that's why investors have looked so heavily into what are the subscriptions, what are the, you know, how many people are coming in and signing up for this, and what's the retention rate. It is concerning that they're not giving guidance on that anymore. And so the fact that we've got new subscriptions cut in half, people watching it down 70%, I think that's going to hurt the stock price, because for better or for worse, that's what investors are looking at, because I think the parks are sort of a known, and the streaming is a bit of an unknown, and that's the pie in the sky. Maybe we can get there. This is how we justify this high PE ratio. That's what makes us a growth stock. That's sort of the story that's being told, at least in investors' eyes. And you got to follow through with that if you're Disney. So either get rid of it and just go back to being, you know, the parks and ESPN, or if you're going to have it, you've got to crush it, and it's going to be expensive. So I'm really interested to see how they come across on this earnings call and what those numbers looks like. Is the focus shifting at all away from streaming? Or they just, you know, one option you could have is just say you can have access to everything we've ever done, and it's a small monthly fee, as opposed to trying to compete with Netflix and create new content all the time. There's a lot of ways they could go about it, but in order to justify that 55 PE, you've got to have a lot of growth.
Yeah, and do you have an earnings score going into this one?
So we don't with Disney. We don't actually track every brand that they have. We break it down into different sections. So we don't have a specific earnings score. Personally, you know, I would say that 100 as a support, you know, is just one of those old school technical things. I think that if it goes under that, people are likely to buy it. Every time it's gone 10 or 12 bucks under that in the last year, people have bought it back up to 100. We're sitting at that level right now. I do like that. I like betting on demand, frankly, by Viger, and then I like the safety of the parks revenue. But I just worry that the PE ratio is too high without growth from the content side.
Yep, and after that initial pop on last earnings, this stock is now below the levels that it was prior to that pretty decent report on the expense cutting side also. All right, great data as always, Landon. Appreciate it.
Thank you, guys.
All right, that's Landon Swan, co-founder of Likefolio, joining us. Kev, how do you want to look at this from an example trade? I mean, this thing's been consolidating, around this 100 to 105 level, down to 95 for the last month or two.
Tom, this stock's up 15, 16% for the year so far. That seems pretty good until you look at a longer length chart and you realize it's down 50% from its highs. And there's good reasons, right? This is a company that is recovering from all the bad things that have happened. Tom, I think they're going to put out, and if you've noticed, the earnings expectations are all over the board. I see 93 cents. I see as low as 83 cents. The revenue is pretty consistent around 21.8 billion, but earnings per share are all over the board, and that's because there's so many things going on in this company, Tom. But they're going to have some good things. I think the parks are going to be good. I think the cost cutting is going to be huge, but I think streaming is probably going to be problematic again, and linear TV is going to be problematic again. So I think, Tom, I really like what Landon said about lower is favorable in terms of, people like
Microvast, VST,
a really
breaking out here, 75%.
iron condor that I looked at, Tom. And here's what I did. I sold the 95.93 put vertical. I sold the 106.108 call vertical. So right around the expected move in either direction, Tom.
HLP, these Chinese IPOs.
Why? Because
up
with
26, it started breaking out also.
Credits.
Not even 1 o'clock yet.
74 cents, 75 cents credit.
DXF just gets shut down.
$2 iron condor. The wider you go
ISPO
out,
also.
the worse your returns become. So remember, when you need a better return, shorten up those strikes a little bit. So Tom, this one, they could come out with some good news. The stock is down, like I said, over 50% off its highs. But I think it could be one of those scenarios. I could be wrong. I often am, where it's some good news and some bad news, and the overall wash is kind of a neutral, Tom.
Yeah, let's break this example trade down real quick.
I sold my GME calls.
Really short term, just 2 days until Friday's expiration. Selling the 106, 108 call vertical, so selling that 106, buying the 108. And then on the put side, selling the out of the money 95 put,
looks
buying
good,
the
but
93 put.
Just moves so slowly.
$2 wide on each side, collecting 75-cent credit. That's what you can
Fine,
potentially
not so
make. Break even,
we'll get a nice
you see
bullish
there,
push on that.
106.75, and then down to 94.25 on this one into expiration on this. Option market's pricing about a $5.50 move either way, but if you think this thing's going to continue to consolidate, maybe the good parts and bad parts of this earnings are going to kind of offset themselves, and it remains in that range. This is a type of strategy that takes advantage of it. You do have some assignment risk on those short options into expiration on Friday's close, so keep that in mind. But another good look at a short iron condor. This one equidistance from the center of this, as opposed to the one that we saw in Microsoft in Nick's example. All right, good look at that short iron condor there in Disney, taking advantage of the higher implied volatility. But coming up after the break, we're going to take a look at the trade desk, which is up about 47% so far this year.
House lawmakers host bipartisan dinner with OpenAI CEO Sam Altman. Barcoding 1931, 3.7%. Microsoft will not give employees salary raise this year. Eyes coming down a little bit here. Back to that level. Support from earlier. $410. 84. Powerful support. That's one way to look at barcoding. The bottom of the code is powerful support.
CPI, which, well, ultimately is helping ease some of those inflation concerns. But what I'm interested here is, Tom, though, what's going on with the Dow? Why is it lagging? You can see down about 0.5% here today. You've got the dollar, which is hanging out near year low prints. You've got some potential catalysts coming in the next couple days that could send the dollar even lower ultimately. You would think that the dollar lower would ultimately bolster some of those multinational companies. Keep an eye on the British pound. Over the next couple days, you've got a Bank of England decision tomorrow morning. I'm also watching some of the other foreign currencies we don't normally talk about here on the network, Tom, but you've got the Mexican peso back to September 2017 levels, the Swiss franc making new highs for the year, and the pound as mentioned here. So currencies on the move higher, and the dollar ultimately has been, been paying the toll or taken a toll as a result thereof.
Yeah, that dollar, we've seen support over the last 3 months at that 100 level for the dollar. So, yeah, until we break that, still consolidating at this point. All right, thanks to Ben Lichtenstein, host of the Future Show, breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking, I always consider this an overlooked stock, George, but it shouldn't be because they're involved in digital advertising, and they're a neutral party in this space. And we heard all the rumblings in the latter stages of 2022 into this year that everybody's pulling back on advertising, but this stock's made a pretty nice run so far this year.
It has. If you look at the last year, it's up about 43%. Even year to date, it's up 45%. I think that's also very telling because you're seeing the stock not only up on a year-to-date, but also on a 52-week basis. Now, you're right, the trade desk is kind of an overlooked stock. It's not really one that people are familiar with, but it's actually one of the leaders in display ad technology auctions. Effectively, you know, you talked about neutral party. You mentioned that just a moment ago. You could consider 16? This really a digital ad-based brokerage company.
Above that gap up?
That's how effectively you could look at it. It's
you don't want to see a gap fill?
It's basically a business that helps small and medium-sized businesses, even some large businesses, companies like Disney and Netflix, help manage their ad campaigns. And these are effectively ways that businesses can do so on their own without the necessity of larger advertising agencies. And that's the value-added component to Trade Desk Technologies. It's essentially a real-time back-end auction service. If you look at things like YouTube ads, there's an auction that's running in the background for targeted display ads that are in the real-time elements of their business. So this is an interesting technology, very value added, but it has been, suffering because we know that ad spending has been down over the past six
That's the right
quarters or
answer,
so.
Lords.
Nonetheless, they are expected to report
That
earnings,
is correct.
which are actually expected to be quite low, comparably speaking. 13 cents is the estimate. That's down about 38% compared to the same quarter last year at around 21 cents. But if you look at the sales growth, they're expecting about 16% growth at 364 million versus 315 million for the same quarter last year. Earnings estimates on a forward basis look very accretive, but the challenge is for Trade Desk, I think, is still valuation, considering it's trading around 55 times forward earnings, with sales growth that is expected to be higher by about 25% over the next year. So the growth on a forward basis relative to the quarter that they're about to report is expected to be quite a bit higher. We'll see if companies like Netflix, for instance, we know is a business that is moving into the ad space from the standpoint of subscription services. They may be very interested in the technologies that Trade Desk offers.
Yeah, and you wonder, how much business they're taking away, because this is one of those companies that doesn't rely, like Facebook. When advertisers come to them, they use Facebook exclusively, Google Alphabet also. This is one of those neutral parties that you can just upload your data into, so they can really pinpoint who they're advertising to, and it's been outperforming some of those other names. All right, thanks to George Tillis, Senior Markets Correspondent here on the network, helping us break down the trade desk. Kev, real quick, just give me your thoughts here on this before I come up with an example trade.
If this stock is a proxy for digital ad spending, then this chart tells you that digital ad spending is recovering, Tom. And that is something that everyone should watch or pay attention to on this name, Tom.
Yeah, over a 30% pop in that last earnings, and now we're back to those levels that it popped to. It hit 66.
Back to the low here, 410.80.
That earnings, but now trading back around
flush through there.
$65. So, Kev, I looked at something to the upside if this momentum continues here. So I looked at a strategy that would take advantage of that potentially. So going out to the really short term, so just playing in earnings.
For Happy Gilmore,
in the May
anything.
Weekly cycle that expires in just 2 days here. Buying the 65 strike call, that's at the money. And then selling 2 of the 71 strike calls, buying 1 of the 72 strike calls. So an unbalanced call butterfly to the upside. You're paying roughly about a $2.15 debit. There's your risk, $215 per spread, with the apex of profitability where you can nearly double your input or risk on this is at or near that 71 strike. Now, the option market's pricing in about $7.80 move in the shares.
Doesn't tell us anything.
Unbalanced call butterfly. It's a less expensive way to get into maybe a bullish.
This is where the price is happy.
Yeah, with the stock trading $65, Tom, this is basically an at
Finds
the
us as an
money.
OTC
So
stock. It's in chapter 11.
Spending $2.10 on this butterfly, but with a $6 call vertical and a $1 call vertical short, you've got your any move to the upside is going to be pretty profitable, Tom. Your break even around 67, right above that. So you do need some movement, Tom. Therefore, that's why you see the negative theta. But this is a bullish play long about, well, let's call it 13 deltas in Trade Desk. It's a low debit upside play here in Trade Desk, Tom.
Yeah, and above that $72 level, your profitability goes down a little bit, but not much on this particular type of strategy. And as opposed to buying maybe the 65.71 call vertical, that'll cost you about $2.50. So you got a lower cost entry point, but this is definitely a call butterfly. So you got some transaction costs, no commissions on that example trade. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the network. Next Gen Investing's up next.
Have another little head and shoulders here. We might get a flush through. Flush through the low. Hate playing the breakout. I'm gonna do it. California governor declines to endorse reparation checks for black residents proposed by California task force. Top here on G. What is bull flagging? Light on the head and shoulders, but like right at the neckline. Confirmation is a break of this level. I think it's starting to happen. I break down below that support. Bring NVIDIA and MU and all your homies with you. It. Go MU, look at you. Look at you, MU. So proud of you. Alright, SPY's coming down. From green to red once more. Dancing around the red today. Pretty big range though. Up on 1 o'clock margin calls. Now back to the support from earlier. Oh, getting a bit of a bounce there. Do it. All below that support. That's it. Turn it into resistance. Consolidation down here, and then I think we'll probably see a new low. Is pretty low on the 5-minute. VWAP short would have been beautiful. I grabbed it, I was just a little late.
So we're seeing that reflected today in the markets. But as always on the show, we'll kick things off with our upvote and downvote segment. Following that, we'll chart and trade those upvotes. Our FOMO discussion today is all things Celsius at all-time highs after a really strong first quarter result. Then we'll discuss Airbnb falling after issuing some soft second quarter guidance, seeing a double-digit percentage move lower in reaction to its first quarter numbers. Last but not least, we'll end the show on a bright spot, looking at Li Auto posting 97% top line growth and seeing a nice move as a result.
Yeah, so all of these names to close the show, from Celsius to Airbnb and to Li Auto, or post fundamental updates. But these are massive moves. You have Celsius up almost 23%, Jenny. You have Airbnb down almost 10, or actually over 10%, and you have Li Auto up 15% and some change here. So we got some big ones to get through towards the end of the show. I'm looking forward to all of those. Celsius has just been a stock on a mission for what seems like the last couple years, and continues that today. But let's start with upvote, downvote, not endorsements, not
inverse cup and handle.
Couple post-earnings looks,
not
couple
good for the IEP longs.
Previews. Let's start with some of the post-earnings movers here. Roblox on the move to the upside here, not keeping pace with some of those ones that we're going to cover at the end of the show. But big move nonetheless, let's call it 7% here to the upside.
Right, and this is one of those earnings events. That's exactly what we've been discussing, where we initially saw the numbers, we saw a lower pre-market reaction, and then we heard more from the company and saw shares surge. We've only seen that strength build throughout today's session. They did report first quarter adjusted losses that were steeper than the street had been expecting. Fell 63% on a year-over-year basis on revenue that did come in around $773 million. This was better than what had been expected, or was pretty much higher on a year-over-year basis as well, which is something that was also seen as a positive. Now, we also see the average bookings per daily active user coming in around 1170, flat with year-ago levels, with average daily active users.
If you're gonna hold up these levels, it is
over 66
good.
million. This was up
So
22% from the year prior.
Well.
Users spent on average 14 billion hours engaged on Roblox's platform. This was up 23% from last year, and the CFO highlighted something I think we could see a lot of strength attributed to this, saying that they are now generating very high rates of year-over-year bookings growth, so they can moderate their rate of investment in headcount and infrastructure, thereby generating some operating leverage. So they're able to now operate in a more efficient manner. Those are words typically that the street seems to like in this market, Alex.
Yeah, I think it's important because this is sort of the issue right now. Cost pressures are weighing on this company. If you were to circle something that's a little bit concerning, that's what it would be, especially developing how that's taking place as sort of an open source version of video game creation. Developer fees could keep increasing. That's going to weigh on margins as well going
Only
forward.
1 o'clock, it's still pretty early.
Looking for ways
I
to
could make a
offset
big
that.
move still today.
One thing that stuck out to me here on this one was that they're starting to actually get growth in some pretty key demographics. 17 to 24-year-olds, for
data
example,
tomorrow,
are picking up and growing on this. This is sort of a company
BPI
that
is
seems to
tomorrow,
have
which
targeted younger
could move it
demographics
just
in the
as
past.
much.
Now expanding that casted net, I think, is important.
BBB even?
Will be fun
BBB
to
even
watch. Just want
moving?
to see where it goes. Going to say downvote though today. News is
It's
out.
the
Reaction is
barcoding.
taking place. But a positive day here for Roblox investors. Next one, not far here to another video game creator, Electronic Arts, EA as we know it. Sports game maker is how I always think of it. Not so positive, but very close to sort of what we were looking at yesterday from a trade illustration standpoint. We were looking for unchanged. We basically got that.
We did basically get that. We're not seeing losses now steepen on the day, so I think a 1.5% move lower, not necessarily a huge day of selling. I'd say in this market, relatively speaking, that is pretty much unchanged at this point. They did report, though, better than expected earnings results, and the company said its latest FIFA game has outperformed since its
melting
release.
down here.
They did report their March quarter adjusted earnings of around $178 per share. This did slightly exceed street forecasts on adjusted revenue that came in around $1.9 billion, also slightly ahead of forecasts. Now, for the current quarter, the company did give an adjusted revenue forecast calling for revenue between 1.5 and 1.6 billion, which was pretty much in line with what the street had been expecting. And the CFO highlighted record live service performances as well as increased engagement, and driven by some of their most popular franchises, naturally that being FIFA. Also seeing some strength in their Apex Legends game, which also did exceed their expectations for the quarter. They also did say that Star Wars Jedi Survivor had a very strong launch last month. This was not able to excite the street, though, because we are still seeing shares lower in reaction. This name has been, like we talked about this yesterday, Alex, somewhat boring on the year because it's just relatively unchanged now year to date. So all things considered, we're not seeing, like I want to point out, steep selling, but it was not enough to get investors excited about a name. It's been pretty lackluster all year long.
Yeah, pretty big run up off the lows of a gap down earnings last quarter. I think that the the market kind of sniffed out this report, it seems like, because on the surface, it is a fairly strong, modest report here at the very least.
GME bounced off VWAP
modestly lower.
at 2082 up 2.8%.
Optimistic on this name. It delivered mostly
it's in the game. You don't get it.
Sort of the buy the rumor, sell the news situation. You're going to say downvote for this one as well. We looked at it more closely from a trading and chart aspect yesterday, and with a 1.5% reaction. Not really much to update on that one. So we'll move on to next one here, which is Disney. This is going to be a big story. Okay, this is a big name, really important content creation name. Lots of different stuff that it's touching in terms of movies, to, of course, video games, to, of course, streaming now as well, toys, everything you can think of in the Disney world. This is a big-time entertainment company, and we're going to hear their earnings.
We are going to hear their earnings, and there's a lot going on with Disney, so I completely agree this is a really important one, considering the fact they have right now a writer's strike, the feud in Florida, which has been ongoing. We also did get some news earlier this week that we were seeing the Guardians of the Galaxy latest installment do quite well at the box office over the weekend. So there's a lot even more to digest with Disney than their quarterly earnings, but they've staged a pretty solid financial recovery within most of their divisions, some of those being their theme parks as well as their theatrical entertainment. Meanwhile, though, their streaming business has slowed and continues to face headwinds in their traditional media businesses as consumers continue to cut out cable and advertising revenue then plummets. Disney Plus is still not profitable, and that is not expected to change in this upcoming quarter. We are expecting earnings per share around 89 cents on revenue of just over 21 billion. Disney Plus total subscriptions are expected to come in around 163 million. And on Monday, Disney did expand its federal lawsuit against Florida Governor Ron DeSantis, accusing him of doubling down on his retribution campaign against the company by signing legislation to void Disney's development deals in Orlando. So we'll have to see. Obviously, that's an ongoing story, not necessarily the news you want, though, as a shareholder. Additionally, the company is already seeing some rippling effects from their ongoing writer strike, which includes the shutdown of some of their Marvel Studios productions, one of those titles being Blade, which was set to begin filming later this month. So production woes is also a big problem, because if you have an unprofitable streaming business that's slowing, and then you have some of your bread and butter areas of your business that are starting to face hiccups, frankly, Alex, that's a little bit concerning. So I do think that Bob Iger came into this company in a very challenging macro landscape, and I will say he's done what he could. I mean, he's done layoffs, he's given so many letters to employees as well as shareholders, assuring that they are on this path to profitability in their streaming business. But
you're going next week,
outperforming on the year,
Disney World,
16%, down 6% over the last 12 months, and up 20% now from their 52-week low. So we'll have to wait and see, because second quarter earnings out today. I think a lot rides on the narrative from Disney.
Yeah, and I didn't even mention the parks, of course. That's going to be a big part of the story as that comeback continues. But, you know, I've always thought with Disney Plus, you know, how many times can you rewatch the Lion King or some of these old movies? Like, it's a nostalgic subscription. Many maybe kind of
that's what I'm wondering about. If we still have the same cycles, no TC,
and others, but I don't see what's getting, you know, someone in my demographic to want to join Disney Plus. I just don't get it. Mandalorian's not doing it for me. So to me, you know, Netflix is so much of a different target demographic than Disney. This is a very family-oriented subscription, and it's going to fit that need, but it's not going to get everyone. And so I'm curious to see what their plan is to get more growth going forward, because it is basically screeched to a halt in terms of growth. Going to say upvote, though. Big earnings report.
I just slowly melting
I'm
down.
interested to see what Rick has to say from a chart, because it's $100, and it seems like it's been $100 for basically every day I've looked at this for as long as I can remember.
I completely agree. Disney Plus, I did unsubscribe to because I was one of those Verizon users, but I do subscribe to Hulu and ESPN. So I guess
I think I have all of them, but I don't know if I've ever clicked on Disney Plus.
You've got to trim down your subscriptions. ESPN is the one that I probably watch the most of them all, but I guess I am then contributing to Disney's streaming business by subscribing to at least 2 of their 3 subscription services.
Which is ESPN the most?
Now is Trade Desk, and this name up 2.5% on the day, also up 47% this year. I was shocked by this chart.
Where were we at on that prediction, Ace?
Today we are seeing Zacks estimating top line
couldn't
around
send her
364 million,
like jerseys and stuff in the mail.
16% increase on earnings of about 13 cents per share. This would be a 38% year-over-year decline. Now we're seeing the company has beat earnings at least 3 of the last 4 quarters, missing once but delivering an average earnings surprise of around 9% on average. The Trade Desk's top line growth in the first quarter is expected to have been backed by the significant growth in digital spending, primarily driven by this shift from linear TV to more premium alternatives like CTV.
Jenny's favorite
the company is expected to
platform
have
was
benefited from
ESPN.
its growing adoption of its unified ID 2.0.
I think that's what I heard.
As well as
She's
CTV and
pulling
shopper
a fast
marketing.
one on us again.
Companies like
I'm gonna
AWS,
say that Sims is the
Snowflake,
most
Salesforce,
popular
and
EA
Adobe
game.
have activated this
Using their
UID2 on their
Jedi
platforms.
mind tricks on us.
This feature does allow advertisers
She's
to
smarter
match
than
their
everybody.
customer data with accuracy
Where's the
across
Spy
the internet
Flash?
more efficiently. So per
We
the
love the day
company,
on Spy.
During the reported quarter, the
Or
company
10,
did
11.
also introduce
See
new
that.
software that helps advertisers more easily onboard and activate some of this first-party
40982.
data, which is also expected to be seen as a benefit when they report.
Kind of a little support.
But this name, just the consistent outperformance of it really shocked me. I mean, it's up
Barbecue
still
gonna start
50%
inversing.
over the last 12 months, which is frankly really rare when looking at a lot of names on a longer-term basis to see that outperformance that's still relatively held in this name, Alex.
Yeah, this is a serious growth company and a pretty important part of the market.
Not a whole lot of levels
Advertising.
really
It's
until
going
408,
head-to-head with companies like Meta
43.
Platforms and Alphabet.
Here we go.
This is one to watch. It carries a huge multiple. The street's not surprised at the success of this company. You're basically paying for big time growth if you're trying to become an investor, and that's always been the question mark.
Barbecue
Just
did
how
get a little
much are you
volume
willing to
there.
pay for it. But I'm excited for
A
this
little
report.
tick
I think
up on the
there's
RSI.
macro read-through. It's going to give us a pretty good idea the strength of the digital
just
ad
wicked
market
down
on top
there.
of what we've heard from Meta and Alphabet and the like. So this is one that I think would be overlooked, but I've heard it on like every show so far today, Jenny, so I don't think it's going to be.
I don't think it's going to be either. I think looking at the chart definitely got me excited about this name that I would have also said would be overlooked. So we'll be diving more into our upvotes, those being
Barbecue,
Disney as well as Trade Desk, both
1955.
looking at charts as well as some example trades ahead of these companies' quarterly earnings. Stick around. Next Gen Investing. We'll be right
What
back.
do you think that CBD? A wick down on Spy? What you gonna do? Not gonna follow through, huh? Maybe not. I'm gonna close it short. Tempted to go long, but I'll just wait. Might be a nice long though. Voting 58, 415%. Oh, Spy's gonna keep coming down, it looks like. Be just a little consolidation flag. That was a little more fleshy on SPY. Turbo coating got a little volume there. 58.15% still. Alright, about to make a new low on the day. Oh, he did, never mind. What? Yeah, new low on the day for SPY, 410.07. Barber coating gained some volume. Looks like it might want to make a move up. Like versus SPY at times also. There you go, NVIDIA. NVIDIA.
Pretty close to that point anyway, so that's about where the market is could expect things to go if we break to the upside.
Yeah, and Rick, I like that you highlighted that short term we are still seeing somewhat of an uptrend, but longer term we are still looking rather negative here, especially if you zoom out and look at a longer term picture of Disney and where we of course once were. But then when trading this name, Alex, considering that we have been in a short term uptrend, we are also lower on the day. Walk us through a more neutral leaning strategy.
You know, I kind of joke that I just keep feeling like this stock has just been $100 and that's just what it is continually being. And while that's not entirely true, it's sort of chopped around this level. Everything that Rick just showed me on the chart showed something that looked like it's converging around $100. And so if you're kind of taking that anecdotal thoughts that I had, combining that with sort of counteracting forces, you talked about some of the political and legal issues.
No, I haven't seen the new Guardians Galaxy.
Some of the souring sentiment around maybe its streaming services, but a comeback in parks. All of this just seems like
I liked
a lot
the
of okay news,
the
some
first
bad
one,
news, some good news,
but it wasn't like
maybe just sort of
I cared really to see in theaters
reaction.
necessarily.
So kind of
Just
following
whatever.
that line of thinking, I have a strategy that's going to benefit greatest.
As far as like an
from
epic
nothing.
Marvel.
A move at $100
or-
where this
yeah.
thing just seemingly always is. And so what we're doing is we're going to sell that 100 straddle. And
I
we're
can
going
see
to
it
define
again,
the risk.
wow.
We're going to buy $9 wide wings. The reason I did 9 and not 10 was just simply to get the $5 even credit, make it a little bit easier here. You can change that, make them narrower, make them wider. It'll slightly adjust that risk to reward relationship. It'll adjust your break evens. It'll change the credit received. But it's a neutral strategy. $5 credit means between 95 and 105 at expiration, this one stands to be potentially profitable. But as the risk profile will indicate and highlight and illustrate, it does best for a move right to 100. So as the day's gone on, this actually kind of started to drift towards that level. It's a big round psychological number. Take that for what it is as well. But you can see this
New low
thing
of the
peaks
day
out
there on
with a
SPY,
potential
410
max
even.
profit of $500 if it perfectly pinned at 100 at expiration. Not the most likely of occurrences, but a possibility. Most traders with this type of a strategy would seek to, at some point prior to expiration, take off at the very minimum the short strikes of this trade for a debit price less than $5. That is that would be how they
409.87.
capitalize
Broke that
on this one.
410.
That's going to be, of course, dependent on the secondary market and, of course, the reaction post-earnings. But looking for a very limited reaction in earnings, or at least, in the end, an unchanged move. This thing can go wherever it wants as long as it finds its way back to 100 before the end of the week.
Which, historically speaking, seems pretty likely considering the fact that, like you said, it's been sort of stuck in that range. But now, a different name today is Trade Desk. And Trade Desk has seen a completely different story this year, still outperforming up 47% now on the year. And Rick, on a year-to-date basis, we're only about $1 off of our highs. Now, when you zoom out, we are now still, down about 14% on a 12-month basis. But all in all, a name that has consistently outperformed this year. And I'm no technician, but I can see the clear uptrend we've been in.
Yeah, and this is a name that perhaps you should be a little excited about heading into earnings. Look at these gaps that have been formed during past earnings events here. Huge moves upward. The last move upward that we had took us above the 66 level. We managed to squeak out some intraday highs above that level today, but we're not on pace for a close above that point. So 66 is still an important point to watch. But just beyond that, the chart has been looking pretty solid ever since we started trending upward from these lows in late December. Kind of just
basically
grinding
hit
out higher and higher
real
highs.
close to my line there for
with the
0982.
exception of this extreme
Probably
move
look to
up
enter
that
some
we had
shorts to
during
hold
earnings
overnight
that faded
on
very
the
quickly.
futures.
We
They usually don't.
saw some
Well,
support around our moving averages.
or
Our yellow
aftermarket
21
close.
day has been supportive for much of the past few months here. But a mild rising wedge type shape where we have a steeper trend line going across the lows, a more shallow trend line going across the highs and converging toward each other. We're moving beyond this volume node here, this area of particularly heavy trading, around the 62 mark or so. So that could suggest we could see some fast moving prices if we continue to break upward, given the lack of trading history in these areas between about here and maybe 73 or so, right around this area. That's where we start seeing some trading once again. So RSI, our measure of momentum, had been looking rather stagnant here. Not a lot of big swings or big moves in it. We kind of just were gradually, as I said, grinding our way up higher and higher as we progressed from our last earnings event here. Today, though, it looks like we're making a move to the upside in the RSI. So the overall read is that it's looking a little bit more bullish heading into this earnings announcement here. So some levels to watch. The 66 level, like I mentioned, that's an important one because it represents the intersection.
I think a Zelda game release is going to make the
and our red dashed line there that represents the highs from our last earnings. So a break beyond there could be worth noting. The 68 level also stood out to me because that was the point where we had this gap open up from the earnings in August, as well as that's around where price topped out there as well. So that could be another interesting place to watch for some potential resistance. Support, look to the 21-day EMA once again, our yellow line here, coming in around 62.40. Below that, look to the bottom of our pattern here, this lower trend line that's roughly around maybe just above the 60 level or so.
Yeah, and Rick, I do think there's a lot to be excited about here, and thank goodness into this earnings event, because I feel like earnings events have become a little bit lackluster just based on some of the negative price reactions we've seen so far in the last several weeks. We will leave it there. Appreciate all the technical insight, Rick Ducat, our chart master. So Alex, looking at this name, given the excitement we're seeing from a technical front, the outperformance of this name this year, walk us through what you're thinking and leading more bullish into some of the optimism we have seen over the last 12 months.
SPY flush through there. Dang, I missed that.
This earnings cycle, names like Meta, names like Alphabet. These are kind of key companies within the same realm that this company generally operates, which is digital advertising. And so say you're optimistic, say you see huge upside here. I got a bullish strategy that's looking for a move that outperforms the market maker expectation for that one standard deviation move. We're looking at buying the 75 call calendar. So the beauty of this is it can be adjusted. You got a different outlook or price target or time frame. Great. You can completely change this around and adjust. There's single dollar wide strikes. There's so much to choose from.
It's still flushing,
I went in
man.
and chose 75 because it was just below the
I don't want to be shorting into this though.
Like last August around 76. So say that acted as a potential support level.
There's some
you'd
big
be
minute
just
candles.
below that where it started bumping into those supports. But so looking at here, the 75, of course, is the best point for this on the risk profile front. The risk on the trade, of course, is the debit spent. So 35 cents is going to be $35. The other nice thing about this style strategy is while it can be low probability in the sense that you have to be correct in your assessment of what is going to happen with the stock, because of that, it's a relatively low debit or a low risk in terms of notional value. So maybe a high likelihood that you're just wrong and this isn't going to be profitable, but because of that, it's a relatively small dollar figure
their support
that's at
flushed
risk.
through.
So
Wow.
speculation and risk go hand in hand. Of course, on this one, you got to be right. That's always the key takeaway for these, Jenny. But the risk profile does a good job. Apex of profitability at 75 gives it a lot of room.
Dang,
But
bummed I got
if
stopped
this
out.
thing went like 3x
Over trading it.
move and like exploded to like $90, well, it can overshoot to the
Been
upside.
a clean trend down since
Right, and of course, that's
12:30.
always something to consider because we have seen these outsized moves in reaction to earnings. But that does it for this segment. Also important to keep in mind for both of our example trades today, multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to look at the nice move higher we are seeing in Celsius shares today, up 22% in reaction to its quarterly update at new all-time highs.
Next level is a
today's
major
session.
one. Just pulling down a lot of stuff. Yeah, it looks like it's going to keep going. 408.43. Bounce is going to be pretty nice. I try and play the bounce. Or 901, buys down 0.46%. New low of the day, 408.99. Yeah. GME broke down below VWAP. That's what I was concerned with, holding those GME calls just with the market. We'll see. I mean, it could bounce back up tomorrow, I guess, but they weren't moving enough. They were too far out of the money at 22s. Not a whole lot of time. But before I had closer to the monies and much more time, and they didn't appreciate much at all, so.
Quarters. They missed 3 out of the last 4. Now, earnings actually declined, as I mentioned, despite a boost in first quarter oil and gas daily output to 1.22 million barrels from 1.08 million a year earlier. Here you can see on the daily time frame how they're nearing some key support that we've seen in terms of Oxy as they've come off, very similarly to what's been going on with crude oil, both the WTI and the Brent. Now, Occidental not only increasing production in the first quarter of this year, but also increasing their expectations or guidance for year end by 20,000 barrels of oil. Now, again, crude oil, though, back below the 50-day moving average. It's been struggling. Brent crude averaged $82 a barrel in the quarter, up around down around 20% from the year earlier levels. And that's tied to weaker economic conditions, China, some of the banking crisis in the U.S. here. You can see, as I mentioned, it is below the 50-day moving average. But take a look at Oxy here, and you can see, again, getting back to that daily time frame, as we saw before, shares touching this curious support around 56 here. They're also below the 50, below the 200-day moving average. You can see the study on the bottom, RSI, also exhibiting some weakness, so source supportive of what we're seeing here in terms of price. I did see that, let's see, the company repurchased 752 million shares of common stock. Now, keep in mind, this is a Warren Buffett favorite. He did say over the weekend that he wasn't going to seek full control of the company. That was one of the kind of speculations we heard going into that shareholder meeting over the weekend. But Buffett currently owns around 24% of the company. He said, though, over the weekend that, well, his quote was that we've got the right management in place. I want to point out, in terms of crude oil, well, again, it's been coming under pressure, as mentioned. Part of what we're seeing in terms of Oxy, it's not a proxy to shares of the company OXY, but again, here you can see this was that war on Ukraine spike high, and when Oxy was doing very well, and many of these petroleum companies were doing well, and here you can see the decline in price since, and that's going to weigh on shares. It has. But yeah, a bit of a disappointing report here again, and as mentioned here, Jenny, it looks like 3 out of the last 4 now investors have been faced with these, circumstantial results.
Right, Ben. I would say 3 of the last 4 misses, and also compare these earnings of $1.09 to last year when they reported over $2. And I think that speaks to the fact that we have seen these declining prices in crude oil. And I think, like you said, not a proxy, but it's hard not to make the comparison that this company was facing relatively difficult year-over-year just comparisons, given the fact that we have seen this fall off in crude. It's the story of the giveth and taketh. This name was up 130% last year, and now is down over 4% over the last 12 months. So really interesting story. We'll leave it there. Ben Lichtenstein, the host of Futures, now to bring back in Alex. And it's time for FOMO, and we're talking all things Celsius, Alex. And I have to say, there's very few things in life I'm an expert at, but the energy market might be one of the energy drink market specifically might be one of them, less the energy market. But when it comes to Celsius, I do know this name is up 223% over the last 12 months.
Look, this is a company that is becoming extremely popular.
Your coin play was working out until I started flushing.
Of marketing and advertising, as well as
I guess it's up from yesterday still.
Right now.
Oh, back to green.
We talked about some of those new up-and-coming kind of running shoe brands doing a lot of the same. But Celsius has become basically a nobody in this market to a key player in very short order. If we could pull up a 5-year weekly chart when we get a chance, it'll really illustrate this point, Jenny. But this is, again, on fundamental news. So they report their earnings, and the street just is gobbling it up here today.
It is, and this is also a name that has marketed its target audience so well. They've been all over TikTok, Instagram. They found these influencers that are then promoting their products. So this name has exploded from a chart perspective, but also exploded in popularity. You'd never even heard of Celsius a few years ago, and now it is one of the most popular energy drinks really out there. And up 22% today after some really strong first quarter results. They said their first quarter revenue increased by 95% year over year, driven by strength in North America. And the company's top line results did come in ahead of what the street had been forecasting pretty sizably. Revenues in North America specifically more than doubled on a year over year basis, while their first quarter earnings came in almost double what the street had been expecting at 40 cents per share. Gross profit was up 111%. And Celsius did say they are continuing to further transition into PepsiCo's distribution system. I think this is genius because so many of these companies right now are highlighting the fact that they are having major supply chain woes. They are having labor issues. So this company is somewhat offsetting those burdens on PepsiCo, which we know also saw a really strong quarterly report just a few weeks ago. Their CEO and president did say in the United States, Celsius is now the established #3 energy drink brand in their category, being a key growth driver over the last 52-week period. Their share in the energy drink market as a whole for 4 weeks ending in March 26 totals about 7.5% of the overall market share, which more than doubled from the year ago period and demonstrates Celsius warrants increased distribution and availability. Looking ahead, they also have plans in place to further leverage their expanding distribution and continue to build out their global brand. So really strong remarks from the CEO and president. I think the chart also backs that we're seeing this company only gain interest among those energy drink consumers. I have to say that as a Monster drink lover myself, I have been recently on this Celsius kick, and I kind of understand the hype. When you have a 2 p.m. Celsius, it really wakes you up, Alex.
Yeah, I got to be careful, otherwise I won't sleep. But what I will say is not only do they advertise on the channels like YouTube, like podcasts, like TikTok, they're partnering with the creators. So if you're a consumer of that content, you oftentimes will consume content from creators that you like. And if the content creator partners with these brands and you're a fan of those content creators, just increases the likelihood that you're going to give those new brands and new products a try. That's the beauty of what this company has been able to do
Archer
from a marketing
appreciation
standpoint,
hour.
navigating the new world that we're in and
Owl
doing
Archer.
so effectively. Also, combine that with the general message. From my understanding, this is an
little bear
energy
flag
drink
building
company
here.
that is doing so
back
perception-wise, maybe even truly scientifically-wise, in a more healthy manner than some of the traditional energy drinks. So at least that's what they're trying to say. And in a more health-conscious world like we're in today, a more fitness-conscious world that we're in today,
397 to 404.
it seems like that's delivering a product right at the right time.
It is, and they do market themselves very much as like a pre-workout beverage. They also highlight the fact that they have more natural ingredients. I'm a little bit of a doubter when you are a zero-calorie drink how natural the components in your beverage could be, but they do have things like green tea extract, which is definitely at least easier to pronounce than some of the ingredients I read on the Monster can, which I couldn't even say. It's very chemical heavy, but they do definitely market themselves well, and I think that has really paid off. I mean, now also the fact that we talked about this name just several years ago and you could hardly find one. I remember you were like, I've tried one, I had tried one. Now they're absolutely everywhere. So a lot to be excited about in Celsius today. Walk us through what you're thinking for an example trade. I definitely think the feeling of FOMO, especially when you look at that 5-year chart, is to the upside.
Yeah, I can completely understand if a trader is looking at this, new all-time highs, continues to move higher. Maybe this is not only from a brand perception standpoint, reaching kind of escape velocity.
I don't think they're sponsored by Celsius.
The chart itself, but I also am a little bit cautious when it comes to names that are just making giant moves, expecting those to continue. And so at a 22% rally today, I think it's okay to be bullish a stock in a neutral to bullish way if you even want to participate here after a huge move, new all-time highs. You're certainly not buying it cheaply here at this point, so keep that in mind. So what I looked at was just simply selling a put vertical below the market here, Jenny, allowing this stock to ease in to these new price levels. And it's not
below
one
the
that's been
day on
immune
SPY.
to volatility in the past. I mean, that chart that we just had up illustrates that there's been downswings in this stock. It's just been able to come back from them. So bear that in mind as well. But selling a put vertical in June, the 125, 120 put vertical. So this is a little bit below the market. Not a ton. For a stock that moves around as much as this one, this quite easily could be tested not once, not twice, several times over the next month. A trader with this type of a trade illustration is simply looking for it to ultimately be above this price level the closer we get to expiration and capture some of that decay of these options over time, assuming that were to happen. For $1.50 credit, the break even would be $123.50, and $350 would be the total max loss. That would be if the stock was below 120 through the June expiration. These options went through assignment and exercise offset for that full $5 net of the $1.50. It's profit defined, it's risk defined. This is a strategy that is simply asking Celsius to just go sideways. Don't even need more upside. Hey, upside's been enough. just hold on to the upside.
This name now up for 6 consecutive sessions, up over 32% in that period.
Order to
seeing a
close
really
it.
strong run and seeing that only hold with this
That
earnings.
level.
So really, really promising chart from Celsius today. Now coming up next, we will look at Airbnb, seeing a completely different reaction to its quarterly update. Airbnb shares are down 11%. We'll discuss more why we saw some weakness following its quarterly update coming up next.
Yeah, barbecue's a little tired. I hadn't until this show. It's not very popular, I don't think. Falling into start of June, regardless of price, regardless of the chart. Cycle low saying we dip. Should end in a month at the beginning of June. Mosmus, he's talking about the SPY overall market, I think, not necessarily barbecue. SPY starting to bounce, maybe. Gotta slow down my trade. I'm just losing profits through this chop.
Time for under 30. We are looking at Li Auto, also seeing some strength on the session, now up almost 15% in reaction to its quarterly update.
There's a nice upside from here. Oh, BBQ, how I love you. Got time. It's 147. Should be some good end of day moves, I'd imagine, with volatility we've had so far. Just be patient. Noise. Well, that's good. Yeah. Don't force a trade is definitely a good one to go by. SPO kind of bull flagging. Microvast kind of came down from that high. SPY starting to bounce back up. Is that volume? If we get a double bottom, we'll retest for an entry. GME bouncing up with it.
deliveries in their first quarter. So here to tell us more on this move higher in Li Auto, I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, do you think this was enough to be excited about? I mean, 15% move, clearly the street saw something they really liked in this report. I have to say deliveries seem to be the focus here.
Yeah, I mean, deliveries, if you look at them, they were up over 500% for Li Auto, and it's not just today's move. In fact, if you look at Li Auto in the last year, the stock has significantly outperformed the other two Chinese manufacturers. The ones we've talked about, the ones that are most prominent, NIO and XPEV, those are both down over the last year. Li Auto is up about 40%. It's actually outpaced even Tesla. So this outfit is doing something right. I think if you look at the delivery numbers, up over 500%, the expectations also for next quarter on a year-over-year basis up over 170%, with top-line sales growth at over 60%, which is actually about 30% higher than even the highest automaker out there, NIO, which is also expecting about 40% year-over-year growth. So something's going on with Li Auto. They also beat earnings and, of course, top-line sales growth for the quarter that they just reported. Even guidance for the remainder of the year is actually very promising. So if you look at this company, I think the stock price really reflects the fundamentals. The fundamentals are respectively very sound on a comparative basis to the other automakers. In particular, the Chinese automakers, both XPEV and NIO, are not profitable on an adjusted basis, where Li is profitable. So I think this is a case where you're looking at an automaker in this instance that is profitable. They are growing faster than their competitors, and they're achieving scalability much faster than, like I said, those other two competitors. And I think that's why shareholders in this particular name are being rewarded versus the others.
Couldn't agree with you more, George. For me, this sounds like the athlete that's maybe underappreciated, but just a hardworking, actually getting stuff done, getting the victories. Maybe not as flashy as Rivian, maybe not as cool as the Lucid vehicles, or even getting as much press as NIO has gotten over the years. But this company's delivering 55,000 and some change vehicles or 52,000 in the quarter. I mean, there's actually consumers driving these vehicles. It's not some concept and plan for the future. They've already turned the corner, and they got Tesla in their sights. They're not even looking at these other companies
still
anymore.
moving up.
That's right. I mean, just think of the numbers. I mean, they reported over 50,000 units for the quarter, and next quarter they're expecting between 76 and 81,000. And I think at the end of the day, you think about some of these other higher-end auto manufacturers. Let me use Rivian for example. Ideally speaking, we talked about this company, and their operating losses are just immense. And their products may be more of a novelty, I would say, versus something that has more use value. I know that all these electric autos and trucks are very useful, but you also have to think about pricing points. And I think if you look at Li Auto, it's not on the higher price spectrum of the EV market, and it's growing impeccably well. And so I think that's why it's being rewarded. Plus, like I said, it's growing profitably, versus Rivian, like I'm just using that as an example because I know we've talked about it, we're all familiar with it. Their operating losses are immense, and they can't even cover their cost of goods sold. In other words, they have negative gross margins. You look at Li Auto, it's positive, and on an adjusted basis, they're positive in profit. So this is, I think, a story where you're seeing, the athlete that's working really hard, getting rewarded, and it's paying off for this particular company versus its competitors. So if the EV space is growing, you want to be looking for companies that are growing faster than competitors, but also growing profitably. And I'm picking this name out as one of those on a relative basis to those other competitors we talked about.
George, it feels like in this market right now, some of these names that are fundamentally solid, we're really starting to see really come across, much more. We're seeing the earnings reactions at least be much stronger than, say, the companies that have some balance sheet issues. Yeah. So you're saying Li Auto is one of these companies now, because I think in the back half of this year, we're going to see some of these names emerge as names that are just fundamentally doing far better than some more speculative names. Like Rivian, you pointed out the fact that it's still losing so much money, the fact that there's still concerns over its production. You believe, though, that Li is now here looking more solid in the second half of this year?
I do, and it's not just my opinion. I'm not giving my opinion here. If you just look at the price performance of the chart over the last year, before this earnings announcement, the stock has been higher versus the other automakers, which are lower. Now, you do see, of course, big moves in automakers like Rivian, higher on certain days, or even XPave, they may end up going higher by 15 or 20% in a given day, but that's going to be a counter trend, short-lived rally versus a move higher in this case for Lee, but it's coming off a trend that's already moving higher. So typically speaking, the gaps that are higher post earnings on positive trends are the ones that typically and statistically hold water. In other words, they may continue higher. So that's just something to keep in mind if you're looking at it from a trading perspective. A lot of times we'll see these stocks move higher double digits, but a lot of times they're short-lived because the financial fundamentals just aren't there. And I think that's not the case here for Lee. I think that just looking at the fundamentals on a relative basis, they look better than their competitors. And I think that's why the market seems to agree with that thesis, because the performance of this name versus those other stocks in mention is quite a bit different.
Yeah, and a nice breakout from the chart today. We've been pretty much stuck between $21 to about $25.50 in the year to date, at least, as you can see there. Relatively
yeah, didn't get any move up with
jumping as much
Vivian's
as
earnings
$29 a share.
rally.
Really solid here for Lee Auto, but we'll leave it there.
It still looks nice though.
The insight, George Tillis, New York Markets correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next,
I'm sure some sketchy stuff about it.
With Nicole Petalides.
Though with that cheap of a share price, I mean, they're not in compliance for one. BB barcoding. Barcoding. 1960, 426. We heard that price before? So. Oh, there's a pop. 1975, 5%. 1980, 5.32. More poppy. Still waiting on this thing. 1999, 6.3% for barbecue. There's 20 cents. What do you mean they appealed? Good volume in the last 5 minutes also. 2010. Looking to see if it rejects here. Oh, it rejected. Oh, they appealed. So they asked for a suspension or something? It's still melting up. $2 p.m. margin calls. You don't think the SPY will climb back to VWAP? Just because what, this resistance right here? There's a successful RSI divergence on the 5 minute. Actually played out. 20 cents on barbecue, 6.38% positive. Appliance plan. The volume on this candle? Weeple's volume's kind of broken. Or this, maybe all OTCs, I'm not sure. Look on E-Trade. Last 5-minute volume was, oh, going up through 40. Oh, Weeble is actually a little bit delayed. E-Trade showing 2040 right now. Weird. That could hinder my trading on it. What the heck? Not like that delayed though. Or maybe it's just like frozen. Yeah, this is frozen. Just get like frozen data. It's at 2030. Annoying. Definitely can't trade that on Weeble. $16. Yeah, see all these dead candles? Blank. There, just woke back up. That's why it looks so spastic. Ah, it's just Weeble getting the delayed feed. All right, it's the same as E-Trade now. I'll keep an eye on it though. But sometimes it just goes crazy, I think. Catching up. 2025. 2020. I'll keep it up on E-Trade too. I'm watching them. Yeah, I can see time and sales here. 100,000 trade at 2001. $100,000 at 20. Yeah, it's live again. It's exactly with E-Trade now. Just kind of, it's a laggy data there. Oh, I have 1.65 million on this 5-minute candle on the E-Trade. Webull showing 751,000, but I think E-Trade's probably right. It's 1.65 million. I don't know why you're seeing 20 million.
$22 from $289. It keeps a buy rating. And just as I said, NVIDIA is the leader in AI graphics card market. that is definitely part of what's got this stuff
Buy still moving up here. Glad Archer didn't get his short.
I mean, it's an incredible performer. There's no doubt. Thank you for all of that, Renita.
I wanted a long, but
thank you.
I was over trading.
Now let's take a look at the bigger picture. David Scranton's with us, founder,
Thank
CEO,
you, still where it's headed.
Strategies. Thank you so much for being with us. So the CPI print comes in. It was below the 5% mark. You know, there was talk the market would take off if that were the case. But look, you're still seeing inflation higher than the Fed would like it to be, and even we're still areas, you know, used car prices, shelter, even though shelter's coming down, it's growing at a slower pace, right? You don't want to have high rents and things like that. What are you watching for? Now we got the CPI, now we're waiting on PPI. What are we learning?
Well, there are things that are lumpy when you start looking at the inflation numbers, right? And you know, we've had some, last summer we had some 0.0 month over month, some 0.1, some 0.4s. Beginning of this year has been a little hotter until last month. March was actually, again, 0.1, and this month is back to 0.4. So I think if you blend it all together, maybe we're at 0.25, 0.3 month over month, which gets you to about a 3, maybe a little bit over 3% annualized inflation rate. And yes, it's not equal to the Fed's target, but it's a heck of a lot better than we had a year ago. And, you know, here's the reality. We knew that the costs in shelter, for example, were going to continue, right? That there was going to be a lag time before those increase in rental prices start to come up. And now we're finally starting to see that as people's leases come due.
Weeble's lagging against 2014.
So, and that's why people are feeling squeezed, because their personal incomes went up last month over month by 0.1, but the expenses by shelter and used cars and things like that are up
2016.
So we're coming in the right direction, not as quickly as everyone would like, but you know, it's certainly a lot better than what we saw over the last year or so.
Yeah, understood. At this point now, as folks are still certainly fighting inflation in their own way, whatever way it is, whether it's gasoline or
going between 20 and 2014.
Buying cars, well, used cars in particular.
2019.
Now the Fed will have a decision to make in June. You know, most people think there's going to be a pause, but they have the right to raise, and they seem pretty adamant about
2014. It's right a little higher.
By the end of the year.
2009. I was back to where this is.
Adamant that they weren't
People just sticks there, and
I think
hope it goes back there by the time it refreshes.
Before he raised rates, said we're not even thinking.
It's like you never even knew.
Thinking about raising rates, and it was a matter of a few months later, and they started raising rates. So
long puts on the video.
Salt, but you know, here's the reality. They're trying
2011.
to show that they don't have any fear about what happened with the regional banks. And they're trying to blame the regional banks. But in reality, and I know that's old news, that's kind of back in March now, but the reality is the Fed alone almost single-handedly caused that. They know it, we know it. And they don't want to have another banking crisis, which is going to cost them a lot of money. So I think, you know, giving another bump to rates to show confidence was more of a psychological thing.
Okay, now Weeble's
okay, now if we just stay level for a while,
again. Look, you can see the gap here. Let's see.
Digest all the interest rate hikes we've made so far. Will they lower before the end of the year? It really just depends on the economy.
Right,
and the
exactly.
banks.
And so they say and the banks, I'm glad you mentioned that, because, you know, they say they're data dependent and seem pretty adamant about not cutting. But to your point, something like the banks, look, we seem to have, it's been quiet the last couple of days. We've gotten a breather after all that volatility last week.
Climbing back
so
up.
What do you think?
Wow.
What's going on with the banks? Are we sort of in
Read too much for this chop. The long was a nice bounce, though. Almost back from red to green.
Well,
huge range today on this buy. Negative 0.5%. Now it's all the way back up, flashing green.
They're a little more protected. They're going to feel it. So what you had is some problems with some of the weakest regional banks.
Yeah, Weeble's delayed.
Regional banks are having issues. And look,
that's what I'm telling you guys. 2011, still kind of hanging out right around here.
Cost to the Federal Reserve a lot of extra money printing and stimulus.
It's not delayed. It's just like lags.
On any large scale. So they definitely don't want that. But even raising rates a little bit more, where some of those regional bank stocks come down and it drags the stock market down, even though technically the stock market is not the Fed's mandate. Let's face it, when people see their portfolios drop and they start to feel less rich, if you will, they're not going to spend as much. So you can actually create a recession through depressed asset values. And the Fed's also aware of that. So yeah, I think they're going to try to stand pat for a while. barring any inflation numbers that get significantly worse. But I think if we see month over month anywhere between 0.1 and 0.4, I think they're just going to let it be for a little while, which is really the right thing to do.
Yeah. Look, you know, we had everybody, we had a triple whammy. We had, you know, a bear market for stocks, for equities, for cash.
What's up, 20 cents?
Home values went
That's
down,
right.
as you said. I mean, when people don't feel like they have money, they stop spending, and that's, you know, what happens right there. That's how you get that recession. I mean, if you have a bank failure or the debt ceiling, that needs to be resolved as well. Our nation's reputation is at stake, right? And that too, if it's not solved sooner than later, that could be detrimental.
Well, yeah, but I think that's kind of a congressional sideshow. Most serious market participants don't think that we're going to default on our debt. Even if we go to the stage like we did years ago of shutting down the government, shutting down some functions, it's only short term. So I do think that's more of a sideshow. Long term, very long term.
The market sold off during that time.
Sure. And see, that's the issue. Right now, we've been in this narrow sideways trading channel in the market for a while. And it's because nobody knows whether they want to go right or whether they want to go left. And in part, those are some of the things that are going to determine it. You know, do we get more regional bank failures? Does it bleed into the larger money centers? Do we see the Fed the government starting to shut down?
Look at this rally out of the dip.
Risking default. Or do we see inflation jumping up where the Fed's got to hike more? You know, those are all things that are going to determine whether we break out on the downside or the upside. But what I can tell you right now is
1985
if you don't want to be 100%
barbecue
in the portfolio, but you feel like, hey, you know, bonds have never been an alternative. I mean, bonds look the most attractive now that they have in about 16 or 17 years. So it's a great chance for somebody, if they're a little concerned about which way we break out, but they're overloaded in equities, maybe it's a great chance to just lighten up a little bit and get a decent rate of interest. You know, I think about 1980, right? Nobody wanted to buy long-term treasuries because rates were going up. You don't want to buy bonds when rates are going up, right? But in retrospect, if you bought a 30-year treasury in 1980, you would have looked like a genius for the next 30 years. So I would encourage people not to forget about bonds.
Sure. I mean, in the 70s and 80s, when we saw rates, you know, I think in the late 70s it was 12%, the 80s was up to 18% or so. It was unbelievable when I was looking at the Fed funds rates. And so with that being said, you said not to be all in on just equities. What kind of equities do you like, and what kind of fixed income bonds specifically do you like?
Yeah, so, you know, with bonds, going out a little longer term right now, 10 to 15 years, again, nothing wrong with that because we're close to the end of the tightening cycle, I would think, than the beginning. So I think that's important. Investment grade is better. You could pick apart some double Bs if you really know what you're looking for, and get some great opportunities in double Bs, frankly. It's always where the sweet spot tends to be. But if you don't have that ability, sticking to investment grade is important. On the equity side, you know, I like, for all kinds of reasons, things that are high dividend, that are more value-based, that can pass additional costs to inflation through to the consumer and not necessarily squeeze the company's bottom line. And I like that because should we break out this narrow channel on the downside, the higher dividend value play should give you a little more protection. If we break out on the upside and inflation is still going and the economy is growing, then at least I want more of that inflation to be able to be passed through in price hikes for the end consumer and not hit the bottom line profits of the company.
David Scranton, great to see you. Sound Income Strategies. Thanks, David. All right, later this hour, the CEO of PubMatic joins us to discuss the company's latest earnings. And we will hear a bullish case for oil and gold. Our panel reacts to the latest AI developments. We're learning more from Google's press conference today. We'll delve into that. And
barbecue, come back down, 1985.
During the transition to clean energy, we'll explain. Stay with us.
Let's walk through charts, one of the most commonly used features on Thinkorswim. Start by going
12% for Turkish bonds. Yeah, you see the inflation? Yeah, I've traded R2K, I just end up trading the ES over and over. Looks like Weeble's keeping up now. I'll keep an eye on E-Trade though. If it starts to delay, I'll just move it over.
For its latest earnings miss, and Dutch Bros missed on revenue expectations, but reaffirmed its outlook for the year ahead. JP Morgan downgrading this name to neutral from outperform, $33 price target. And GoPro shares have fallen to a new 52-week low. The company beat revenue expectations in its first quarter report, but missed on EPS. GoPro announced a new lower price for its Hero 11 camera. However, analysts have cut their price targets. Wedbush now has a $6 price target. Morgan Stanley has a $4.50 price target. All right, here is the latest on Bitcoin and where we stand there. 27,495, down 1% today. Let's welcome in our next guest. Mark Newman is with us, CIO, founder, Constrained Capital. Thank you for being with us. So we got in the CPI. What was your interpretation? What do you think the Fed is thinking here?
Well, first of all, thanks for having me. Great to see you again. When we spoke a few months ago, I think it was mid-February, we talked about stagflation. And I think that continues to be the theme. Basically, we have things like AI and robotic automated workers, so to speak, which is a headwind to growth plus a bit of a debt overhang. And then on the inflation side, prices are sticky. They're not going to come down as fast as they go up. They went up, excuse me. And so I think that we're in for this sort of tough sled. And as we talked about a few months back, there's no real central bank defense in policy for a stagflation environment. And it seems to me that this CPI number, again, remains somewhat stubbornly high. Sure, it's coming in a little bit, but high 4s, 5% area, that's still a big number to contend with for the policymakers.
Yeah, without a doubt. And you said stagflation is still pertinent here, and even with the raising rates and the trajectory that we saw over the last 15 months or so, as fast as it was, it still definitely has not put things back down near their target. In the meantime, what's your advice to investors, particularly with bond yields jumping the way they've been?
Right. The interesting play here, look, stagflation is not easy for policymakers, and it's really not easy for investors.
Break up a little. I mean, it needs volume to move, as we see here.
Yield on
low volume, we're just going to get back into barcoding.
Or shorts up at 4%, 5% is pretty attractive compared to what is historically, around 7% for equities, let's say. There's a lot of risk in owning some of those equities, so it's a tricky environment here. When I think about stagflation environment and I look back in history a little bit to the early 70s, that was a period where, commodities and value and dividends and real flows, real companies did better. And so I would seek out those kind of investments and definitely a little bit more on the defensive posture. I think one of the things that should be wary for everyone is the narrowness of this advance. And it's sort of, I wouldn't say petering out just yet, but there's a real concentration in big cap tech. I think, I don't have the data in front of me, but I think the S&P returns the year to date are like maybe 80-90% attributed to 4, 5, 6 big tech stocks. And that's just a narrowing in the advance. And I think that that's something that people need to be wary of and caution, and a little bit of caution. I mean, Apple seems to be a safe place to be, but at 26 times forward, is that really, worthwhile? I wouldn't call it such a growth stock based on the past numbers, but there's a lot of people hiding out there. So I would be very nervous and cautious on the narrowness of the advance at this stage.
I understand. Okay, so we've been in this trading range. You mentioned short-term yields as one opportunity, and you mentioned energy, and we see energy, and you had specific names like Chevron and Nextera that are on your radar. And would you be putting a position in now or next week, or dollar cost averaging, and for how long would you be holding these?
So I think that these kinds of names are going to be instrumental in the transition to whatever the future of energy holds. I continue to say, you can't get to the future of energy without present energy. And Chevron is in a position where they are obviously a fossil fuel company, but they are also a pretty much a leader in sort of geothermal. So I think that's a place to keep an eye on. It's got a good dividend, it's got a good cash flow. And with the oil prices as low as they are now, I think we're near
coming back down here.
All these value type names.
Up on 230.
This is obviously a nuclear leader in the utility space, but they're also quite a big player in the batteries and solar and wind and storage area of renewable stuff. So I think that as people realize we need these kinds of companies to forge ahead to the future of energy, they've been maligned for a long time, sort of in the sort of woke shame area of shunning nuclear, shunning fossil fuel. I think there's sort of value at this point, and I would want them as a piece of my portfolio going forward to at least provide some balance and, real cash flows.
Why are they? We're talking about all energy.
Companies that everyone knows.
Typically Nextera right now.
Right, understood. So what about growth names or AI or, the favorite FANG names? Any of those, are they of interest to you?
So as I mentioned before, the narrowness in this advance is concerning to me. I look today at some of these tech names trading at very high fundamental levels. And again, everyone is sort of hiding out in these sort of as the safety, the perceived safety trade. I mean, look, when we had that banking crisis in March, April, everyone flocked to the big cap tech. And I think they deserve a piece of a portfolio allocation, but they are very, very crowded at this stage. And if, when I look at, let's say, short interest of 0.73%, less than 1% of the shares are short in Apple. So to me, I think everyone's piled into that name, and I've got to tell you that I didn't think their numbers reflected incredible growth. In fact, I saw some data in the iPad and the Mac area that showed negative growth. So I would just be a little cautious in some of these big cap tech names. And yeah, you mentioned AI. I think that is now a buzzword, a buzz phrase for a lot of companies to sort of get people excited. Like in the past, we had blockchain. Long ago, we had, the .com type addition to the ticker or to the business model. I think AI.
No, if you have a drill, you can drill down.
Hey, look at us. We're going to be in AI, and it's garnering some interest in the short term, but I'm not sure.
I'm not really listening, but
medium, longer term.
That's the idea, I think, with geothermal in an area like the United States.
Got expensive again relative to the market, for sure.
Interesting thoughts there. I mean, Apple, as you noted, you combed through those numbers. And buzzword, AI, I mean, I agree with you. And we've heard a lot of that on the company calls during earnings. That is definitely a catchy one, like blockchain was. We had companies that were changing their names to something blockchain something, right? Just so they could have that in their title. Mark, I know what you're talking about. Mark Newman, wonderful to see you. Constrained Capital, thanks for being on with us today. Coming up, The CEO of PubMatic joins us. The company's rallying on its earnings, and we will dive into those numbers next.
SPY still going. Still climbing up to VWAP. Barbecue 1988. Climbing up more. Microvast. Still holding up alright, 40%.
Globally, we launched some exciting new product capabilities.
Look at GTII with the move.
Area, product called Activate, which helps buyers bring more
bouncing off of that
spend onto
$1.
our platform. And the industry is also consolidating. So we're seeing, a couple of companies,
right at that
major
prior
ones
support.
like Yahoo exited the space,
107.
announced their exit earlier this year. A few others that are closing, and at the same time, we are not only growing the
And
top
engulfing
line,
now on the
also,
daily.
growing the bottom line, and so we feel like we're really well positioned for when ad spend growth reaccelerates, which inevitably it will, at some point in the economic cycle.
Yeah, and we've heard that.
Might be a nice long here.
Like, while they had, even IAC, they did well in the last quarter, and the MGM stake helped, but they did say the ad market remains weak, right? IAC's up 14% today. So, I mean, it's there, it's growing, it's happening, and it's undeniable that people are quitting cable as we know it, right? I mean, what kind of metrics do you have? Because I have friends now who say, oh, I don't have regular television, I only have this one or that one. And that's right in your wheelhouse, isn't it?
Yes, that's exactly right. And what we see from a consumer perspective is the majority of TV consumption has now moved to streaming as opposed to traditional linear. So consumers are getting obviously more and more comfortable not only with cord cutting but also shifting their TV viewing appetites. I think we've also seen in the last 6 to 9 months, pretty much every major streaming provider launch an ad-supported tier. So that's companies like Netflix, as well as Hulu, Warner Brothers Discovery, NBC with Peacock, Paramount, so on and so forth. So that ad-supported tier, particularly as the consumer is under pressure, is gaining in share, it's gaining in popularity as consumers cut back on not only the old cable TV subscription, but also their premium priced non-ad supported streaming. And so that's only going to grow the inventory in the ecosystem, and that creates a lot of opportunity for us. There's no doubt that the current economic environment, there's a bit of a mixed bag with respect to ad spend visibility, but we know from past economic cycles that ad spend growth always comes back bigger and better, and particularly in digital. And so we feel like we're really well positioned to continue to capture market share when that ad spend growth reaccelerates.
So watching TV the regular way is now in the minority. You said most of the majority of the people who are watching TV are actually streaming, which is a very interesting development. I hadn't even realized that. Anything else you might want to add on that? Because I think this is where we're going. I know you have some great partners. You have an addressable market that continues to grow to the tune of $65 billion and probably growing. I mean, talk about some of your partners in this addressable market. As regular folks who watch TV, gone are those days.
Yeah, absolutely. So we've got a great CTV business now with 237 publishers on board. And just to give you a sense of who some of those folks are, we're working with 6 of the top 7 smart TV manufacturers. So these are companies, like an LG, for instance, who obviously sells TVs, but also have big businesses in the streaming space. 4 of the top 8 fast or free ad-supported TV providers in markets like Japan and Australia. We're working with 5 of the top 5 in each of those markets, broadcast video on demand providers. So we've got a big chunk of the leading streaming providers on our platform. We also talked about an expansion with Fubo TV in our latest quarterly announcement. And then we're also doing a lot on the buy side. So we launched a new product called Activate to help buyers move their CTV budgets into programmatic monetization, which is right in our wheelhouse. And our launch partners there are Group M, which is the media buying division of WPP, the largest agency in the world, Dentsu, Havas, Mars, the candy and confectionery manufacturer. So a lot of great growth in CTV, but that's only one part of our business. We've got a great online video as well as display business. And another key part of what I think shareholders are reacting to is the profitability and the cash flow generation. So this first quarter, which is seasonally the slowest quarter in the advertising business, we generated $5 million free cash flow.
You missed a move on SPY.
And so
that's big old V there.
Really excited
back to VWAP now.
Yeah, well, they're certainly showing
GTI woke up
13% now as we speak. Rajiv, go out.
And not a whole lot else. Barbecue bounced back up to VWAP.
Talk to you soon.
We're going to have to go up this resistance.
Pubmatic. Thank you.
Thank you, Nicole.
Still ahead in the second half of our show, our panel will check in on the developments
BST
of what's going
kind of
on.
came down.
Google's AI press conference. So we will get the very latest there. And as we head to break, take a look at some winners and losers in the S&P 500.
Got a meme I'm going to play for you guys. It's like a inverse cup and handle. Essentially happened on IEP. SPY breaking through VWAP. Wow, wow, wee, wow. Go. Too loud.
Welcome back, Brad. It's your investment.
I'll take mean banks. Invest.
Invest.
Your investment, Julie.
I'm going to do some research first.
Well played, Julie. Well played.
You can do research? Investing in banks is not a game. Always do your research before making an investment decision.
Of course, it's a DRS plug at the end. What else are they going to stand for? That's the only cause. Anyways, that's pretty funny. Finish cashing out a bill. Nice, well done. $176, $180. Yeah. Try again tomorrow? You scale out some more tomorrow, or what do you mean try again? I want to take the short here. I don't think it'll necessarily come down much by close though. Probably just an after hours move, so maybe worth it just to wait until futures market opens back up. Not doing overnight, or not doing over whatever. This balance, shoot, man. The thing is, that's why I think it was like a punch card, the trades, because if you keep trading in and out, then eventually you're gonna get to the point where you're not gonna believe it even if it's happening. So you don't want to trade it because you've been just sucker punched, and the market cried wolf so many times you just don't believe it. Basically, that's why you gotta be careful how many times you trade. Just at least for me, that's how I see it. Because then I'm so hesitant. Emotion, I can't take so many. There's only so many times I can emotionally enter and exit. But we did good today. The futures, regardless. That has been a nice bounce out of there. Barbecue 19.99. It's not showing on Webull. On E-Trade though. $19.90. We'll probably update on there. The good news from IP's investors that we have Carl, the liquidity, the strategy, and the know how to fight back. It is a nice little flag on the 5-minute. I know, I saw it. I'm just cautious on short-term TA with lack of liquidity on an OTC stock. Longer time frames I think are going to serve us better. But you're right, it does look like a bull flag. I see trade. All right, yeah, just don't overtrade it. Don't get married to it. Just because you had a good trade on it doesn't mean it's always going to treat you well. We get this emotional connection to stocks that we've made money on. PayPal? I definitely went on PayPal. Just like broke long time lows. Might get just an overreaction bounce. But I wouldn't hold that after that bounce. Broke multi-year lows. 2020 lows. I mean, you're back to 2017 on this thing.
Lows around 17. Here we are. Look at this right at 19. Now, I did want to point
breaking
out,
up here,
taking a step back from
now.
where we are right now relative
Plus
to last
22%
month.
on the day,
Where we are
or
relative to
0.22.
last
That's
year's
crazy.
high. This is the war on Ukraine
Big
spike
swings.
that we saw back in March, if you remember, where we traded up to 36.50. Now, these are the futures. I want to point out here again that here we are again around 19. So a reflection of investors really focusing on the positive, discounting the negative, but a market that has been definitely enjoying gains, to say the least.
Trying to be out of those calls.
I had some of that more information I was talking about
much invested.
All right, Ben, like
those risky of calls.
Appreciate it. Good to see you, Ben.
Rather put it all in a bankrupt company like barbecue.
And for that, we're going to welcome in David McElvaney, CEO of McElvaney Financial
ripping there.
Companies. Thanks for being here. I gave a little preview. I said you are bullish on gold and oil. So start with oil. What is it that could drive the price? Right now we're seeing oil $72.50 the barrel.
Yeah, it's a complicated story, and I think this is where I
Barbecue
look at the
maybe
year
waking
end
up a little
as the place where we're most positive. In the immediate, there's certainly pressure, and that's on the demand side. What we love is the supply side on a longer-term basis, and think that we're setting up for great entry points. So
I
we
just broke
continue
through
to
that
see
level
a
to the
move
upside.
towards recession here in the U.S., and is still a lack of follow-through in terms of a return to normal in China.
Still an IBRX?
So even the import numbers, if you're looking at Chinese data, not particularly impressive, and it's you can see why
so well.
a lot of the commodities, the industrial commodities as well as oil, are suffering.
Flag
And
up here
that's
on the
not gonna
daily.
stop within a short period of time, but I think by year end the demand issues are largely cleared. Supply becomes more
Bet this will
of
probably have some pullback
a
though.
motivator for prices to move higher. So I would be looking at positioning into that weakness.
Barbecue 1998.
Okay, so and as we see more of a demand or more of a change and
You're
things
at
move
IPO'd,
higher, I mean,
also
where
the
does
stock
OPEC
price.
fall in? Does it matter? Is it
Just
more
kidding.
of a demand story?
There's 20 cents on
I think that's the
barbecue.
demand story right now. It definitely is a demand story. I mean, look at where we're trading now. We've got OPEC talking about their most recent round of cuts, gave us a little bit of a rally, and now we trade well below.
Well, the more days we hold up this level, the less likely it is we're going to fill that gap.
Of the market's response to OPEC. So, at this point, it really does have to do with global economic activity, U.S. economic activity, Chinese economic activity, and to the degree that we're sort of stuck in the mud, you can expect to see oil trade.
Turn off my emotion, just get back into that long, even though I kept getting slapped on it.
Gold, glittering gold, which really hit some new recent highs. It's
a
always
massive
been viewed as a safe haven and it played that role to a certain extent recently. I know it's pulled back some, but still above
2005 barbecue.
Right now.
Yeah, it's flirting with a breakout, and 2070
break of here. I mean,
we kind of look at both the commodities and the currencies.
22
and
cents,
so 2070
maybe
would take us to new highs, a close above that, and I think you're looking at sort of a new golden era.
Might be looking for a dip by that
those
on this
numbers.
thing
We
tomorrow.
Can start to contemplate 2400 on the gold price.
I was
even
thinking
by
that dip buy would be
the COTs,
lower,
the
but
Common of Traders reports are not particularly
it's holding up
constructive right
today.
now. So I would suggest that you've got
After
some
yesterday's
consolidation,
momentum
which
shutdown,
is possible. But as we look further into Q3 and Q4, I think that's where you've got not only the dollar unable to hold the 101
double
level,
top maybe here on
but I think
barbecue.
ultimately that takes us above that glass ceiling, if you will, at about 2070 on the gold price. And now all of a sudden, I think you see imaginations run wild.
So 2,300 on gold, that would be something. What was your target on oil for year end?
Yeah, in the 90s.
In the 90s, yeah.
90s on oil, end of the year?
When it comes to the other metals like silver or platinum, I mean, you could, put copper in there. Do you like all
No
of
demand
them, or
destruction.
is gold the standout?
Straight up
Or would you play in some
bullish
of the others
oil.
as well?
I think probably one of the most compelling growth stories as we get to gold in new territory would be silver. You know, gold tends to be a little bit like the engine of the train, silver a little bit like the caboose. If we get a breakout on gold, all
2010
of a
on
sudden
barbecue.
the gold-silver ratio, which has been hanging in the 80s, this is just
Break
take
here
the
could be
price
pretty,
of gold, divide by the price of silver, how many ounces are equivalent. It should be trading closer to the 60s. And in a really aggressive metals bull market, that can trade into the 30s or
The volume
40s.
picked
Again,
up
I'm
a little
talking
bit
about the
in there in the
ratio
last few
between
minutes.
gold and silver. So you can close the gap this year, trade above $30 an ounce for silver, which would be constructive. But I think we see new highs in gold, and 2024, you've got silver back to $50 an ounce, maybe even threatening those old highs. So I think for a more speculative position, silver becomes pretty
Kind of wanted to short there, but I'm gonna leave it.
All right, thank you for that. Interesting
I'm gonna leave
indeed.
it.
It's good
Get
to
my
talk
capital
with
for
you, David. Thank you.
bankrupt
David
company.
McElvaney Financial Companies. Still ahead, we bring in our panel to talk all about AI. Today is a big day for Google.
2008 on barbecue.
Underway. We'll find out what's
Connell says there will be an eventual agreement on debt limit. GG, Gary Gensler said a U.S. default could cause deep and lasting damage to markets. Cost of eggs has come back down 32% from its peak. Still high though. Barbecue kind of rejecting. Like it might be actually double topping. 1990 there. Friend? I have no idea what's going on. Buy hand on VWAP, barbecue, double topping. Huh. I like consolidating up here. 1990 on barbecue. 5.8. BTII hanging out up there. NRGB looks pretty nice. It's coming up. Yesterday? Yes. Beats on EPS. 0.01. Misses on revenue. This is that like Gravity Energy System company, one of them.
Obviously, these AI announcements, I would say, are expected. You know, if anything was going to come out, you know, today, it's going to be all this stuff. But it is also reactionary, right? Microsoft announced most of this stuff also last week, and a lot of it's already starting to roll out. My question, of course, is how soon does Google actually get this to market? It's one thing to announce plans, and them integrating AI into Google Sheets and Documents and all their online tools. I think it was, like I said, expected. It's just, when is that going to be coming? Is this just planned, or is it something we can expect in the next few months? Because Microsoft does have a lead here right now. That said, you know, Google owns a lot of this market, especially in search. And the latest numbers from Statista and others show that, you know, Microsoft really hasn't gained anything in the search market, even with Bing Chat. So I think Google still has a lot of time here to sort of win over the audience and integrate things. But currently, they're still a little bit behind where Microsoft is, and I think are playing catch up. So I think we want to watch when this stuff actually starts to roll out to people. That's going to be a bigger story.
Yeah, I mean, they're talking about the cutting-edge AI-powered tools, also conversational elements that are being put into that. And Jim, isn't AI just such a buzzword now? When you look at some of these charts and what you buy for clients, is that something that they're asking for, and how do you appease them and make sure that they are getting what they want?
It's a great question. So we do not have a lot of clients that are demanding AI, but you know, this is a trend, and obviously we want to participate in this trend. There's been some discussion about you know, that
the barbecue flush
S&P is just too mega, you know, cap
flush
weighted.
the barbecue
like,
down the toilet.
You know, the performance here is so different than all the other constituents, but it is a trend, and we go through these trends, and we will continue to go through trends. And so it's just an interesting environment where, you know, we got a lot of people talking about recession and slowing and inflation, and we have this AI race, this boom. And, you know, those people that are early to market, that can build out, the big players, they're going to benefit from it. So we certainly want to make sure that we have exposure here.
And back up.
Yeah,
Just a
and
wick
right
to be
now
well.
we're seeing, I'm looking at a tick by tick on my computer, and I'm seeing Google moving higher. In fact, it's at the highest point of the trading day now, is basically saying, like, don't write us
6
off.
more
I mean,
days.
there's a resurgence of Google's AI vision, and that they could, in fact, really, you know, be a leader somehow. Maybe they've been underestimated. But I have to say, while Microsoft has also been at highs as well, right? But it is pulling back a little bit in the past few minutes. Daniel, who's going to be the winner here, and why does it matter?
Oh, I think it's consumers and enterprise. That'll be the winner here, right? I mean, Google has its market with search where it's dominant, and they're going to just continue to dominate there. Their online office tools pale compared
Barbecue
to where Microsoft
1951,
is.
1980. It's kind of flashing back and forth on each trade.
So that's going to benefit a lot of people
Just
as well.
the liquid,
question,
wide
course,
spreads.
is how is this monetized? We don't really know that yet. We do know it costs a fortune to actually run these AI models on these big supercomputers and servers.
Stop losses, market orders.
How do these companies pass on that cost to consumers and enterprise without
CTI holding up good.
And also
This one
delivering
looks nice.
real value here? And that hasn't really been answered yet.
Engulfing candle. I mean, it's
really
kind of
interesting
enticing.
to see where this goes and its effect, of course, on jobs and the
One of
economy.
you guys were asking about it this morning.
But we're just starting off there.
Yeah, it doesn't look good.
Quickly,
Boom, out of
we've got
nowhere.
a minute left, Daniel. I'd like to hear about the products. I think people will want to know what might be hot. You have the
Barbecue,
Pixel Fold,
1951,
the tablet, the Palm 2. Tell us.
1965.
Yeah, so Pixel 7a just announced $499. Still a little bit more expensive than Samsung's device, which, Samsung dominates the market here. I think they continue well, but the Pixel 7a is going to be a great value for people. I used a Pixel 7 myself and love it. They also announced a Pixel tablet, which was announced last year, but is now coming out. It's a really interesting device. Imagine Alexa.
The OTC is actually
device, except you could just
being
pop
traded.
off the stand, and now it's a tablet that runs all your Android apps, and you can share it
Based
with your
on
family.
supply and demand.
And finally, yeah, the Pixel Fold is
Like all
coming
markets
out
are supposed
as well.
to.
Still going to be very expensive.
There is something bullish in there, and retail buys in.
Look for the
Then yeah,
trade-in values there
maybe we
to
do
drive
rip
pricing
from
down, which is something that Samsung did.
something that is heard.
Foldable displays are going to
court
be a big
hearing.
thing going forward, and now Google's jumping into it. I'm very excited to try that device myself.
Great to see you both. Daniel Rubino, Jim Warden, thank you. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me. Keep it right here. The Dow is down 143.
Yeah, new high there, 137. Barbecue, 1926, breaking below VWAP. $19.11, $19.10. Someone turn the hose on the barbecue. Someone turn the sprinklers on. Putting out the fire. Barbecue's getting all wet. Up 1.6%. Google announces $1,800 folding phone. The Pixel Fold. We were just talking about that earlier. That is neat. Pixel Fold. Google's entry foldable phone for $1,800. Dude, I can't even imagine spending this much money on something that I drop and break all the time. Like spending $2,000 on a glass ornament in your house, but you don't put it on a shelf, carry it around with you, constantly pulling it in and out of your pocket, Bring it up near your head. Touching it. Why haven't they started making phones durable? Oh yeah, because they sell phones. They don't want to make them durable. They sell phones. Anyways. It's pretty nice. Why buy one? Following literal years of rumors and leaks. We love pixels. Oh, I like that small form factor when it's folded though. I miss small phones so much. It's short, it's not very skinny though. Get the full wraparound. 5 cameras. Wow, it wants to keep going, man. Look at this. Barbecue 1920. 0.3% in the green.
High beta risky trades are actually trending lower off the highs of the year.
Any of you guys like foldable
without
phones?
A lot of leadership.
Or have one?
This is very important. The QUAL
That's not a
ETF
razor.
I'm using as a benchmark here for
That's been
quality
sitting in your door for
companies. I think it's
15 years.
a pretty good way to do it. Their system basically is a filter for cash flow.
I want new highs here.
Maybe dividends if possible, but consistency of profit and cash flow being a big one.
Might
So
even
you
take
are going
it.
to get some of the big mega cap companies
Hour
in
push,
there.
why not?
And then SPHB is your
I
high
might say
beta
it won't.
category of companies that swing big to the upside, swing to the downside. It's a mix of super high growth tech, think like ARC style companies, and there's also some energy stocks in there that are very swingy depending on what the commodity does. So they're two very different types of groups. And it's important to realize that quality companies right now are the ones winning out. Now that's even with stocks like Nvidia in the high beta category that have done very well, but ultimately quality stocks like Microsoft, Apple, Visa, Home Depot, Eli Lilly, and Costco are what drive the quality basket, and that's the one that is generally leading on the year. So that's important because we're really starting to see pretty clear separation on earnings from companies that are doing poorly and companies that are all right and have been able to weather a pretty brutal storm of the last couple of years. Now this is where things get kind of interesting. Because when you throw inflation into the mix,
BBN?
you can really look at it from two perspectives. One is
Yeah,
that inflation
NTNX
is
looks nice.
well above the Fed's
Like this
target,
chart.
and that means that we're either going to
An
have
RSI
to hope
divergence
that inflation
off the
actually
bat.
goes
Bullish
down from
MACD, green
here,
over
or
9.
means the Fed's going to have to keep
A little
interest
bit of
rates
volume
elevated,
picking
or
up.
maybe the economy is going to slow down. 2 out of 3 of
The
those
gap down there,
paths to lower inflation are generally not good.
Below the 50 moving
There's a lot of
average.
hope right now after this morning's print, which came
Definitely in
in
a
at
downtrend,
4.9
but
instead
this
of
might be
5,
reversal here.
that inflation's going to naturally cool on its
Maybe,
own.
maybe.
As a
Eyes
result,
moving
we
up.
saw the dollar drop early in the morning. We
This
also
is the
saw
way.
yields drop and bonds rally. But then throughout the session, things
Go
got
on,
a
go
little
on.
mixed
There
because
you
the
go.
dollar actually firmed up here, and yields continued moving lower.
Oh,
That
there's
happened
gonna be
as the
documentary.
stock market rolled over. We had a pretty big fade earlier today, with the S&P 500 at one point at just below 42. We got down to 41.12. As the stock market faded, bonds rallied, so it looked like the fade in risk assets, which also included Bitcoin, by the way, as Bitcoin dropped from 28.
I mean, I suppose if it actually has a short squeeze, it might be.
Kind of a chunky intraday sell-off. We had this risk-off move,
Oh.
and bonds caught the bid, but so did the dollar too. So this is where things get kind of messy here. Because if this market were trading off inflation data this morning, with the dollar higher and firming up, you might think yields would push higher, but they didn't. So stocks just kind of lost their footing. Risk assets lost their footing, and bonds caught a bid.
Waited this whole way to take
That
it
is
long.
what you would expect to see if there were a big concern about the debt ceiling. You'd see bonds rallying, you'd see stocks selling off. That's what we saw in 2011. But of course, if this market were rethinking the inflation data and worried about inflation, then you probably have yields up, you probably have the dollar up. So right now the picture is quite mixed. So without a lot of major clear direction, we're for the most part still waiting. I think it's also interesting to point out that airlines, the Jets ETF, they're down 1.5%. There is a little bit of soft trading in some of the reopen category today, like hotels, airlines, some of the consumer services stuff, which generally has been the strong point of the economy. It's possible that perhaps softer inflation's going to imply a bit of a slowdown in some of the reopen trade. This is a market that's really trying to balance the goal of getting inflation down with the knock-on effect of potentially a slower economy. And then you throw in a debt ceiling. Right now, it seems like we're somewhat paralyzed still because all these levels we're familiar with. Roughly 3.5 on the 10-year to 3.4, around 4,200 for the S&P. Tech is trying to carry us higher right now, so we should probably focus our attention there. Talk a little bit about the latest.
Barbecue 1937.
In the world of artificial
Little move back to
intelligence.
VWAP.
Unclear if it's our world or a new world, but this is obviously the theme right now. And when you have the NASDAQ powering forward, we have
There's a little break on SPY.
You know, the good thing, I guess, is that this isn't like the blockchain metaverse hype, Renita. It's kind of like a more grounded, like product-based hype right now, because we're kind of already seeing, you know, some of the AI stuff work its way into actual technology.
We have, and so some of those announcements that Google made today at its I/O conference about AI being able to be integrated into some of its products, we've already started to see happen. I can say I use Google Docs a lot, and I've already seen the suggestions come through for different kind of language you could use. You know, that's kind of been around for a little bit though, but they're saying they want to enhance that along with a ton of other features. Google is releasing several new phones, one which they say will be the thinnest foldable phone, the thinnest foldable Pixel phone on the market right now. It'll have 2 screens, and it will also be a 7A Google Pixel phone or an Android phone that they will have be like more of a budget model. And Google, it just released a ton of other things today saying that it will be able to use AI to enhance the user experience. Right now, Google Maps is also going to have an immersive view, and its AI-powered search engine Bard has new features, and Google has also removed the wait list from being able to use it though. But something interesting happened at this event. They called out Apple for not being able to support the group chat. You know, they say that whenever you text an iPhone, if it's iPhone to iPhone, it's blue. I forgot you don't have an iPhone.
Exactly.
iPhone to iPhone,
I'm the one
it's
who
blue.
screws it up.
Yeah, thanks a lot, Oliver. But they
How about
say
y'all
that
just
they
get
hope,
WhatsApp?
Well,
or,
he said,
you
so
know.
the CEO of Apple has been asked about this in recent times, and he said, buy your mother an iPhone.
Right.
You know, so
I would buy her a foldable Pixel.
you could do that now since they're a whopping $17.99. So how's that for a Mother's Day gift, right?
That's the foldable Pixel?
That's the foldable Pixel Fold.
Jeez.
But if you want to get mom a tablet, one of those came out today. They're $4.99, so that's a little bit less. But this company really did lay it heavy with all the new AI tools and the new products that'll have something AI in them as well. That's why the stock is rising today.
Okay. Well, it's not the only tech name. I mean, Alphabet's definitely doing some heavy lifting here for sure. Amazon's right behind it though. So obviously there is a pretty broad kind of big cat move happening. And then there's also companies like Akamai after earnings. We got Kev here. Where's Mr. Hanks? There he is. Kev, I mean, you look at this market today.
15%.
You look at this market. Part of me feels like the AI is kind of the latest hype train, but at least it's a more like legitimate hype train than the metaverse stuff or the blockchain disaster from a couple years back. So, do you look at this and see a market that's maturing possibly? Are we settling into like a real kind of post-COVID groove here without the burden of inflation now? Is this as Goldilocks as the market's making it look like?
Well, it certainly seems like some of the overall level of implied volatility is starting to burn off this market, Oliver. Some of the things that cause this, generational high implied volatility for the last 48 months or longer is starting to dissipate from this market, and you know, a slow grinding up market is starting to do its damage on the overall VIX levels. And you and I have talked about this for a while. You know, the worst thing you can do right now is think that VIX is unbelievably low, because historically it really isn't unbelievably low. It's still actually above the all-time average for the VIX. Now, it's extremely low for the last 2 years, and we all understand that. And if some of those things were to
melting up here,
implied volatility can still go higher. But as you get towards Memorial Day and into the summer months, if these markets slow down without some big risk-off story,
that's a good point, Cameron.
Energize it.
Thought about that.
Volatility could go extremely lower, and it.
Breaking above that little thing. I had a long. I got stopped out of it. Didn't stop out. I closed it.
News flow
got scared.
And it's amazing to
Seems
me.
stupid to take the long here when it's done this huge move. But
typically
a little bull flag.
When that is just simply not the case.
It is
going. Over the last 2 years, but not historically. So if you think implied volatility can
I think we will see
lower than it is now, show me a nice.
Yeah, I don't know what percentage he's not able to buy right now.
We don't get to guarantee things,
but there definitely is a certain percentage that aren't. It seems like
than it is right now, and the news flow, especially in some.
So I don't know if it takes a couple of weeks.
I think this Google I/O developer conference
to transfer from one brokerage to another. They don't even have to do that. They can just put money in a new brokerage.
Reacting, it was just up 5%. It just softened here slightly, but
it's been almost 2 weeks since we've been on OTC, right?
Frankly, Oliver, that needed good news.
We went in on
it's being attacked on
Wednesday.
many fronts.
Yeah, it's been 1 week.
Lately,
1 week today.
I think that's pretty good news for Google Alphabet. And
so
this
people transferred first day OTC.
Bring back some old stories of low implied volatility. We'll see. Subject to change without notice.
To transfer.
Implied
takes about a week.
Can absolutely go lower than it is.
Yeah,
right
that could be a catalyst for more price action. 1880 on barbecued. Break even on the day now.
We got down to 15.5. Right when we
started
the
moving
month
up.
May. So to your point, you know, they tried to knock the stock market down this afternoon, and boy, it just sprang right back. So I think bears are feeling a little bit nauseous right now after the
if they have cash, those brokerages
carrying the market like this. Even Bitcoin took a hit.
Yeah,
came
that's
right
true.
Back.
I'm just transferring
so,
from the brokerage.
Plunging over the last hour. I mean, plunging.
I mean, the quickest would probably be just to transfer it to your bank.
Thanks, guys. Renee DeYoung, Kevin Hanks.
And then transfer that to a new brokerage.
She's the head of options at Piper Sandler.
Barbecue, little flush there, down 1.6%, 1850.
Bank risk on our radar early on. So I know you'll give us the straight shake here, Danny, because this market, I admit, does look like we're seeing quite a bit of progress on certain things. AI more legitimate than previous hype trains, I think. You know, probably still a hype train, but better than blockchain, better than metaverse. You got inflation that's improving. It's not good. It's still 4.9, but it's better. And even the debt ceiling. I mean, isn't that at least more familiar than people storming a Capitol? Like, is markets trading it like nirvana, though? Do you think that should be the case?
Yeah, I think the debt ceiling is interesting. So the gentleman who spoke before was talking about the VIX going lower. I think he's 100% right. But the debt ceiling, there's no risk premium embedded in the market for it right now, but you see it in equity markets. But you do see it in
RSI
T-bills,
divergence
you
on
see
the
it in
high
other
side
places. It just doesn't seem to be reflected in equity risk pricing. I don't necessarily think stocks should be selling off because of the debt ceiling until we get closer, but you'd expect some sort of like bump in the volatility curve. You'd expect some sort of premium for this specific event because we know the
inverted hammer is also
2nd,
bearish.
So, or around there, maybe June 4th, whatever. It's early June, so we know the time span, but there's no premium. And it's like, to me, I 100% agree VIX could be much lower this summer. You have 3 holidays coming up: Memorial Day, Juneteenth, and 4th of July. So VIX down the road could be much lower. But with this one event that hasn't been resolved, the meetings yesterday went nowhere, and it seems like they'll just push it to the last minute. I mean, I personally think they'll punt it to September because that's the path of least resistance. But it's not going to be resolved in the next few weeks, and it'll get more and more heated as we get there. So
guess that is a bank holiday now.
Implied volatility on the front end
Market,
of the curve
I think,
is so
closed.
low. And this chart is just
yeah, that's that holiday they came up with a couple years ago to close the market that day.
Blew up in blue. So longer term,
Remember,
volatility is high.
GME super stonkers.
Uncertainty is still fairly high out there. But short term, yeah, I mean,
You know,
it's
closing
actually
on
much
that
lower
day.
than it was before you had what, 3 regional
They
banks
did it kind of like last minute.
3 regional banks fail.
Just prevent the GME squeeze.
Almost touched new lows. Like, we still wouldn't be touching regional banks. Like, last time we talked, we're saying if you want to play in that space, I would say you can sell KRE calls to buy XLF calls. I still think that's an okay way to play it.
Okay.
But overall, like, the space looks terrible.
What about when we look at the Russell versus the NASDAQ? I mean, kind of an extension of the KRE conversation for regional banks, because we talked about this morning the way there's this spectrum of quality in the index technicals. NASDAQ obviously top ranking, breaking out, you know, threatening last summer's highs. S&P trying to get through this year's highs. Then you drop down to the Russell, which is near the lows. But at least the Russell is better than the regional banks, which just put in new lows last week. So even the Russell's kind of managed to separate out a little bit from the banks. What about when you look as a trader at the volatility? Is there a big difference?
Yeah, I mean, IWM volatility is higher, as it should be, but this year, IWM underperformance relative to Qs is the most extreme since the 2 ETFs launched outside of 2020. So outside of COVID, you're seeing the biggest outperformance of Qs relative to IWM. And honestly, I think it makes sense. If you think about what happened the last week, you know, you mentioned the Google conference today where they're issuing more product. Apple issued debt on Monday, oversubscribed. Last week, Meta issues debt, oversubscribed. Do you think XYZ small cap can issue debt oversubscribed in this market? There's no funding for them. So I think like this probably continues. You probably just want to stay long, growthy tech Qs. And then with like a small cap, I think the biggest risk is a short squeeze. So you can always buy calls just to protect against a short squeeze. Because I was thinking the next month, let's say you get the debt ceiling out of the way. You also have a lot of retail earnings coming up. I think 65% of the XRT reports over the next month. And to me, the pain trade would be XRT beats. Like, so when I say XRT, I mean the retail ETF. So these stocks within the XRT actually start beating earnings. And because they know they're crowded shorts.
Did you say small cap short squeeze?
Perhaps that's an area to look at. Like a short squeeze would be retail names. We saw like a name like Upstart yesterday. A lot of retail names are that would be the place within WM like names where I take a shot on the upside would be names that have some sort of catalyst that could force people to cover shorts.
I will say that you know, when you're looking at some of these specific trades, whether
going for an XRT short squeeze
potentially on earnings, kind of the
I mean, we're starting to see it. Hey, I think he's right. Carvana, Upstart.
Qs and IWM, pretty amazing, by the way, as you mentioned.
Groupon's up.
Trade-off and volatility there at a record. In favor of the Qs being pretty calm. What does stand out to me is that you're not telling us to go and buy VIX, calls and bet against the market, because there's been moments where you have warned us on that kind of macro level risk prior. That doesn't seem like where your mind is at right now, Dan.
I think if you want to hedge, you can buy like a June VIX call, and that would be the tail scenario of the debt ceiling being a disaster. There's also a Fed meeting June 14th. So
still moving up there.
That could keep implied volatility up. But if we get through the debt ceiling and the Fed meeting is pause, we're going to see the data.
Price actions today on the 5 minutes. Crazy.
Agree. You could see a much lower VIX. Like I was looking today, the VIX July futures 23. The S&P's realizing 10 the last month. I mean, it's just we're not moving enough to make it worth owning optionality. And with all these holidays coming up, and with the S&P not moving a ton, the risk to vol lower is debt ceiling getting punted. But until then, I'd expect implied volatility to stay firm through June until the debt ceiling is punted. And then once that happens, you get this sort of cathartic relief. But, I'd expect to see some premium as we get closer to, because think about this, if you manage money and the worst case scenario, the U.S. defaults on a debt payment, and you're not hedged for that, that's an absolute disaster. So my expectation is June S&P options will get more expensive. Implied volatility will increase through June until the debt ceiling is punted, because you just can't be unhedged for that.
Right. Okay, fair enough. Well, in 2011, when it came within 2 days, we saw VIX go to 40-ish. So I was just looking at it yesterday. Hey, Danny, real fast. Gold, where does that fit in? If the only risk
up 0.5%,
they fumble the debt
gold
ceiling
just
situation, does
straight
that mean
move
gold
down
is going to lose
0.5%,
its
move
momentum
up
here?
0.5%.
I think you still want to
1% swing in the last couple hours.
Longer term.
It's noon.
With the Fed now no longer hiking and going on pause, this just starts as gold open interest, and blue, purple is like where brown, whatever is put open interest. So people are there. People are long gold. Perhaps you can get a little pullback. If you're long GLD, you could write some calls near term just to collect some premium. But longer term, like
there's volume coming in.
The technicals look great. It looks like it's about to break out to new highs. We would stay in it, but yeah, I think it's fine to. I mean, calls are bid because people are buying so many. You can overwrite a little bit, collect some yield, and then wait for the next leg up. And that would probably be when you see the Fed.
I think you take a short down here, Archer.
Down, Fed start looking to cut.
Got it. All right. Thanks for the walkthrough, Danny. Appreciate it. We hit a lot there. So
guess you could have rode through it.
Thank you.
BTI. Did you see that pop on SPY?
Encouraged head of options at Piper Sandler. All right,
let's
get into some tech when we come back. The CFO of Digital
it's nearing
Ocean
a top here.
joins us to dive into the latest report. The share's down a little bit here today.
Dang, this long would have been so epic.
Up on the year, making a comeback after sliding in 2022. We'll be right back.
Got about 35 minutes to close. Earlier, it was announced the federal prosecutors are looking into Icon Enterprises following Hindenburg's report. Raging Bully putting 30K on Disney? Not even playing the options. $110. Have liked your calls. Made profits with NVIDIA puts? I don't believe you. Raging Bull, do you have screenshots? I want to see this play. I don't know if you're on chat. Barbecue, maybe double bottoming here. Have a consistent support level. Tempted to pick something up here. Is tempting. Has to be patient. What are you talking about, Cameron? So E-Trade showing 1867 on barbecue. There it goes. Gotta speak it into existence.
The slippage, it seemed like, compared to some of the like 35-40% levels a year ago, but is that kind of a natural trajectory post-COVID?
Yeah, I don't know if it's a natural trajectory, but you're certainly seeing a slowdown across the market. You know, you're seeing that from some of the hyperscalers. You know, the customers of our customers are spending less, so our customers are not growing as quickly. And the nice thing about the DigitalOcean model being a consumption-based business is customers are able to dial back capacity when they don't need it. And I think that's what you're seeing in our numbers. But we're really happy with the performance that we had in the first quarter. We exceeded our guide on EBITDA and free cash flow margins. So it was a pretty strong quarter despite the kind of slowdown in the growth.
Jeez. The reason why I kind of tie things to the COVID era still is there was such a rush of demand and a
hold till
need
Friday?
for a lot of cloud technology. Your guys' stock
SPY
is
is
trading
squeezing here.
$133 and the
Barbecue
fall of
1880.
2021. Do you feel
I don't
that
want shares there, but
we've kind of settled
patient.
into maybe a more sustainable
Still kind of see head and shoulders
right
here.
now?
Active's now bearish. Price action is holding supports, but
like
those indicators I can't ignore for now.
That that happened during COVID. I think there was a lot of exuberance around growth. People were spending in a zero interest environment and
squeezing.
not super worried about
1350 up 0.60%.
And you get to
my long series should have held.
People start to tighten the belt. They start to focus more on free cash flow, and they look at their spend and they look for
another
spend that's not
double top on
necessary,
414,
or maybe they got a little bit ahead of themselves and didn't architect it correctly. So I definitely think that we're in a more resilient kind of structure in the economy.
Look at this intraday
standpoint.
move.
It still feels like there's headwinds that we're going to face over the course of this year as some of that optimization continues. But we feel pretty good about the steadiness of our business over the course of that downturn.
The target audience for DigitalOcean's products, the way I kind of think about it is cloud tools and developing tools for that can make things easier for people that may not necessarily
big earnings after hours or
have a huge
nothing
programming
really?
team, but
All the
they
big
need
ones
to
are
get,
over, right?
the business moving off the ground and growing. I think about small to medium-sized businesses. How much of your client base is that
You're
right
not getting
now?
much push from it at all.
Well, it's interesting because when the company was founded, 10 years
Got a
ago,
little
it was
resistance
very
here from earlier
focused on
today.
developers, right? Individuals,
Barbecue
hobbyists,
back
people that
green.
come on and test and experiment. And we have a
$18.99.
huge base of those customers today, like
Drops at
470,000 of them.
$19.33.
But the real growth in our business is driven by people who, when they come onto our platform, they test, they learn, but then they see traction in their business. And we call these customers that take off and begin to scale. We call them builders and scalers that spend more than $50 a month.
$18.80 on barbecue.
And that's 86% of our revenue.
Gotta find another funny meme for you guys.
24% of the customer base. They grow faster, they churn less, they stay longer on our platform. That's really where the kind of the growth engine is for DigitalOcean, despite the fact that we have this great, very long tenured base of smaller customers. That'll always be kind of the fertile ground from which we grow these larger customers. But we are seeing more of, I'd say, an SMB customer base now, where they're customers with legitimate, growing businesses and applications, and as their businesses grow, so does DigitalOcean.
Do you see any risk to the product and the service?
I think overnight exposure makes sense. I should have bought some here actually.
From
undecided if I want it overnight.
Just plug in a command for some AI to give them the code they need. Is that something you're thinking about, or has that been an overstated, disruptive technology conversation?
Maybe topping.
So I think the disruptive nature of it is real, and there's certainly going to be industries that get impacted by it. But if you think of cloud infrastructure, I mean, what is AI going to do? It's going to drive more compute. It's going to require more storage. It's going to require that data to be transferred in different places in bandwidth. That's kind of infrastructure as a service. That's what we do. We already have AI companies that are building AI business models on our platform today. That's not new, and we'll continue to invest to make sure that we can provide the infrastructure that's required, to meet the demands of businesses that are building a business model based on AI. But we see it as a tailwind, certainly not a disruptive from a cloud infrastructure standpoint.
Okay. Matt, the other thing I wanted to ask you about is as far as layoffs go in February, you guys did a wave of layoffs. I think it was around 10% of the workforce or so.
At the resistance.
Is that enough for now, or where do you see the workforce and the labor side of your margins coming into play? Do you need to keep trimming down, or where do you feel is appropriate?
Well, last year when we saw at the tail end of the year, we started to see the kind of elevated optimization and the growth rates slowing down. We made a business decision to get to our target long-term free cash flow margins, which are around 30%. And we made some decisions around the level of investment, the location of our employee base, et cetera, to get to that cost structure sooner. We accelerated that into this year. And we should exit this year at a 30% free cash flow margin, which is our target long term, and that we think that's a sustainable level. And we're very committed to maintaining that. And as we see growth, we'll have more opportunity to invest in the business. We'll generate more cash. We'll be able to invest that back into the team and into R&D, et cetera. But right now, we're able to make investments to grow the business in terms of expanding our data center capacity,
still
building
going.
new features and functions for our customers. We have room for M&A. We have the ability to invest to grow, but we're committed to getting to free cash flow margins that we think are appropriate and staying there. And we think it's a tremendous shareholder value creation story, particularly when you couple that with the share buybacks that we've been doing.
Okay. Appreciate the rundown here, the financials. Matt, looking forward to staying in touch.
Great. Thank you.
Absolutely. Matt Steinfort is Chief Financial Officer at DigitalOcean, DOCN. Down on the day, up on the year. Let's talk some options when we come back. Unsurprisingly, all bullish. Tom's got 3 trades. Amazon, JD, Disney. Don't forget, we got Disney earnings tonight.
Maybe some consolidation. Yes. Consolidation, more ups. Let's see. Good double top up here. Looking like it's just repeating. Yeah, new high there. Dude, that candle's crazy.
While now, and now you're seeing big cap tech up 1.3% on the NASDAQ 100. A lot of optimism that, hey, a done deal or something on the debt ceiling resolved is going to help the economy and the markets. I'm not sure about that, but it seems like there's optimism after that lower than expected CPI print, which is still, way too high for the Fed's liking at this point. So
sure.
Those rate cuts that a lot of people are expecting by the end of the year, something better break if they want that.
But here's the thing, is that the odds of them are actually going up today. So it's pretty nuts how confident, I guess, folks are that inflation is going to naturally subside.
Yep.
Okay, but let's not ruin a good party here.
Yeah.
Alphabet ripping.
Yeah.
You got to trade in Amazon, which is also up. Is that connected at all to the AI stuff? Or how come Amazon gets to ride the coattails today, but Apple, I don't know, Apple's up 1%, I guess, but Amazon's up 4%.
Yeah, and on no real news. This is the 7th day in a row that it's rallied, Oliver. It's pretty astonishing. Stock's up 30% so far this year. I think it's more based on cloud. Is it kind of protected from interest rate risk? And you've got a lower dollar today, too, and that's also helping some of the major tech names in that space. The longest winning streak since July 21st of 2022 for Amazon. So 7-day stretch here. They're offering for you to pick up your own packages, giving you $10 at this point. They came out with that news yesterday at Kohl's and Whole Foods. So maybe that has something to do with it. But there's no real news on Amazon, but that doesn't stop people from piling into calls when they see one of these names up pretty significantly. We saw some May 19th monthly, so these expire in 9 days. Over 20,000 of those were bought up. Average debit of about $1.75 on those. So that break even of $111.75 over the next week and a half is only about 1% above the current share price in there. Call volume's double normal daily average volume that we've seen over the last week. So yeah, a lot of optimism in here. And we talked about this, Oliver, before you started MOC, that Google Alphabet that news story, the I/O event that was coming out. They announced 2 new phones and a bunch of additions and improvements to their AI product Bard. That's got the the momentum continuing for the Nasdaq, which has been leading for the entire day.
Okay, all right. Big day here for big tech, just roaring back. Amazing, really. How about what's going on with Disney? Because shares were down to $100 earlier.
Yeah.
Earnings coming out in less than an hour.
Yeah, option market's pricing about a 5.5% move either way in this name. It continues to consolidate near this $100 level. Remember, 2 years ago, Oliver, you can look at a 1-year chart. It's down, right? Just, probably 5-6% from year ago levels. Over a 2-year chart, this stock was trading over $180 2 years ago in May. So it has been under pressure. A lot of the focus will be on the earnings event, will be on Disney Plus subscribers. We talked to Like Folio on Fast Market earlier today, and their data is just deteriorating on the streaming side of their business. Now, the parks are picking up as far as people making trips to the parks. That part of their business is really paying dividends right now. It's doing really well. People are traveling. It's all about experiences.
It's paying for the streaming bleed.
Yeah, and that's the thing. Which narrative do investors go after this report? Because I think the expectations are pretty low for the streaming side of the business, although they're not producing more content. So he's the new CEO. The old CEO, Bob Iger, has been working on cutting expenses, cutting 7,000 workers. That's 3% of their workforce. So that being said, maybe with this downbeat kind of consolidation we're seeing, a breakout to the upside might be warranted, and we saw some unusual option activity basing itself that way. We saw buyer of 5,000 May 19th, the monthlies, the 105 strike calls, bought up for just under $1.80. So that break even 106.79 to the upside over the next 9 days. That's about 5.5% above the current share price, and that's about what the option market's pricing in going into these results, a plus or minus 5.5% move. So yeah, somebody taking an upside shot here in Disney.
Okay, at the end of the day, over the last 52 weeks, Disney is only down 5%. So it's kind of gone nowhere. It's lagging the market, of course, which is frustrating if you're a Disney shareholder. But it's better than, say, Paramount, 42% lower, pure streaming play. It's behind Netflix, up 90%, which is smooth sailing basically at this point. But you compare it to some of the reopened trades, which are up too, and it's kind of like Disney spinning their wheels, where maybe it's all kind of adding up to nothing, essentially, because you're down 5%, and then all the other related plays, you're either going to be down even more, or you're going to be up a ton.
Right.
I don't know if that's a win for Disney, but at least it allows them, I guess, to take the money from the parks, plug it into streaming, hope streaming pays off so they can eventually trade like Netflix in a couple of years.
I think that's one of the things that the CEO is going to have to kind of wade through at this point on the earnings conference call, is the fact that, they're losing growth there in the streaming business. We've actually seen a lot of quits lately on some of their sites, whether it's ESPN Plus, Hulu, Disney Plus. So that's going to be a concern. But if they start saying they're cutting expenses, they come out with a decent report and they guide, I think guidance is going to be really key for this company, because we saw the guidance out of Airbnb and what it did to that stock, which is, you know, right in the thick of travel industry. Well, a lot of their parks and experiences and cruises are in that travel area too. Guidance will be key, I think, for this one.
Okay. All right. Nice setup for us to talk some Paramount. Thanks, Tom, for the trades. Okay, appreciate it. All right, talk a little VIX there. So let's keep it going. We got Paramount to get into. As I kind of gave it away a little bit there, but part of it is that they're going to be ditching MTV News. Okay, but I think that means that we still get Beavis and Butthead. Jenny's going to give us the rundown here in a sec.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then watch list. When the default list of
Barbecue bounced back up to VWAP. 1948, coming up into 15 minutes to close. 1994, we're gonna get a end of day rally. We'll see 1985. A little delayed here. We're up here in 1985. 1958. 1995. Let's see, just wick there. 1921. We will just front runs it. It knows where it's gonna go, so it doesn't move. It literally just missed all that up to 1998. Oh. $19.80. We'll see. The double bottom today might have been a good buy. See, come tomorrow. See, that was the bottom it made. It made that today, so the same bottom from yesterday.
Fallen out of favor along with so many other media outlets.
Thank you guys for your support today, hanging out with me,
news as well as Vice Media,
trading, watching the news.
So
your likes got 47 of them.
Cycle of what is very popular.
If you haven't subscribed,
on trend.
Do it.
MTV in itself is sort
Chandler,
of fallen out of favor
subscribe today. I appreciate it, man.
We've seen in cable
1930, right at VWAP on E-Trade.
Very
yeah,
cool
showing the same thing here.
The latest pop culture news.
GenI,
But we're also
right
seeing
day.
some news that
GenI appearance.
CBS actually will close out the 2022-2023 season as America's most watched network in prime time for the 15th consecutive season. This is the tying its oldest record, which was back from 1955 to 1970, when it also saw a 15-year run as America's mostly watched network. What impressed
48
me most
likes.
about
Thanks,
this
guys.
is it's averaging right now about 6 million viewers. This is about 500, or this is so significantly ahead of what we're seeing.
I'm hoping for a flush in the last 10 minutes. Is that crazy?
This is nowhere close. That's NBC, and it's also beating out then Fox stocks
As rare as
well
that is.
ABC. So that's good news, at least
1979 on barbecue. 1935. Just flashing up
8% when
back
they
here
did
and forth,
report
back and
some
forth.
pretty weak expectations now going forward, and also did slash their dividend. Their free cash flow burn actually was 3 times consensus and 2 times the analyst forecast. That's concerning. I think the fact that this company is not really seeing significant profitability even in its streaming business, which was actually the brightest spot of the entire report, but there is the ongoing concern about the cash this company is able to raise now going forward. This is something we've discussed now pretty frequently throughout this earnings season. The companies that look fundamentally strong versus those that have a major cash burn problem. Now, I do think the fact that we're seeing this closure of MTV News is typically seen more as a positive. The fact that they will be focused on right now trimming some of those costs, as well as additional divestitures and partnerships going forward. We are seeing shares lower in reaction, and it's difficult, I'd say, to look at this stock on a year-to-date basis. It's only down 6% this year. Zoom out, look on a 12-month basis, it's down 42% as a pure play streamer. That does not look so good, especially you were just talking about Disney, uncomparable to Disney. I know Disney is not a pure play streamer yet, but I think that the 12-month picture paints more of a better depiction of the pain we've seen for Paramount Plus in the longer term.
Yeah, for sure. Been pretty brutal sell-off here, but they've still got a host of other programs. I guess didn't even realize MTV News is still around, frankly. But okay, thanks, Jenny. Great report. She's really good. All right, Dan Deming's joining us. Dan Deming's got to be a Beavis and Butthead fan for sure, right, Dan?
Oh, heck yes, man. Absolutely.
Okay. We got
and it's a sad day, Oliver, but yeah, interesting side note here. So the original MTV music video killed radio
it's a good point, Rick.
By Buggles, who is Trevor Horn.
Probably more likely
actually
it won't rip on a Thursday or Friday.
This month, and I will be there.
But we have seen it.
There it is. I thought you were going to say it in the background of the video somewhere.
Exactly.
If it does, we're looking at another big Monday.
Passing of the torch.
Yeah, love
we
it.
had.
Okay, Dan, let's
when it was the 8th.
let's we can joke
This was
a
that
little
Friday
bit.
ripped into close and then gap up,
right now.
rip on Monday.
It's no time to be serious, right? Nasdaq's ripping. Alphabet's breaking out to highs we've seen in 8-9 months.
Why doesn't want to let go? Coming into 10-minute.
Just throw out the
Fugazi.
AI word, right? There you go. And your stock goes up. That's an interesting.
If we hold the
dynamic, and we've seen
support
it play out in
tomorrow,
other areas before, so that will burn itself out. I'm assuming here in the next couple of months. But
probably go
overall,
long for a Friday
going
rip.
back to the market in general,
I
think the seeds are there for this thing to really significantly challenge 4,200 in the S&P. We're seeing the Nasdaq breaking out once again today, and if you look at the S&P, it caught its breath here later this afternoon and is now pushing towards the highs. And from a technical standpoint,
on barbecue.
you can make a pretty strong case that there's a double bottom here between the April 26th low and now the May 4th low. So may the 4th be with you. S&P 500.
May the 4th be with you, this guy.
4,200, and it feels to me like that's the path of least resistance now because of the bearishness out. That's in general in the markets right now.
Okay. The potential here for us to get to the year-to-date high kind of looks like it's building.
Buying puts and buying calls.
Do you think it's
I was short in the futures. I mean, I got a little fortunate. I was playing the pre-market. So CPI came out, I went long. Closed it out before open. And
today,
went short somewhere in here.
Stocks are coming back too, though. It's like
close that
really
out
just,
here.
Carefree and moving past inflation as a threat, it seems like.
Yeah, well,
I wanted to go. I went long here actually for that move.
Inflation,
I wanted to go short here, but I didn't.
In line with expectations,
I short down here
enough right
and closed
now,
here,
but,
then short close,
either some
and then
reinforcement
lost some here through the chop,
a shift in that
and then
theme
missed this
with the
whole up
PPI
move because
follow-up. So I think that's
I'd
going
punched
to be
my punch card as many times as I could through here. I ran out of punches.
Expectations, then I think
SPY's coming down around 10 minutes of
very heavily
Fugazi.
in the cards. But I still think inflation is the
green on my
driver,
contracts
because that's
now.
what the Fed's watching. And I think that
Nice to see.
it's going to control the narrative. And as long as inflation, even though
Nice
we're seeing
day shifts.
even and quite a dispersion within the inflation data points.
big range today on SPY, just crazy.
Coming down, maybe not at the levels or the speed that many had hoped for, but it is still ticking lower. And as long as
the
that
markets
continues,
really are.
then I think
They really
that,
favor day
we'll
trading.
see
They have for a while.
the
All this
markets
chop.
benefit from that
There's
trend.
no direction, no momentum. Even here, like you get the direction for maybe a month or two, but in that direction, you have huge swings intraday where it's like,
there you go. Video killed the radio
it's like
star.
chop on its way up. Like really only what 3 or 4 days of
voice,
kind of a clean move. Then the rest of it's just chop getting up there, chop getting.
Always fun chat. When we come back, let's get serious.
So not clean at all.
This market is ripping right now. Our bears toast.
There we go. Market drop in.
Green after they were almost all
See a VWAP move.
It was just an hour ago. The Nasdaq was
not usual to get a 10-minute Fugazi to the downside.
Getting slammed and everything just spraying.
Okay, I'm gonna close these at VWAP. Might not want to mess with the 10-minute, the 5-minute move. Could very well just shoot back up. I'm gonna put a stop limit. See what happens. Let the dice roll. Looking good though, coming down. Barbecue 1950, 1933 up 2.8%. More predictable, this is volatile. Not more predictable, more tradable. But the thing is, you can't just hold, like, it doesn't really favor swing trading. It favors like day trading because it's choppy. If it's going up, your trend only might last a day or two. And yeah. So like the breakouts of ranges, those are the times it actually makes its move, like here. And then what I think here is going to come down here. But if you're waiting for the break of the low, look, our low is now 403. To actually get a break of this, it's a huge range from 416 to 403. Like if you're waiting for the break of that, yeah, great. But it might just come to here and then chop back up to there and then slowly come down here, just like it's done, you know, just on the daily time frame at least. Come on, SPY, let it out. Might hold these futures overnight. Messes with my margin, but yeah, I probably shouldn't. Could close and then just reopen after 6. Or just open them before bed. Where the market's at. Okay, we have PPI in the morning, I think. Yeah, PPI at 8:30, so no reason to hold through that. Close, close. What does the last few minutes give us? Yeah. Yeah, no, that's smart. Smart, Rick. Don't put in more. You know, just trade with what you got. If you do put more in the market, I would just invest it, not trade it. You know, or do like much safer strategy like Theta Gang stuff. Run that Theta farm. Or just slowly invest it over time.
It's settling, and I think when you look at some of the underlying trends and metrics like core CPI from this morning, you know, some of it's troubling in the sense that you're still at a 5.1% 3-month annualized rate on core CPI.
That's the thing. Right now, there's not much good to invest in. I mean,
in anyone's world, that would
like
be
the market's
a good statistic. Certainly not the
have
Fed's
a
world.
long ways to come down.
You're
There's some stuff that's maybe already bottomed or close to a bottom though.
You know, with used cars being a big driver of that, and then sort of on the other side of the trade, or the other side of the
here. I might get stopped out.
list, hotels
Yeah, I
and
might get
lodging
stopped out, I bet.
contributing significantly to the downside.
We'll see.
That's been the case for the past few months now. But I think
not a whole. I mean, look at like dividend
look at
stocks
some
and
of
like
the core drivers
value
of
stocks that
inflation, you're probably
aren't
not
at
getting
crazy
the trend,
levels,
anywhere
like
near close to
UWMC.
2% for sure. So
Especially
yeah,
if we
I
can
think
make
the
it back
peak
down
is
here.
behind us, and we don't have to worry about the pressure like we had last year. But I also think that you have to start paying attention to specific metrics, which has always been the case, but especially now, specific metrics that the Fed is tracking.
Barbecue,
and I just don't think that
1840.
the math works enough where you get to 2% that easily.
Kind of reminds me of the conversation we had after the jobs report, where your point was that, look, it was okay. There were some bright spots in there, but it
Right,
wasn't
5
some
minutes of
miraculous reversal in the overall softening of the employment situation. Is it possible that maybe we're just kind of getting this in-between period that
high yield savings
investors
honestly
are interpreting as a
you
very
get
bullish
5%.
moment where we're seeing inflation cool, we're
that's
going,
not
okay,
bad
that's
until the market
good.
settles down.
And the implication is that the slowdown's coming, but it's not obvious yet, so we don't see that kind of manifest itself?
Yeah, I mean, there's two parts to that, too. The first part being, you tend to see in
trade
certain
just a small
cycles,
amount.
not every single cycle, because, first of all, there's a small number.
But I like
the
selling
sample size
premium
for
life
Fed
data
rate
farming.
hiking cycles is few when you go back
It's
in
a
history. And in
cash
all
group
of those,
puts
you've
as a
had
bullish
different
play,
instances
but
of when stocks have rallied and
I've
why
been
they've rallied.
I've been able to kind of do it.
Approached or gotten to a pause.
It's more
Remains to be
difficult. You
seen
have to
as, to whether
take
we're
profits
that
at
moment
50%
not,
or
but if we're at the pause moment,
80%, not
the
not hold them.
history suggests that you can go either direction. So I don't think you
And
should
you
look
have
at
to be
it
a
as
little
an
more
average. I
picky
think you
about
should
what you're
think about it
picking
in the
and-
context of where we are in the cycle.
But you can still find some good
yeah, I mean,
cash
right
group
now you're
puts.
still at a point where the Fed's bias is to keep rates higher for longer.
And then if it's something you
But
like,
within
which you
that,
should be doing that on
even if
anyways,
inflation's rolling over, even if
you're willing to hold it.
getting rates,
Fine if it goes
like
down and you
treasury
get,
rates moving down,
you
I
get
think
the
at
money.
the margin that helps
You can
companies
take the
sort
shares
of
and
up
cover
the cap
calls or
spectrum, kind of in the
roll
growth
down the cash
area
group
of the
puts.
market, which is probably a reason that you're seeing something like
It's
the
a
NASDAQ
good
rally
stock.
today.
It'll
Whether
have
that lasts in
bounces.
perpetuity, I think it's a bit of a tough thing to decipher now,
Where you'll
just
be able to get
because
out
if you
if
look
you
at the
want,
names that have
or
been
take the
leading
shares.
us, sort of the areas of the market that have been leading this year, it's very emblematic of what you saw in 2020, sort of during that really sharp drawdown for the market. Everybody sort of piled in the rest of that
market is all it's
year
gonna
to
do.
names that were basically
I
carrying
close out of
the
my futures
economy,
here. I mean,
and keeping us afloat at the time, given we were shut down. It's no longer the case this time. So I have a little bit more of a concern with the
an
lack
interesting
of
close.
participation as you move down the cap spectrum and as you move into sort of the deeper cyclicals. If those
Yeah,
don't get
yeah. I
good, if
opened
they
up.
don't find their feet,
I opened up some
at the
IP
expense of
cash
mega
group
cap
puts today.
tech or mega cap, anything
June 16th.
growth, sort of leading us.
Gave myself
still,
some room. I
I
got
think that's
25.
an important disconnect,
25 straight.
and more of a riskier disconnect, I would think, for the rest of the year.
But this little inverted cup and handle, it might be coming lower.
If it's a counterpoint
The
at all in
daily
your
too looks
mind.
like just
We
a
got
kind of a
regional
bear
banks
flag.
breaking down to new lows, but the
So,
Russell as an
I think 25 is a good price on it though. That puts you back to
its year lows. Is that maybe a
2020
sign
dip.
here that we're
COVID
able to kind of
lows.
separate some of the weakest stuff out? Is that encouraging at all?
It's
Or
encouraging from
2017.
if broader small caps and that universe can hold on.
But I'm
you
not
also,
thinking
I
it's
mean,
gonna
just look at a
probably
year-to-date chart of the
stay that
Russell
low
versus the S&P
if it
500.
gets down
I
there.
mean, the Russell is kind of hovering still near its low. It's basically flat for the year. And I think, from a banking aspect, you can go back to every major market low.
GME holding up pretty good.
7 decades of market data. Every
Barbecue
single
with a
instance,
little
when you've gotten
bounce,
past the 6-month
1915.
mark off of a low, banks have rallied.
1%
We're, more
positive
than
on the
6
day.
months off of the October low,
2.6,
and banks are still
1930.
down. So I don't want to use that just as
1
the
minute
one
left.
data point to say the rally's not to be trusted. But I do think you need participation from a key part of the economy that really is, central to the
jumping out of
banking
these
crisis itself,
futures.
and then, sort of the lending channels and the confidence channels thereafter.
Went from negative to positive on that
You
lead. I'm happy.
describe that the situation right now has some irony, the Fed's policy-making path. I'm curious what you mean by that, and I want to provide some context here for
25,
those that haven't
519,
gotten the fresh update.
167. Yeah,
Today,
I got the Junes.
After the inflation print, there's now an 84% odds of some kind of cut by September, according to Fed Funds futures.
Oh, you're gonna get the bell. Well,
Yeah, I think part of
all right, I muted it. You shouldn't get the bell. Good test for it. Yeah. Down 2% now, 1850. Consolidating. Thing is, the break is going to be it's a huge range, a 15% range.
relying less on the
There you go.
backward-looking
Bell
data,
happened.
but
You guys missed
still
it.
expecting to see an increase in the unemployment rate.
Bell
I
with
think
you scrap the
there's
Bears.
a little bit of a contrast
Nice.
there, but I also think that if you don't get enough tightening in credit this year, which remains to be seen,
June
nobody
16th?
can predict that perfectly. I think any reacceleration in
yeah, the
growth
monthly's
from
on
here in
June is what I got
economic
on
sense, it's going to be
IP.
really interesting to watch as,
It's at
as it
16th,
pertains
yeah.
to any pickup in inflation from
I'll
current
probably
levels.
close it
100% with you. Love that point. I think it's so important.
if it's up
because,
50% or
there
80%,
is,
depending on the chart.
This potential here where we're hoping for a bad outcome to some extent. Stocks are apparently, I ask people why stocks are rallying, they go, oh, well, Our regional bank
Point.
crisis has been
Look at the dip,
contained.
4%.
Okay, but then you also want the cuts too. Like, how can you have
GME
your
ended
cake and
up
eat it too?
2.5.
So, all right, but maybe we get some time here.
Give a little look, see what happened.
That all come to fruition. And
nice bull flag on GME on the hourly.
Chickens come home to roost. Thanks, Kevin Gordon. Appreciate the thoughts here. 10 seconds till the bell. We'll come back and talk some.
Kind of an RSI divergence,
Disney as the
but price action looks pretty good.
We'll get into the numbers as soon as they come out.
Daily, it's looking better than the last 2 days. Those are kind of ugly daily candles.
We'll be right back.
Momentum's up, but it's slow. Not liking its lack of momentum and volume, like I did the other day when it looked starting to look squeezy. IP, yeah, still gonna have this little inverse cup and handle maybe forming. So that's not great. SoFi up 1.5. There's a gap down there that might be getting filled. Oh, I should close. Wayfair. I sold off since the earnings rally. Barbecue down 1.6 on the day. Now I'm thinking we're not going to be repeating this 3-day cycle pump and dump, just because we're on OTC now. And so far the dump after has not been a dump, it's just been consolidating these last 2 days. So good to see. There was an RSI divergence bullish here, which we've seen the move from that. There is a bearish one here. It's very subtle though, from here to here, here, here. But it's very, very subtle. So on the hourly, I mean, still kind of see a head and shoulders here. Still somewhat of a bear flag with the pull and the flag. MACD's bearish, red under the 9. So it looks like it wants to come down and fill this gap. Continues to hold that support though, so price action is king. Keeps bouncing in this range. We're just looking for a break. What's nice is we're getting a more defined range to break. I think this 2015 area is a good catalyst for the upside. If it breaks there, not a catalyst, but a good price level. If it breaks and then comes back down and retests and shows a support, we're gonna be trading in a higher range and maybe break out. To the downside, probably the same thing. Got another line down here, but yeah, if we have it flush and then it bounces and uses that as resistance, then probably move down, maybe just down to like 15 cents. But could very well come down to 14 and fill that gap if it goes that way. The upside, if it breaks that way, really looking for what happens up here if we get a double top or rips past that 23 cents and we keep filling that gap. I think it could happen without a catalyst. This is just kind of cooling off after its 300% run or whatever with zero news. So yeah, slowing down after big runs, slows down for a bit and then continues up or goes down, just like when it drops. Big drops fast. Oftentimes it'll just slow down and consolidate, maybe with a bounce in there, but still consolidating certain level. After 2015 on GME, are you talking? Oh, 2015 on barbecue. Next resistance. I mean, not much until really that high, I would say. You've got a little spot here in the 2150 range, but that's not hasn't been traded much in there, so I would say, yeah, that 23, I mean, that's a more major one. Look at the volume here, see what it's showing. Yeah, you can see all this volume. Since we've been trading in here for 2 days, it's just building up all this volume in this range. So you can see how there's like a gap of volume. Even up to here to that resistance. If we break that, that's why that gap fill is probably gonna happen pretty quick. because it's just not much volume. It's just a vacuum. And then same with the downside. See how there's not much below this here. Not much volume. So starts breaking that level, probably move down to 15 and potentially even that 14.10 or so for that gap fill. So we kind of just ripped up and started trading in between these two spots. Two gaps to fill now, and support and resistance quite a bit above us and quite a bit below us. But looks good. Thanks for watching, guys. Thanks for the support today. Ace, Fire Marshal Bill, thank you for the gifted memberships. If you guys did get a gifted membership, jump on our Discord. Link for that is pinned. Send me a DM on there and I'll give you the happy crew role. You can come join me on voice chat if you'd like. And yeah, thanks for the subs and the likes. We got 51 likes today. Well done. Well done, guys. I appreciate it. Thanks, Rick, Morty. Thanks, Christine. Thank you, Granite and Jay from the Bay. Thanks for hanging out, guys. Thanks for the support. Thanks, Cameron. All right, I'm not gonna have a video today, so this is what you got. We'll see you on Discord. See you on Twitter at HappyMoneyYT. Sub up, like up, comment down. Happy Money sticks around. Thanks, Bourbon. Thanks, Dennis. Have a good rest of your evening, guys. We'll see you this evening on Discord. Peace out.